over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and this is the first time that I've heard an altercation or a firing, exchange of firing being called a love tap. Did you guys know what that term is? I had to look it up.
Yeah, no, I have no idea.
I just looked it up as soon as you mentioned about it some time ago.
Yeah,
I'm waiting for with bated breath.
With bated breath. Donald Trump has described to a reporter in ABC that the ceasefire is pretty much on, and the exchange of firing in the Strait of Hormuz between the Iranian and the US side is pretty much a love tap. And what it's supposed to be is a sort of a playful nudge. So,
wow. Except they're using ballistic missiles.
Yeah, but except that tiny part.
But if you have to look at it in military and political context, what it says is it's a limited non-escalatory military strike, sometimes described as a love tap, to imply the action was minor rather than a full attack.
Yeah. So maybe it's,
so he's got his definition now.
He's got his definition. Maybe it's sort of brushing your shoulder and saying that, hey,
I'm still here.
I'm still here. Maybe that's what's happening, which is why you're not seeing such a violently negative reaction to the fact that in the middle of this ceasefire, there was exchange of fire in the Strait of Hormuz, both sides, of course, saying it wasn't them. But that's the biggest thing that has pushed global moves. The US markets ended with slight losses as US-Iran exchange fire in the Strait of Hormuz. Both sides, of course, are blaming each other for the firing first, saying they started it. And this is what Trump actually said on it. And if you can just maybe play that soundbite out of what Trump says when he talks about what's happening with Iran. The Iranian side, of course, claiming that it was the US military or the US Navy that started off first. Listen in to Trump.
We're negotiating with the Iranians. We have, you probably heard, we took our 3 destroyers and we rammed them through some pretty big stuff today, and we knocked the hell out of, well, the destroyers weren't hurt in any way. The people weren't hurt, but they were firing at us, and we were firing back at them.
Is the ceasefire with Iran still on?
Yeah, it is. It's they trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big blow coming out of Iran. The talks are going very well, but they have to understand, if it doesn't get signed, they're going to have a lot of pain.
We trifled. It was a trifle. Okay, that's a new one as well. Let's look at how indices closed off in the US, and then of course we'll pull up futures for you. So you had down ticks, about 300 points down on the Dow. Nasdaq was pretty much flat. Futures also not moving too much after all of this, but in the green mildly, because that concern that this is a full-blown end of ceasefire is now easing. Bond yields rose with fears of the US-Iran escalation. All eyes are also on the April non-farm payroll data, and weekly jobless claims came in at 200,000, slightly below expectations. The 10-year was at 4.39%. Brent is staying in range as clarity is awaited on what's happening with those talks. And Trump, of course, describing firing in Hormuz as a love tap in a conversation he had with an ABC reporter. Brent right now a little under 102, so still in those tolerable ranges, I would say, relatively speaking. Let's pull up Asian markets for you this morning and take a look there. Mild downtick. You're also seeing the India implied showing about 100-point downtick at close. Remember, Indian markets losing most of their steam as we got into closing yesterday. John Stoltzfus, Managing Director, Chief Investment Strategist at Oppenheimer, joining us this morning. John, very good morning to you from where we are. Do you think that crude continues to be the lead indicator of what's really happening, and the rest of the world is beginning to learn how to live with this continuing altercation?
Good morning. Terrific to be here with you today on your show. Thanks for inviting me. I've got to say, we think one of the main things that the world has been awakened to once again is the fact that fossil fuel is important as a lubricant for global growth. And if anything, it points to the fact that we will be dependent on it for longer. It remains very much, I would say, a thermometer to take the temperature of how the negotiations are going, what is developing on the Strait of Hormuz as those negotiations take place. All of which, what we would say is we think both sides have enough at stake here right now that we do believe that a negotiation will actually be fairly successful. It may not come as soon as we'd all like to see, but also we think it will likely happen much sooner than skeptics and bears would expect. Because basically what we've seen, where I think this is the 10th week now of hostilities between the U.S. and Iran and Israel, I think that at this point we're getting ready to see some kind of negotiation that really has an ability to hold for at least a period of time where everybody can catch their breath and determine where we're headed.
Interesting, John. Morning from where I'm at, and good evening to you. My name is Alex. I just want to understand from you, from the perspective of asset allocation and your anticipation of how flows could move. You have bond yields at the long end that have been going up. And if there is the expectation that this conflict will resolve sooner rather than later, and people are penciling in perhaps June as something that would be believable, then is there an opportunity to play duration if things go back to normal? And do you anticipate that there will be a flow out of risk assets into bonds?
Well, we would have to say right now that as a strategist and a portfolio manager, I am situated in the equity area, while I most certainly also utilize bonds for current income and for diversification. But we think this is really an equity buyer's market right now as a result of the process of innovation that is occurring based out of the U.S. and also that is being experienced around the world, whether it's innovation that is reflected on the battlefield or innovation that is reflected in the lives of the consumer or business. We think the main story here is equities. We would be cautious with duration at this point because the issues related to concerns around inflation are mostly concerned with the fact, how long does it take to get the price of oil to flow back to lower levels when we can see some relief at the pump, so to speak, for both commercial drivers and private drivers of not only automobiles, but trucks, all kinds of vehicles, aircraft, etc. So I would be cautious getting overly aggressive right now with duration at current levels, although I don't think yields are going to rise a heck of a lot more where they are today. I think we've pretty well normalized interest rates right now.
Right. John, good morning. Hiral this side. You know, we're talking about where bond yields could go from here on, but let's look at what's happening in the markets and where people are finding a safe space. You have the US dollar, which has continued to remain a primary safe haven already. Now, do you think that, leaving equities aside, your metal space is in a probable upcycle where you're looking at gold? You're probably looking at copper as well, because a lot of people are terming copper as the new gold. And how does your 2026 commodity strategy then, say, differ from a probable wartime portfolio?
I would say right now, the way we are managing, I very much agree that to us, copper does appear to be the new gold because of its importance related not only to traditionally to construction, the industrial process that's beginning around the world to make do for all the innovation infrastructure that needs to be built, but as well as the use of copper within the technology space related to the actual hardware and the data centers that are being developed. So we would have to think that related to gold, we think most of the move over the course of the last 2 years has been a mix of higher inflation, stickier than expected inflation initially, boosted by higher than expected inflation because of the hostilities that have occurred in the Middle East, okay, and the surge in the price of oil. But what we do believe here is the main thrust of the price of gold over the last 2 years really came from central banks around the world. And the ones we often think of right away are China, Russia, India, and Saudi Arabia. We think a lot of this is related to intermediate to longer term trends on supporting domestic currencies versus the dollar as countries around the world look to compete with the U.S. Related to the U.S. currency as a reserve currency. We don't think it's going to change the status of the dollar as the reserve currency, but it certainly will continue to see the U.S. dollar have to share the roadways, so to speak,
Right.
when it comes to global trade. We think that's why gold has come off its boil. We don't think it's going back at that 5,000, 5,400 kind of level.
That's interesting.
More likely to stick where it is now.
Okay, so gold will stick where it is. John, quick one. Your view in terms of India, and which are the sectors where you think there is some amount of resilience and could be good value buys?
Related to India, we think India is an intermediate to long-term story for the global investor. India, we see as the likely beneficiary of the diversification away from China as the singular road for the supply chain of the world. And we think that countries like India, Mexico, Brazil, and some developed international markets would include Japan, and we think related to another emergent would be Korea, are likely to gain significance moving forward in getting business as the world re-globalizes further rather than the end of globalization. But India is a core holding, we would think. Current weakness in the market, if anything, we would think is likely a good point for intermediate to long-term investors who can deal with the volatility of these points to begin to build positions that will be core holdings going forward.
Absolutely. John, absolute pleasure speaking with you this morning. Thanks so much for taking the time, and wish you a good evening.
Thank you. Same to you now. Bye.
All right, let's talk about what happened in trade yesterday. And you had Indian equities that ended mixed as war uncertainty persists. Foreign institutional investors selling to the extent of 341 crore rupees, not a very big margin. But domestic institutions also not having very large buy figure, only to the extent of 441 odd crore rupees. Auto OEMs ruled the roost on the benchmark, at least, with M&M and Bajaj Auto in terms of contributors leading the Nifty 50 gainers. You had HUL, TCS, Tech Mahindra, Titan that underperformed. By the way, HDFC Life also did particularly well, ended as a top gainer for the Nifty 50. The broader markets continued to outperform the benchmark, and you had the Nifty Mid-Cap Index that gained about 1.1%. It hit a fresh record, believe it or not. You have the Small Cap Index that also gained 1%, and as a result of that, you had the market breadth that was very comfortably tilted in favor of the advances. You had defense and auto as well as energy that were sectoral winners. Of course, the defense in focus for more reasons than one. IT FMCG underperformed on the other end of the spectrum, and PSU banks also cooled just a tad bit after Wednesday's sharp rally. One of the stocks that stood out in trade yesterday was Godrej Industries, and we spoke about it in trade yesterday, gaining as much as 20%, ending at upper circuit on the back of the rebranding as well as a growth promise. They're aiming to hit 5 lakh
crore by 2031 in terms of market cap. I mean, that's a good number for a holding company as well. And the interesting bit over there, Alex, is that the volumes are usually not that high when it comes to holding companies, right? So I don't know in terms of tradability how many people would want to look at it. But yeah, it was a leader yesterday with 20% kind of gains coming in there. But with all of this said and done, you know, it's interesting to see with what's happening with the markets. It has been a constant tug of war over the last 7 to 10 trading sessions, I would say. And for the setup, I've picked up the CLSA note by Lawrence Balanco. Now, what he's come out and said is that the Nifty advance, in spite of we seeing that upside, is hesitating around its 50 DMA. Now, a sustained break above the 50 DMA would actually expose the next layer of resistance at the 200 DMA, which actually comes in at 25,064. And in contrast, if you have to see the broader markets, which is the NSE mid-cap index, that is actually displaying greater relative strength, and it's actually threatening to break out above the upper boundary of its 2024 to date consolidation range. Now, you have the index which was consolidating between 60,925 to 61,393. So a close above this zone would actually confirm a major bullish resolution or momentum, implying an upside objective where it can actually go to levels of 77,687 to 78,000. Now, notably, on a relative basis, if you look at the NSE mid-cap index, that has already broken above its 2024 highs and is trading at all-time highs, and it's actually underscoring the continued leadership versus the large cap benchmarks. So this is an interesting note over here, Tamanna and Alex, because we are seeing this kind of action in the broader markets. A lot of buying interest which is emerging in the small and mid cap space as well as at lower levels. So the question is, from here on, even if your war situation eases, if the markets find strength, is that going to come in the small and mid cap space versus the large cap space? That's going to be the key question from here on.
I would argue that the mid cap and small cap has already outperformed.
Oh, significantly.
So if there is space for an up move, then maybe some of the large caps will see that rotational play. Just one more thing that I wanted to add, by the way, if it got missed in the middle of all of this, and this was important, a US court has actually struck down Trump's 10% tariffs as unlawful. So you recall after the Supreme Court said that all of those tariffs that the Trump administration has set was unlawful, they came back with a 10% base tariff under an old law. Well, that has been struck down as well. This uneasy ceasefire, of course, continues to add worry and is the number one factor, I would say. But market sentiment is cautiously optimistic. The Nifty continues to trade above its short-term and medium-term moving averages. Crucial resistance at 24,400 to 24,500. A decisive move above 24,400 targets 24,600 and 24,800. Key supports, immediate one at 24,200 with a stronger flow at 24,000. The bank index closed at 56,047 after a narrow range-bound session. This indicates a tug-of-war between buyers and sellers near the 56,000 mark. So upside targets, a sustained breakout above 56,500 could trigger a rally towards 57,200 and 58,000. Downside support, the 55,500, 55,600 zone is expected to act as a solid cushion. So those are some of the levels that you should look at. But let me go across to Puneet, who's talking about the top F&O cues to watch today.
Well, thank you for that. It's going to be an interesting session yet again because we want to hopefully end over the 24,300 mark. Which has been a very volatile counter at this point of time. So even the implied open indicates a downtick of almost 100 points, slipping just a tad below that level of 24,300. This week, of course, was one of the key surprises in that sense to regain that level, which happened in one of the last hour of the trading session on Wednesday. So hopefully ending above that level will be a key crucial level that we'll watch out for. Also on the Nifty Bank, as you rightly said, 56,000 continues to be stubborn at this point of time. So historical evidence suggests we've not been able to have a very long-term support here. So 55,500, we continue to slip back to those levels considerably quite a few times. And this time around, compared to what's happened in the last 2 weeks, we'll want to maintain that support. In terms of cash markets, you saw selling yet again, but not till the rigor that we saw last Friday by foreign investors, where they sold almost 8,800 odd crores. So we'll hope that the number will be limited, if any, in today's trading session as well. But the index long continues to be depressed at just 13.75, very similar to what the levels were yesterday, but off the lows of 11.5%. That's how we started this week as well. And the put call ratio continuing to favor the puts at this point of time. Open interest distribution, there's not been a single change for the whole week, where 24,500 continues to be a key level. There is an out of money call option, while 24,000 is a key level for both the calls and puts, at least in the near term, as a key support. Finally, stocks, we've seen in the gainers list, KPIT Tech and Blue Star, both results weren't the best essentially at this point of time. So not too many hits in those results, and hence you saw build up of shorts in both these counters. And for the losers as well, there's just one key counter that I want to focus on, that's PB Fintech. While the results were decent, market wasn't having too much of it, possibly because of valuation concerns, and you saw longs being unwinded on a lot of on this particular counter. So overall, stock specific action continues to favor the broader markets as of now on the back of results that have been much better at this point of time in Q4, but there's some lethargic levels seen at least for the Nifty 50 as of now.
Okay, thank you for that, Puneet. Let's talk about stocks on the radar, because the kind of results that have come in the last 24 hours or so is what is going to set the pace, and that's going to be where the story lies. I'm going to start with Bombay Stock Exchange. Strong outperformance continues. Strong set of numbers, really. Net profit up 32.5% at 797 crores. Revenues up about 26% at 1,564 crores. EBITDA is up nearly 44% at 1,061 crores. And margins have expanded robustly from 59.3% to 67.9%. This is a quarter-on-quarter calculation. So it's a beat on all parameters. Record earnings have been posted for an 11th consecutive quarter. Index option volume surge has driven strong revenue growth. Operating leverage has played out, driving best ever EBITDA margin. So what are the numbers telling us? Transaction charges have surged 137% quarter on quarter. Average daily trading volume is up 48.6%. And the FY27 to-date index option contracts traded have risen 7% over Q4. Equity derivatives share at 86% in transaction revenue mix. So all of that fear after the, I would say, crackdown by authorities, by SEBI on derivatives trading seems to have now eased. And since BSE is the only listed exchange, it's giving us a clear sense of what's happening in the space as well. Good set of numbers. Stock has already run up. I want you to just run the 1 week chart and the 1 month chart if you can for BSE, because this stock was up 3% already yesterday. So how much room there is to grow might be one question, but in the last 1 month, the stock has already gone up 25%. All right, Westlife Food World is the other one that I'm looking at. And this is an operationally strong set of numbers for a company that has not been doing too well for the last several quarters, but this quarter is good. The restaurant operating margin has improved by 70 basis points. They've seen a mid-single digit guest count growth. Same store sales growth stood at 1.5%. Demand trends remained mixed across channels. Cost optimization helped mitigate the LPG crisis impact. Here are the numbers. Revenue up 8.7% at 655 crores. EBITDA is up 13% at 86.9 crores. Margins have improved from 12.8% to 13.3%. This is year on year. And net profit is up 60% at 2.4 crores. Here's what Macquarie is saying about it. They've maintained an outperform with a target price of 515. They've said the Q4 is in line and demand is healthy in the first quarter of FY27 so far. They've liked the mid-single digit guest count growth and recovery in South India market to slightly positive same-store sales growth. They see healthy traction in the dine-in business, which grew ahead of delivery. They worry about demand strength sustaining in this period of rising inflation and potential margin drag from increased FY27 store additions. They've added up to 60 stores. So that's the story with Westlife coming in. Thyrocare, again, a good set of numbers. Higher test volumes and strong franchise expansion supported growth. Improved pricing model boosted franchise productivity. Expansion of specialized test menu improved revenue mix, and strong relationships with doctors and partners enhanced demand. So they've seen a 19.7% uptick in revenue. EBITDA is up 30%. Margins have also improved from 30.8% to 33.5%. This is year on year. And net profit was at 47.1 crore versus 21.7 crores. So mid-cap companies, the first three that I have picked, I would say, and all of them with good results.
Yeah, it's interesting. I have Dabur on top of my list, and it's interesting because the fourth quarter is actually pretty decent. The numbers largely in line with expectations. The volume growth at 6% year on year, it's at an 18-quarter high. You had the revenue growth at 9.5%. That's at a 15-quarter high, so nothing really to complain about. The home and personal care outperformed with the 15% year-on-year growth, and you saw price hikes and supply chain changes as well as cost control, which all aided the growth in the fourth quarter. So take a look at the headline numbers, 7% odd uptick in the top line. You had the EBITDA that grew as much as 8%. There was just a 10 basis point improvement in margin, but more or less steady at 15.2%, and the net profit at 15% growth, standing at 369 crore rupees. All told, a decent set of numbers. Really, the outlook is what is perhaps going to be the fly in the ointment. Morgan Stanley has weighed in on Dabur, maintained its underweight with a target of 412. It says that the Q4 was in line. Positive commentary and execution is critical. They say that the Q4 demand trends remain steady, with rural outpacing urban growth by 350 basis points. The management will protect and improve margins in India and take price increases and manage advertising spend. So all of those are critical to watch. Remember what HUL said also post its results about the volume-led growth and the fact that it would be adjusting ad spend. After a weak trailing stock performance and relatively lower valuation multiples, the stock may react positively to the earnings, is what Morgan Stanley says, but they remain underweight given the company's weaker portfolio construct. So bear that in mind if you see it moving higher today. V-Mart, and this is a pretty good set of numbers as well. The PAT adjusted for one-time gains shows a solid growth. There was actually a pretty substantial gain in a year ago quarter. The same store sales growth is where this metric stands out actually from the pack, and it's done particularly well. That growth is at over 12%. There's also a sizable margin expansion which has aided the EBITDA performance. They've added 29 stores in the quarter, and that has been a strategy for them. They've been pretty aggressive on that front. The net profit, not adjusting for the exceptional, is down therefore at 39%. The revenue uptick of close to 25%, EBITDA uptick of 56%, pretty robust. And it's a pretty good set of numbers. Thermax is the last stock on my list. Another good set of numbers, and the execution has come through here. But more importantly, the margin improvement has been displayed as guided for in previous quarters. Remember, certain legacy orders have been getting executed, and the management has guided towards an improved trajectory for margins going forward as well. They had strong execution, which actually aided that double-digit revenue growth. They also saw a strong order inflow with bookings at 4,490 crore rupees in the fourth quarter. The order balance at the end of the fourth quarter standing at 13,600 crore rupees. The backlog in industrial product segment has improved, and that is critical as well. So pretty decent set of numbers. I don't think there's anything to complain about, particularly when you look at that margin picture.
Okay, so again, earnings heavy. Likewise for me, I have two pharma companies and one consumption-driven company. Now, Lupin, if you look at that one, it's a good beat in terms of our estimates go, and this is despite the kind of forex gains that we were looking at. Now, if you talk about the North America business, that is what has outperformed. A 55% year-on-year growth is what you've seen, and that's what has driven the overall revenue. Now, why this is a positive is because there were concerns when it comes to the North America business, but the management was really confident in the past to say that this will bounce back. LATAM has grown 75% growth, so again, that is very strong, which has added to the momentum. And you've seen high revenue growth that has led to this operating leverage benefits that the company has been seeing. Better cost absorption is what has supported the margin expansion, and the higher EBITDA along with the operational efficiencies is what has supported the profitability, because the revenues overall have grown around 32%. Margins expanded by almost 10 percentage points. That's 33.3% versus a 23.3%, and your net profit has gone up 89%. So thumbs up on that one. Biocon, again, it's a thumbs up because it's beat on low expectations. Your Q4, however, had a high base on the back of the generic of lenalidomide sales. Now, the CRDMO business, which is Syngene revenues, they grew around 2%, and that is what is limiting the overall growth. There has been an exceptional item which has impacted profitability this time around, where because of which, if you see the net profit, that has seen a downtick of around 63% at 126 odd crores. Very lastly, if you see a Pidilite Industries, the revenue and PAT are largely in line and the EBITDA has beat estimates. Your volume growth has stood at around 15.3% and that has come in at a 8-quarter high. So that's the highlight for Pidilite. Your margins have improved by almost 310 basis points, aided by lower input cost. But I don't think so that's going to be the scenario when you talk about the first quarter or the second quarter of FY27 on the back of rising input costs. Revenues, a 14% uptick. EBITDA margins at 23.2% versus a 20.1%. And net profits have grown 37% and they've announced a dividend of 11.5 rupees per share. But it's going to be interesting to watch because the commentary is crucial when it comes to the first half of FY27 because everyone is now talking about that if the fourth quarter for FMCG companies is behind, unless and until they take price hikes or they focus on volume growth, it could be troublesome in the first half on the back of rising input costs as well, which have been caused by West Asia crisis. So that's what is on my list, but we'll quickly slip into a short break. Lots more lined up on the other side. Stay tuned. We will be talking about Britannia, a detailed analysis, as well as a whole host of other companies that will be reporting numbers as well. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome back. You're watching India Market Open, and to say that it's an earnings-heavy morning is probably a big understatement because that's really most of the stocks that we focused on so far. Let me bring on board Kush Bora, founder of kushbora.com, as well as Parag Thakkar, head fund manager at Fort Capital. Gentlemen, thanks as always for taking the time, and good morning to you. Parag bhai, I'm sure that you had your eyes glued to the screen all of yesterday post-market and probably this morning as well. What stood out to you in all of the results that you saw?
So my favorite was Pidilite. Yesterday also we discussed and we hold it in portfolios. So basically 15% volume growth, 14.5% revenue growth, 31% EBITDA growth. Now stock trades at 60 times trailing earnings. So I think FY28 it should be 45, 46 times. 31% ROC business, fantastic franchise, superb management, no corporate governance issue at all. So I would say that this kind of company, so my strategy is this, that whenever oil spikes up, this kind of blue chips like Pidilite or Asian Paints can fall. And that is the time you have to keep buying.
Okay, let's quickly, and there's lots to talk about on the FMCG front, so let's hold off on that before we forget to take an index view and stock-specific information from Kush.
So I'll
say good morning first.
Schooled online. On air.
That's principle.
A very good morning.
Good morning.
A very happy Friday to you and to the viewers.
He's just got into Friday zone now.
Oh yeah, no. I got into that quick mode because he said, "Nee, bahut results hai. There's too much to talk about." Like, let's get to it. Let's get to it. No, strong moves yesterday. I think the weekly Sensex expiry perhaps played spoil sport, but other than that, I don't see any issues. Look at the advanced decline ratio, 2.2, massively in favor of advances, right? So I don't see any, I don't see any trouble with it. The texture of the market still remains bullish. Of course, until everything is done and dusted from a geopolitical standpoint, Nifty might perhaps, take a gradual uptick, but the stock-specific action, plenty. So stay long. Focus on stocks. Support levels have gone higher, which is a very interesting thing. Technically, also 24,200 has now become a support zone. If you look at the PCR, that's gone down from 1.2 to about 1 right now, largely due to call writing on the 24,500 strike. But also, if you see the put option data, 24,000 and now 24,200 have become significant put bases. So if you do get this dip about 80, 100 odd points on the downside, I think it's an opportunity to go long. Positionally, your stop loss should be in the 24,000 to 24,100 range.
Okay. And what about individual counters?
Yeah, 3 of them, all of them on the long side, and 2 updates. Sangvi Movers, Natco Pharma and HP Electric. All of them have seen good price action. Sangvi Movers and Natco Pharma, by the way, have seen this continuation of an uptrend over the last 3 to 4 sessions. Sangvi Movers took out the 200-day moving average also yesterday. So for targets of 346 and 357 with the stop loss at 330, that's a long. Natco Pharma also, the entire Pharma pack's been doing well. This one's a standout right now. 1180 to 1210 are your targets. 1120 is where you keep that stop loss. And the third one is HPL Electric. We've seen good movement. There was resistance around the 380 mark for a while. That's been taken out. So for targets of 393 and 403, that's a long call. And 373 is where you keep that stop loss. Just 2 updates. Linde India is a stock that we've been discussing for the last 2 days. Yesterday we said it hit target 1. Yesterday actually it went on and hit target 2. My suggestion, you could book profits now. Gabriel India hit T1. You can continue to hold that one. Trail your stop losses higher.
Interesting names there. In fact, all of these have seen some up move in the last couple of days as well. But FMCG major Britannia actually missed revenue and EBITDA estimates on the back of subtle demand and geopolitical pressures. Mahima is here with us to tell us more in terms of what's the review looking like and what are the key highlights that she picks up. Mahima, over to you.
Right, so Hira, as you rightly mentioned, this is one of those counters which is different from the entire FMCG pack, right? We've seen beat across, the entire FMCG space in terms of, all counters beating street estimates. But Britannia, unfortunately, has, missed in terms of revenue and EBITDA estimates versus what the analyst expectations were. Margins have also kind of seen a decline on sequential basis, and this is largely on account of the West Asia conflict and raw material inflation. Other expenses have also inched up quite a bit, 17.5% on year-on-year basis. Overall, business witnessed a 9% growth during Jan to Feb. However, the management has said that the growth lowered in March due to supply chain disruptions because of the West Asia conflict. Digital-first brands, however, are doing very well for the company, and that is where the growth is actually coming from. I think for Britannia, it's one of those companies that takes price hikes very cautiously, and that could also be one of the reasons as to why there is pressure on top line. We'll have to see as to how the commentary comes in today at 10 a.m. in the con call with regards to how price hikes are going to be taken in Q1 and what has already been done in Q4. Plus that as compared to how volume growth has fared. In terms of the numbers, revenue growth stood at 6.5%, EBITDA growth at around 6%. Margins came in at 18.1% versus that of 18.2 earlier, so largely in that same range where it was in Q4 FY25. And net profit, however, did see a growth of around 21%. They are also expected to pay a final dividend of around 90.5 per share. So this is the overall view, but I think more details will be there in the 10 a.m. con call today. So, we'll give you more updates post that as well.
I'm sure everyone is waiting out for the con call details as well. But thank you, Mahima, for that. Let me come to you, Parag Bhai. You know, you had Britannia, you have Dabur. All of them have posted numbers. But the question is, everything is hunky-dory when you talk about the fourth quarter in terms of what they've reported, right? But what happens when you go into the first quarter and the second quarter? Are you comfortable at current valuations, at the way current stock price is, to even start nimbling at FMCG companies like these?
So Britannia, it will be important to listen to the call because January, February, our channel check suggested there was a good growth. March, it declined because of this LPG shortages and all. So we have to listen to the call, how exactly what is their outlook. I'm sure they must have also now gone to, I would say, newer technology, induction cook, whatever. So I would say that I would wait for the call. In fact, we don't have the Britannia stock right now. And Dabur, of course, India business did very well and they have guided for a better growth. In terms of revenue growth, they are saying now high single digit to low double digit growth. And they have said that they will be able to maintain margins in spite of inflationary outlook on input costs. So, and stock is at only 36-37 times FY28. So, it's the cheapest non-cigarette FMCG stock, I would say, within the large cap basket of FMCG. So, but yeah, so you're right, March quarter was very good, in fact, for many companies, right? And going into Q1, you have a little bit of caution because of this war extending and oil price staying higher for long. So, you have to buy where valuations are attractive. That is the key thing.
Just wondering how you're looking at Pidilite and you know, some of the others in that space.
So Pidilite, I remain very, very constructive. I just said that the 15% revenue growth and 31% EBITDA growth and 15% volume growth also and 31% ROC company. And so it's a great franchise, very less competition, super brand and top class management. So what more you want is just attractive price.
The problem is this entire space, consumption and FMCG doesn't really move in a very exciting way. They're not doing what a BSE is doing. What did you think of BSE?
BSE is very expensive in my view. And, but
look at the kind of 11 quarters of standout results.
So basically, I don't extrapolate the current bullishness. That is my DNA. So if something is doing very well and so market is just chasing it and taking it to high PE, then it gets into accident. There is no problem with the company, right? That's what happened with Trent some time ago, right? Fantastic company, but people took it up to 7,000-8,000, 100 PE, 150 PE. There is some limit to be, how much you can pay.
And also you're relatively cautious when it comes to capital market players, right?
Yeah, true.
Yeah, but not the exchanges because there's nowhere else to go.
Derivatives, for example, a business makes money out of people trading in derivatives. That business itself is a problem.
But the numbers are showing that there's improvement.
Yeah, I am saying.
Exactly.
But I cannot extrapolate
the valuation. Okay, on charts. BSE
alone? Okay.
BSE and then of course we should talk about Pidilite, Dabur, Britannia if you haven't already.
No, but before that, a very good morning before I get another schooling from Alex for not wishing you good morning.
No, very good morning.
Very good morning. No, see, I like BSE. I have liked BSE for a while, and Parag Bhai has a school of thought. Technical analysis basically has a school of thought, which is a stock which is trending higher in a channel, in an upward move, will continue to trend higher. Until it doesn't. So for me, that tenet, that thesis kind of just works. So as long as it is in that up move, I will continue to remain bullish. Of course, there will be these dips and there will be pullbacks. So far, at least, all the dips and the pullbacks in BSE, even if they've been 15-20% kind of dips, have been an opportunity to go long. So I maintain that view. Yes, right now it's overheated. It's very, very overheated. Volumes are still healthy, but I would suggest that if you have a position, book right now. You could consider adding near the 3650, 3700 mark. That'll give you some healthy risk-reward ratio. FMCG not really moving the needle for me because what is not doing well is not doing well, and what is doing well has done extraordinarily well. Look at Nestle and Marico. They've actually gone to overheated territories. One stock that I'm starting to like, and Parag Bhai will smile when he hears this, is actually Dabur. Long-term, medium-term story, not great, but the near-term trend reversal is actually starting to look very attractive. So maybe, for immediate upsides, I could consider Dabur, but not the rest of the FMCG pack yet.
And Pidilite and Britannia?
Not really, because they are hitting the 200-day moving average, and just when you cross that, there are some supply zones as well. There are some resistance zones as well. So I think there will be a round of profit booking that will come about for anyone who's been holding on to these from lower levels. So for me, these are not really a momentum play yet. Pidilite, Britannia, both. You might want to book profits if you do get a gap up opening, at least from a trading standpoint.
Okay, a slew of other earning candidates which could react today. We want to cover volume today. Shivam joining in with what else you should look out for.
Well, yes, the first stock is the Vijaya Diagnostics, which has posted a strong Q4 numbers, and the company has outperformed its long-term revenue growth of around 15%. Now, the growth in revenue was mainly supported by the volumes growth, and also the company has seen a broad-based growth in the segments which were led by pathology and radiology segments. Now, the company also plans to introduce the advanced genomic testing capabilities, and also the company is expanding with 3 hubs in Bengaluru by H2 FY27. Second stock is Sandur Manganese, and the company has also posted a strong Q4 results, and the focus of the company mainly remains on this specialty steel segments, and if we talk about the realizations that were led by the manganese ore on quarter-on-quarter basis, and ferroalloys has also seen the highest change in sales on a YY basis. Now, management expects a stronger performance from the steel segment in FY27, and the company expects to fully utilize its 4.45 metric ton per annum this maximum permissible annual capacity for iron ore. Now, next stock is CCL Products, which has also posted good Q4 numbers, and we have seen a higher raw material cost, which was up by 57%, and the rise in OPEX was partly offset by the lower funding cost. The revenue for the company has gone up by 46.5%, and profit has also gone up by 12.4%. Last stock is Mahanagar Gas Limited, which has posted weak Q4 results. The company has seen a healthy volume growth, but it was offset by the weaker margins, and the revenue remained in line with the estimates, while the CNG volumes has driven by sustained vehicle additions, and the gas cost has rise in gas cost has led to lower margins.
Okay, thank you for that, Shivam. So Mahanagar Gas was typically not that great. Vijaya was okay, but overall, out of all the mid-cap companies that have been posting, what has stood out for you, Parag bhai?
So just I would say that right now I am focused more on, I would say,
the large cap.
So
Really?
SBI is going to report.
That's interesting to me, because the tide is definitely in the other direction.
Yeah. See, simple. It is very simple. People ask me mid cap and small cap. अरे लार्ज कैप में FIIs बेच रहे हैं, तो वो कैसे बढ़ेंगे? और वहाँ पे ही वैल्यू है, तो बेसिकली
why should we buy if FIIs are going to continuously
very short term view, there are enough mid caps and small caps who are reporting very good earnings, right? So I would say that like you said, like Thyrocare reported very good numbers. In between, Dr. Lalpath Lab reported very good numbers. So there are many companies which are reporting very good. Granules reported fantastic numbers, for example. Some of the portfolio companies like Aadhar Housing reported good numbers. So I would say that it is bottom up in mid cap and small cap. But generally, what I feel is that mid caps and small caps there is no FII who is holding the stock and who is not selling, and so they have a free ride, while large caps, in spite of performing well, goes through selling pressure because FIIs are selling it. And so for a value investor like me, large cap remains more attractive.
Okay, so your large caps is more attractive, and that collaborates with Tamanna's view as well this morning when we were discussing about, in terms of the rally, will it be the large caps or the small and mid cap counters as well. But moving on, Soumit Sarkar also joins in for Heard of the Street with all the chatter from the dealing room. Soumit, good morning. What are you picking up so far? We already have a khabar confirmed when it comes to Lenskart.
Well, yes, Lenskart was khabar confirmed. We did indicate yesterday that a block deal of around 3,500 crore up to was planned. And in the evening, they did mention about that amount. But today in the morning, they have upsides this deal. And now the block on the block that will be offered today in the market will be close to 5,650 crore rupees when it comes to Lenskart. But apart from that, few stocks that dealers have highlighted in trade. Firstly, Crompton Consumer. Now, there are buy flows on the large HNI desk. There's a buzz of a potential tie-up deal that could be announced when it comes to Crompton Consumer. For HDFC Life, there are buy flows on the DI desk. Dealers indicate that a large FI was a seller here, but this FI selling is largely over when it comes to HDFC Life, and the stock could bounce from the current levels. For NLC India, there are buy flows on the large HNI and the PMS desk. Dealers are recommending this stock to their clients for a 15 to 20% upside from the current level. So keep an eye out for NLC India as well.
Okay, so a lot of stocks there to keep an eye out on, but we were talking about large caps before we went into this, and State Bank of India results will be coming out today. It's fair to say you think that banking stocks and these companies have not really been rewarded for the results they gave in.
Yeah, absolutely.
Overclouded by a lot of concerns, X,
Yeah,
Y,
yeah.
Z.
Correct.
Same could happen with State Bank of India. What are you penciling in for State Bank?
See, when the results of ICICI Bank came and then Nexus came, there was this overhang that, okay, this West Asia conflict is going to last longer, so there can be asset quality issues. The good luck which SBI is having before declaring its result is this credit guarantee scheme is already announced of 2.55 lakh crore. And SBI, based on my calculation of the system level growth and what SBI can report, it is around 17% loan book growth, which is very good for a largest bank of India. 17% YOY loan book growth, QOQ, I would say NII growth will be 3% and NIM will remain stable. That is my assumption. So I would say that, and now you have this credit guarantee scheme, which is a backstop, right? So I think SBI, hopefully, if geopolitical situation does not worsen over the weekend, SBI should do well.
What about you in terms of banking names, Kush, and how does SBI stand out for you?
Actually, it doesn't really stand out. I mean, like it did for a while now. It's starting to see resistance. It's starting to see selling pressure. So I will look at 1100 and 1115, as the key levels to take out. For the last 2 weeks, that's the level that it's not been able to cross. If result, clubbed with the geopolitical, easing perhaps, is the much needed push that it gets and it crosses above those zones, then perhaps that, rally could continue. Bias is positive. I'm just saying that the, immediate headwinds in terms of the resistance levels will not really bode well for a fresh trade. So you might want to take it once it's in the clear of 1115 kind of zones. If you have a position, I don't see a problem, why you should not hold. Keep a stop loss at the 1065 mark.
Just a quick follow-up on that. Will you be terribly disappointed if for some of these public sector banks and specifically State Bank of India, the treasury income dropping substantially, which is likely, affects the bottom line?
No, I am not at all looking at treasury thing. It is one-off. It is
so
one-off.
You look
it is
at
mark to market.
Okay.
So I am not really, I am looking at, as what Bakshiji keeps saying, core PBT x treasury. So that is the number.
Which is the business of the bank, actually. It's not an external factor.
Because you're forced to hold 20 or 22 odd percent in
so treasury
SLR.
is completely one-off for me. In fact, if due to treasury loss, the stock comes down, it is a great buying opportunity if the core performance is good.
Okay. One more stock I want to talk to you about is HDFC Life. I mean, last 4-5 trading sessions, you've seen good strength, 5 to 6% versus if you have to compare it to peers, not that great a move. Is that a standout push on the charts in terms of HDFC Life?
So I'll give it to you. In the last 3 sessions, fantastic. Volumes, humongous, through the roof, about 2 to 3x, 5x of the last 20-day moving averages. But is the trend really building up? I'm afraid no. There was a gap around the 629, 628 zone, which got filled yesterday. So I think today, if you do get any kind of a bump up, this will be a profit booking opportunity. Plus, we know that in the medium to the long run, it's not really done anything. So, that supply pressure remains. So for me, this is a book profit opportunity. The recent trend, whatever the upsides were, has been captured.
Okay, so that's HDFC Life. But Agwai, anything stands out from the insurance space?
So stocks were beaten down completely, and now it seems that insurance sales have picked up on the ground. I would say that, but I would agree with Kush that there's recently, from last 3 days, there's a big rally. So there can be one sell-off. But in HDFC Life's case, the CEO Vibha Padalkar getting a 5-year extension is a structural positive. So any good correction, and stock has also not done anything. So any good correction is a good buying opportunity.
Okay.
But I would not buy at this price because it has rallied recently.
What are you seeing in terms of decent valuations then? Because we've talked about quite a few stocks which are rallying, and you've said K ho gaya inka valuations. What are you seeing which is well priced right now?
So basically, one is valuation, one is the structural performance of the company. So for example, I keep saying this, that across the sectors we have seen that, like in auto, for example, M&M and TVS Motors stand out, right, every time. In cement, Ultratech stands out, just out of this time.
This is because of performance, just
this
pure
is because
performance.
Yeah. So across the sectors, we will find such large caps where, so Grasim, for example.
Where is the alpha and the winners, which everyone has discovered?
In large caps, you are saying?
Yeah, or in any case, if you've already found the continent, there's no point. Everyone wants to be Christopher Columbus.
But the point is, see, I'll tell you, for example, Ultratech's result, I'll tell you, 1,250 rupees EBITDA per ton, plus India Cement 497 EBITDA per ton is going to 1,000. Plus capacity is increasing significantly at a very... So I would say that if this West Asia conflict would not have been there, if oil would not have been at 103, after these results, Ultratech would have gone much more higher. So Pidilite is also same thing, right?
So we will continue this debate because oil at 103 is not something you can wish away. It's like you can't wish away who you are. So that's where we
But see, with one statement, it can fall also.
God, unless you're the person who's taken that trade. Like every time there's a Trump statement, the news comes that someone took a trade and made billions. Unless you're that person, then you're possibly not watching us right now.
For caution, that if suppose oil goes up, right, so then we have Bharti Airtel kind of stocks in the portfolio, cash in the portfolio, which will to some extent mitigate the loss.
Okay, what else is buzzing today? Let's tell you about here and now and what are all the stocks that's going to be in focus. Puneet joining in for more.
Well, thank you for that. Well, Gravitas is the first one. Good set of numbers for the company. Revenue is up 13%, EBITDA is up 22%. And more so at this point of time, the company has decided to enter the copper recycling space. I think that's something that the market will look at very positively as well. Given where copper is, given the price point that it operates at, the capex for the copper recycling plant is 160 crores and this will be in Gujarat. So watch out for that. They've also continue to maintain a higher guidance as well because expanded its Mundra recycling capacity from 80,000 million ton to 145 million ton, and they're targeting over 8 lakh ton per annum capacity basically by FY29. The second one, Sonata Software, this one was a mixed set of numbers where the revenue was down 17%, so largely nothing too great in revenue growth, and EBIT is just up 5% and profits largely up 25% because of other income. So actually a weaker set of numbers for the company where they won 2 large deals, but it's a weaker set of revenue growth, so stock might be under pressure today. And finally, Aditya Birla Lifestyle, recent demerger happened over the last 3 to 4 quarters. So for this one, which operates brands like Allen Solly and Louis Philippe, the revenue is up almost 12%, EBITDA is up 14%, and profits are up 42% in this quarter. Lifestyle brands, which is of course the majority that I've just mentioned and named, the revenue is up 11% for those, almost 1,800 crores. Emerging businesses within the sports vertical also is growing well at almost 18% this quarter. And like-for-like retail growth slightly slower at 4%, but e-commerce continues to drive the momentum. So these 3 stocks in focus, continue to monitor them on the back of results.
Thanks, Puneet, for that. In fact, Aditya Birla Lifestyle actually stands out over here with the kind of surge that did come in yesterday's day of trade. 9 to 10% is what we saw. Parag bhai, anything from this side of the retail space that you like, because you have a V-Mart, you have a Aditya Birla Lifestyle, all of them now are in focus.
Yeah, all of them actually did well. And actually, I think to some extent, it was a surprise also. Because till from last 3-4 quarters, fashion was not doing well. But Trent has also reported good numbers. Aditya Birla Lifestyle has also reported. V-Mart has also reported good numbers. Avenue Supermart also we knew the results were very good, but it was led by some sort of one-off kind of buying or stocking by the consumers. But I would say that yes, this space is looking interesting. The prices are also low. Aditya Birla Lifestyle as a stock has not done anything since last so many. Coming out with good numbers really helps in this sector.
Okay, just some of the others that we should quickly address, and one of them is Bharat Forge. Bharat Forge, and we spoke to the management yesterday as well. Some notes coming out too. Jefferies, for example, is maintaining a buy and has hiked the target price quite significantly. They're saying this is inflecting upwards and still time to buy. Operational outlook is turning brighter. They've upgraded their EPS also FY27 to 28 by 4 to 10%. When you're talking about companies that are structurally strong and still have an upside, does Bharat Forge fit that list for you?
So I would not buy Bharat Forge because it has gone up too much for me to buy. So that is the space where I can go for smaller names. I don't hold it now. As a
12% in a month. You've seen stocks which have gone up 30-40%.
If you see just 1 year performance, I think it was 1150, 1200 also. And it has gone up to 1900.
It's 80% uptick
on PE basis also, it is very stretched. But here, because of the Bharat Forge commentary on US CV cycle, Europe CV cycle turning around, there are other forging stocks which can do well, like Forgings of the world or various other forging names of the world. Of course, I don't own them. I'm just telling that this can be a good sector to watch out for.
But Parag bhai, yesterday in the conversation, Hiral had some really good questions that she posed to Amit Kalyani. It's not the CV business that they're going to be growing on. It's aerospace. There is a new explosives business that they're working towards that will feed into their defense play. With ballistics, etc., right? So therefore, the opportunities and the data centers.
But US Class 8 trucks are turning around clearly.
Okay, so the thing is for Bharat Forge, what 7 to 8% of their revenues is coming in
I'm
from
saying
there.
that for Class 8 trucks.
But on the point of Bharat Forge, the 25% growth that they're projecting is actually maybe a conservative.
On the other businesses, right?
It's on aerospace itself.
Please understand one thing, my thought process. 25% growth, what PE you will give? That is the question. What PE? I can give 40 times. It is trading at more than 40 times.
Are you looking at this as a defense play, a Class 8 play?
Whatever I had to, if I had to, I should have done at 1200.
Okay.
If I have not done it, I will not do at 1990.
Okay.
Very clear view.
Okay. Is there any other defense play that you want to look at? Or that story is also something which is...
No, BEL is good, HL is good, and some of the smaller names have done really well, but they have gone up too much now, like MTA Technologies or Data Patterns of the world.
And Bharat Forge on charts, Kush?
Yeah, so again, I would wait for a dip, maybe not to 1200, but about 1700 thereabouts. It has risen sharply also for anyone, who's been holding on to this for a long time knows that, you have to be ready for even a 30 to 40% kind of a decline positionally before it makes that next leg of up move. So I would wait anywhere close to the 1700 mark would be a good entry point.
Okay, so that's 1700 is a good entry point. You're quite a ways from 1700 right now. Jefferies is also quite positive. We showed you that note, so you might see another uptick today. So wait and watch. If you hold it, would you take profit?
Yeah, I would. I would take the money off the table because on the weekly setup, it's starting to see negative divergences, which means the strength is now starting to perhaps decline a little. Of course, you could have a bump up, but if not fully, at least partially, you should exit.
I think in this market right now, it becomes slightly more important to know when to sell rather than when to buy. Yeah, so that is a new skill set if you don't have it that you need to now put into place.
Toughest things to do.
And hence the updates. So every time I give an update on this stock T1, T2, it's not because, like I say, I'm great. It's because अब time आ गया कि ये आप hold कर सकते हो.
No, others say you're great.
I've heard veteran fund managers, 20 plus years saying, I'm still learning how to sell.
Yeah.
It's the toughest thing to do.
Two things, learn to say no and learn to
sell.
I suppose life lessons was Friday. Let's talk about car trade. Pre-open rates coming in. We'll talk a bit more about them as they settle, but they're all on your screen. So car trade posted yesterday. Citi has maintained a buy and cut its target price to 2520 from 3150. They've said OLX has missed, but product cadence remains promising amidst AI concerns. Automotive market continues to see sustained growth, acceleration post GST tax cuts. Car trade's reported user traffic in Q4 hasn't yet been visibly impacted by AI-driven shifts in user behavior. Product and monetization initiatives in used vehicles relatively less exposed to AI disruption and looks promising. Kotak has also maintained a sell and hiked its target price to 1860. Strong profitability among segments is what they say. Slight growth moderation in standalone and OLX businesses. EBITDA margin improvement across segments driven by operating leverage. Future growth, focus on better monetization of core business and OLX. They await a better entry price point. But I'll tell you why I'm interested in talking about this business and a whole host of businesses like this, which are right now running in India. We keep talking about India and the AI context as, we don't have an AI trade. But we have enough listed players who could be very sharply disrupted by AI. And I don't think anyone's really talking about this story yet. And car trade is a good example. I'm not saying they're going to be disrupted. In fact, the view is that less. But there is at some point, anyone who's going online to search anything is going to get the best insurance policy via an AI chatbot. What happens to a PB fintech is going to get the best used car option via AI. What happens to a car trade is going to get the best flight ticket via AI. What happens to an Ixigo, etc. Is that something that you think people should be wary about?
Yeah, absolutely. Your point is absolutely valid. In fact, what they are saying is that OLX, there was a moderation, but they are now adapting AI to increase the traction in the business. But your point is absolutely valid, and that is why even this kind of stock, which is considered to be a futuristic stock, is trading at 40 times trailing only, or earnings only. Although it makes good PAT, unlike recently listed new age startup companies. But I think your concern is valid, and which is right now factored in the market.
Yeah, maybe a physics wala as well. So though they say they are using AI to go forward, but this is something that you need to look at. Futuristic stocks, but the future changes too fast. That's the problem. Dharmesh Khan joining in this morning. Dharmesh, very good morning to you, and hope you're doing well. Want to get a quick view from you on all of the FMCG pack, because that's what's in focus. A Britannia, a Dabur. Let's start with those and how you saw them. Let me add on a Pidilite as well.
Yeah, very good morning to Tamanna and to all our viewers and the panelists. Good morning to Alex. See, I mean, the only standout was Pidilite. They came out with a very strong set of numbers. I mean, that even we were not expecting such a strong set of numbers out there. But that was Q4. Going forward into Q1 and Q2, there would be input pressures which will be, cutting some slices of the operating margin. That is there. What has been the takeaway from this entire Q4 earnings is that the business momentum has been very strong, and most of the players, whether it is FMCG or consumers or consumables provider, they all have been able to pass on the input costs. You see all the wire and cable companies, the management sounded very aggressive about the demand being there and the pass-through being there. Even Bharat Forge management, I was listening yesterday, he was very clear that people are buying. The pricing, as far as input price is concerned, it's between customer and the seller, and that's happening out there. So that's the good takeaway. And to our mind, as I have earlier said, I mean, this will be resolved sooner or later. So this will be, I mean, it will look way behind in the rear window going forward 2 years down the line. So, but FMCG, to your specific question, we are not bullish on that, though few results were quite encouraging. I mean, almost high single-digit volume growth was being noticed, but I think these valuation multiples are way too high to justify such kind of growth momentum. So it will be evened out over the next 2 to 3 months.
Okay, all right, and good morning to you as well, Dharmesh. Evened out over the next few months. I want to take a look at some of the big movers from the broader markets. Aditya Birla Lifestyle brands losing ground after yesterday's stellar move. It looks like HDFC Bank might be under a tad bit of pressure at the start, but it might just settle. These are the pre-open rates, remember that, and so that might be having a bearing on the benchmark as well. MGL down about 3.4%, Britannia losing a little bit of ground as well, 3% lower, Hindalco down about 2%. What's doing well? Vijaya Diagnostic is one company that stands out. It's up about 5% in the pre-open session. Thermax is up close to 5%. We told you about this as well. The execution seems to have picked up, and the margin profile is also looking a tad bit better. Pidilite, we spoke about, it's up about 4.8% as well. Acme Solar, Dabur is up 3%. Metropolis is also up about 2.3% or so. But let's go across to the big brokerage call of the day, and Investec has upgraded its call on a bunch of paint companies, and let's find out why. Sharad joining in to tell you what they're saying and what the call is. Sharad, morning.
Good morning, Alex. And it's almost a contra call coming in, what we have seen for the paint companies, especially in this quarter itself. But interestingly, Investec has given an upgrade coming in for a lot of paint stocks. Indigo Paints, you look at it, it's upgraded to buy from hold. Even the target price has been hiked. Same thing goes for Kansai Nerolac. And for Asian Paints also, it's been upgraded to hold from sell. And Berger Paints also, the story remains the same. Now, the crux of this entire report is that the competition which was there in the paint space for the last 12 to 18 odd months, that seems to be coming off, and that peak competition is off. That means you can see the organized players getting in more market share here, and this incremental market share was expected to moderate at least on these players. Apart from this, the Birla Opus, that appears to be focusing on reducing losses right now. That means the other players can gain a little bit of market share gains as well from the current scenario, and that is why the bullishness is coming in.
Got it. All right, thanks so much for that. On paint companies, Parag bhai, what's the view? Because the latest update that my colleague Ridhima also picked up is that there are price increases that have been taken over the last 2 or 3 months. And as of the 5th of May as well, there are a few price increases that have taken place. The word from Berger, I believe, was that demand is okay, and so they expect that the price increases will be absorbed.
So basically, I would agree with this Investec note. The worst is behind. At least in terms of competition. I would not say, because paint is a discretionary consumption, so how it goes into Q1 is, I would suspect, but I would say that at least, so we have, because we hold large quantity of Grasim, so we have also done some channel checks. So Birla Opus has reduced the difference between Asian Paints and itself in terms of pricing, which means this thing is right, that competitive intensity is slightly lower now. So it has peaked out for sure, competitive intensity. Right, so basically, so like Birla Opus also now wants to, reduce losses and make money. So that way, the worst of the competition is behind. This quarter should be good because every dealer of paint knew that there is going to be a price hike. So he might have stocked, like what we saw in Avenue Supermart.
But what about the impact of input prices and high crude prices and all of that?
So that is why they are taking this price hikes. And
is it enough? Because
see, remember this FMCG, paints, Pidilite, all this business makes very high gross margin. So when you see their input cost going up, they have to just take 3-5% price hike or 7-8% price hike to offset this entire thing.
My only point is that the price hike is abnormal. It is not in the everyday or the regular kind of move. You've gone from $70 a barrel to 120, then 105. It's really abnormal.
So that is for everyone. So first of all, entire industry is going to take price hike. Now we have to see whether the demand is going to take a hit or not. So in that case, for example, I'll give you an analogy. For example, Marico, the copra oil prices went up by 100%. They had to increase parachute price by 60%. In a year. Still the volume degrowth was 2 to 3% only. That cannot happen in paints. In paints, you can postpone it. It is a discretionary thing.
Correct.
Right?
But so the flip side to that also is that I remember, good morning to everybody, I remember Amit Singhal telling me once in a conversation that in an overall cost of a house, paints is just 1.5% of the overall interiors. So even if, I'm just thinking out loud that if I had to paint the house and from 1.5%, if my cost goes to 2%, which is also what the painter is telling me, ye laga do, because we don't go out and buy the paint ourselves.
Why won't you put wallpaper?
Sorry?
Why won't you put wallpaper?
If you're putting, so you are a customer, if you're putting a wallpaper, you will anyways put a wallpaper even if the paint prices were to decrease by 50%.
That's true. The higher end of the customer will possibly put wallpaper.
Now we know who is the higher end of the customer who's putting wallpaper.
Who's putting the top
somebody who's contemplating it.
The top end who doesn't care how much the painter is saying, he's like, laga do. He's sitting right
but
there.
only, 1.5 to 2% of the overall house, so maybe the demand might be a bit inelastic. I'm just trying to supplement what Parag bhai is saying.
So I'm saying that is to be seen, but right now the competitive intensity has bottomed out, has peaked out, I would say.
Parag bhai is saying this is not a table thumping buy.
I'm not saying it is not.
Actually, Parag bhai has not had a table thumping buy for a while. Isn't that true? Is it something which you have high conviction?
I keep saying that although ICICI Bank is going through a, whatever patch it is going through, ICICI Bank, SBIs of the world, Axis, Kotak of the world, banking, Ultratech, Grasim in cement, in between I said Adani Ports also at some price. Bharti Airtel, all these are my table thumping buys and my portfolio reflects it very clearly.
Yeah. The other one, by the way, which might come under a bit of pressure today, I don't know if Wari is indeed doing okay or doing badly, but it might come under a bit of pressure today because I think there was a fair degree of anticipation behind this big event that they did, and there might be some positioning scale back as well. Dharmesh, did you get a chance to look at that targets that they've set out? And because it was widely anticipated, tactically, would you want to be slightly soft on Wari, or do you like what the management has said and therefore you're constructive there?
Very good morning to you, Neeraj. See, as far as solar, the entire system is concerned, if you look at incremental last 6 months to 1 year kind of a time frame, the incremental order flow has not been that great, which is used to be. So next 2 years, they are fully booked. they would be delivering 50-60% kind of a growth, which they have been doing on a quarterly basis. So no questions asked there. But going forward, FY 29-30, there's a huge disconnect between the type of, 1 trillion rupees kind of top line they are talking about, 4 times for what they are right now. How they will achieve that roadmap disconnect was there. So we are not buying, we are totally staying away from the renewable space. And the second primary reason for that is Reliance and Adani Group is coming in a big way. So their plants will be commissioned by end of FY 27. So that supply will also come into the domestic market. So a lot of headwinds out there. It's not that easy. Margins will be getting squeezed. And HJT technologies, which Reliance is very much focused on, one is still not there. So, multiple challenges. Just on one lighter note, Dheeraj, you paint your house every second to third year. So there 1.5, but you don't buy houses every second and third year. You may, Dheeraj, you can afford to do that. But if you talk about painting an 1,000 square feet or 1,100 square feet kind of a flat, Asian Paint guys, the minimum budget they give you is 2 to 2.5 lakh rupees. So that becomes some sensitivities out there.
Someone has painted their house recently. And is feeling the pain.
No, but I don't go.
I could see the pain over there.
No, if he did recently and he's not done it in the last 2 months, then he's actually better off than a lot of people that are contemplating it right now.
He's a markets person. He's thinking, "Mere ko itne ka fayda ho gaya." But I go to the neighborhood guy who comes and Kadiya, who comes and paints, and he gives me a budget. He doesn't give me the 2 and a 7.5 lakh budget for sure. So I'm happy with that.
Okay. No, but Dharmesh, just talking about what the overall market mood is and what do you think is really going to be the strategy for the day as we go into the weekend? Do you think that weekend fear is going to be easing off a little bit? Because usually you have Fridays, which has got a lot of trepidation. You don't know what's going to happen over the next 2 days.
Definitely, yes, Tamanna, because if you look at the markets, it has raised 2,000 points. And if you look at mid-cap, it's already hitting a new high. So we did an analysis a couple of days back around our top 500 companies. Almost 60% to 70% of the companies are trading above before the war started. So those levels have already been crossed. And if you see what market is telling, market is buying this market on every declines, and they have been consistently positioning themselves for a brighter future. So that is how the market is reading. The other point on the war side I would like to highlight is it's 3 months old now almost. So it's a very kind of a war. You get tired, and then if it has to happen, the energy levels are too high. I don't think it's going to go the other way in a big measure. Even if it happens, it will happen quickly for 2 or 3 days. And US itself is very much troubled. Look at the debt levels and all. Difficult situation. So go with a buy on the market. That is what we are saying.
Dharmesh, the music on the screen kind of embodies your bullish outlook currently. Let's see if the markets do that too. Very likely 100 points lower, about close to 100 points, 108 points lower. Banks falling, mid caps a bit better. I wonder what the small cap index is doing. Well, the resilience. Guys, if you really want to look at the slightly bullish trend in the market, look at this for the last 1 month. Don't look at this, don't look at the Nifty 50, frankly. Market breadth is looking okay. Let's pull up the heat map up on the screen and show you what's moving and what is not. Well, more red than green, no surprise there. What is out, withstanding that small bit of selling pressure? Tata Consumer 1.2%. You have a bit of a Wipro, bit of Bajaj Auto, ITCBL. No big news-making moves, if you will, on the upside. On the flip side, Coal India down about a couple of percentage points. Banks again taking the stick. You know what? We're looking for the trigger day before yesterday and talking about it. Somehow private banks are failing to react and sustainably take that up move beyond that even after triggers. So Axis Bank, HDFC Bank, both looking weak. Kotak Bank looking weak. Reliance is looking weak. So some bit of heavy is down, and as a result of which now 150 odd points, we are quickly at the lowest point of the day with banks and Reliance leading the downtick. Not too many saviors out here, Tamanna, unfortunately.
Perhaps there is some Friday nervousness after all, because this explanation from Donald Trump that it was a love tap in the Strait of Hormuz is not really going down too well one way or the other. The market's tapping out at this point. Let's get the mid cap up and the small cap up. Let's look at if there is a better picture. I mean, seriously, flat to negative seems better. Advanced decline ratio is not as wide as one would have wanted, 990 to 1131, slightly positive thanks to the small cap 250. Let's pull up the sectoral heat map for you as well. This Friday morning, there's no TGIF mood really. Private banks down about 1%, financial services 1%, Nifty Bank also nearly 1% down. So it's looking painful there. Pharma stocks are doing okay relatively. India Defense slightly up in the green, but not even 0.5% up. So this is, I would say, a muted kind of market with a negative bias right now. We should in fact pull up specific stocks and look at what's happening. We're still in the middle of this very long results season. The reason why it's feeling so long is because it's the end of the financial year. So companies take their time to also report. Pidilite, good set of numbers, 4% up. Thermax, good set of numbers, nearly 6% up. Vijaya Diagnostics, also good set of numbers. In fact, I think Metropolis is also rising today in tandem, and we should pull that up when we can as well. I want to look at Dabur, Aditya Birla Lifestyle. You know, Aditya Birla Lifestyle, on the face of it, seemed like a good set of numbers, but getting hammered. I don't know if there's profit booking or something more that's brewing. Sonata Software. So Hexaware, Sonata and Coforge, if I put them in one pack of the late mid-cap IT companies that have reported, have all actually done much better in terms of their stock price reactions than the big boys. 9% up now on a Sonata Software. Aditya Birla Lifestyle about 7% down. Dabur's doing well with a 3% uptake. MGL was not a great set of numbers. Britannia was a bit of a mixed bag. 4% down on Britannia. MGL is about 3% down. Kirloskar Ferris, decent set of numbers, about 5% up. I'm going to look at what's happening to Arvind Fashion. More of a consolidation than an acquisition is how I would describe it. Nothing much happening there really. It's pretty much flat. And Lenskart, this is something that we had reported on Heard on the Street, which that there's going to be a block deal. That block deal impact, obviously seeing some kind of a negative move, but not too much, just about 2% down. I was talking about Metropolis. Let's pull up Metropolis and see if it's seeing the same boost as a Vijaya Diagnostics. It is. Even a Thyrocare, if we can very quickly pull up a Thyrocare as well. And I'm saying this last minute, but Thyrocare also was a decent set of numbers. Let's see if we can pull that up and get a sense of how Thyrocare is doing. About 7% up. So all your diagnostic pack doing pretty well, Alex.
And you've actually highlighted quite a few of the biggest movers in trade already. There are a couple more that stand out, and one in particular, it's building on gains from yesterday. It was our stock of the day. Craftsman Auto is up a further 5% today. After that stellar move in trade yesterday, it's doing particularly well. First Source is up and about 3% higher. Vijaya Diagnostic, as Tamanna's pointed out, this entire diagnostic pack is doing well. MRPL is up and about 4.7% higher. Nuvama is doing okay this morning, is up 6% or thereabouts. What's losing ground? Are there any big losers? Well, apart from Aditya Birla Lifestyle, you have Escorts Kubota that's losing about 4%, and Britannia from the large cap pack is down over 4%, 4.4% at this point. Perhaps the outlook not looking very good, and also the implications of the West Asia crisis having a bearing on their numbers even in the fourth quarter to a certain extent. So a couple of these stand out, but I do want to focus in on Thermax. We highlighted this to you, and we haven't spoken about it on the fundamentals. So let me ask Parag Bhai what he thought of the numbers. Seemingly execution has been at the fore, right? And there is margin expansion. Some of those legacy projects are being unwound. Yeah. So what's the view on it right now?
So basically, yeah. So the stock has moved significantly. And if you see today, the market cap might have crossed 50,000 crores. And this quarter PAT was around 242 crores. So the valuations have now come, I would say fairly valued. For a quality of company, it is. Company quality is phenomenal. Balance sheet is very good. Working capital is very good, which is unlike in many other this kind of companies. And right now, thermal power is also picking up, as we saw in Bale's numbers also. Right, which is the Thermax, one of the main business. Second, the data center thing is also picking up. So that the industrial business is also picking up. So yes, business is moving in right direction. 13,500 crore order book.
Yeah.
So I would say that everything is moving in right direction. The only thing is that stock has recently it was 3,000 rupees. So it has moved up a lot, and this happens, right? That in every good company, people want to buy ahead of good earnings. So that happens. So I would say that from here, nothing much is on the table in near term. But yes, company is moving in right direction. Everything is doing well for the company.
Okay, on that note, Parag Bhai, Kush, Dharmesh, all three of you, thanks so much for joining us this morning. Pleasure having you. We're focusing in on a key order win, and this is for Pace Digitech. It has secured a 700 plus crore order win in the BESS or Battery Energy Storage System space. Let's first, before we speak to the management, we're joined, of course, by Venugopal Rao Madisetti, who is the chairman and managing director of the company. Before we speak to him, let's go across to Sharad to get some more details on the order win. Sharad?
Well, yes, it's an interesting mid-cap company. Of course, they are having energy and telecom segment exposure, and this is the first order for BESS for FY27. The order win is a large one. That's roughly 702 odd crore rupees, and the company's market cap is roughly around 4 to 5,000 odd crore rupees. And this order win is coming in from Damodar Valley Corporation. This is, of course, the implementation of a 250 megawatt to 500 megawatt battery energy storage solutions in the state of Jharkhand. Now, the scope would be, of course, the EPC segment and a 12-year O&M, that is the operations and maintenance, which should be coming in, and the execution period for this project would be roughly around 18 months. Now, the total order inflows currently stands at more than 5,800 crore in the energy segment for this company.
Okay, in fact, let's ask that question, some of those questions to Venugopal Rao. Mr. Rao, thank you so much for speaking with us. Let's talk about this BESS award that you have got, the Battery Energy Storage System project in Jharkhand, which is the first one in FY27. What is the size of the order and the timeline of execution?
Yeah, the project size is about 500 megawatt hour, the 2-hour battery backup to be installed in Jharkhand for Damodar Valley Corporation. And this is a supply plus EPC services and the O&M services. The entire project is about 782 crores value, and this is to be executed in about 18 months' time.
In terms of the revenue generation that you're expecting from this order, sir?
Yeah, I think the supply and EPC would be completed hopefully in this current financial year, and that would be about 620 odd crores, and the balance will go into the services which will be realized on a yearly basis over the 12-year period.
Mr. Madisetti, good morning. This is Alex here. And so I just want to understand battery energy and what potential it holds, because this is a pretty sizable order. If I look at your energy order inflows, they're standing at 5,800 odd crore rupees. And a lot of people seem to be getting into this BESS space. So can you describe the landscape for us and what are the opportunities that you see in FY27?
Yeah, the battery energy storage is it's about, basically we have a lot of grid imbalance. Particularly due to the renewable energy integration to the grid. Now we are towards the direction of 500 gigawatt of renewable energy by 2030. So what is happening is that the intermittent nature of this renewable energy, whether it is solar or wind, it's causing a lot of disturbance to the grid, as well as the peak requirements. Like suppose energy is available towards the day, through the day, like when as it is generated, we have the energy, but our peak demands are also there in the evenings, so we do not have the energy. So to further enhance the renewable energy integration into the grid, the battery energy storage has become very essential now. Rather, it has become now integral part of the renewable energy integration. So the battery energy storage is basically we charge the batteries using this green energy during the daytime whenever it's available, and then use it in the evening peaks where we do not have the excess, the required.
Yes, Mr. Madisetti, you described that very well. And for somebody who does not understand how the space operates, I think they would have gotten an idea. But for you specifically, in terms of the size of the opportunity, how much can you generate from this is what I was trying to get. So, for example, we are talking about this latest project. It is a 250 megawatt, 500 megawatt hour BESS project. So if you look at at this one project, how many more do you anticipate you could potentially get in FY27?
Yeah, there are a lot of orders in the pipeline. Some of them are in bid and won cases, but not yet awarded, and there are some during the bid and evaluation stage. So we do have a lot of order pipeline for this year, a strong pipeline, I would say. And we are also sitting on a good order of about 5,800 crores for the energy alone, energy sector alone. So the renewable energy, the battery energy storage system, that potential looks very good. And from up to 2030, we are going to have about 236 gigawatt hour. Looks like it will be more than that also. So there's a strong demand for various applications, and we being the front runner for this battery energy storage system, having the manufacturing and the project capabilities. So we are in a good position to further bag more orders during this financial year.
Mr. Madhi Shetty, good morning, Neeraj. I have two questions on specific numbers, if you can. Is there, if not an actual number, then the anticipated order inflow due to BESS that you will have for FY27? A number or a range?
Well, it's quite strong, I would say. There are about 5-6 tenders we have already participated in, and then the results would be known about 3 to 4 months' time from now. There are a lot of applications. For example, recently we have one from NTPC for their thermal power plant. So to stabilize their operations, they are going to install the BESS for all their power plants. So applications are like very different. Like power grid is coming up with some BESS projects. So various applications we are Mr.
Madhi Shetty, sorry, I understand that, but you can't give us a number, can you? You can't give us a range of order inflow.
Numbers are quite high. I would not be able to give the exact number, but there
A range? No? Range
could be about 3,000 to 4,000 crores in this financial year alone.
Of order inflow for you, right?
Yes, additional order.
I just have one more question. If all of that is looking strong, when I look at your numbers over the last 4-6 quarters, in September 2024, your revenues were circa 850 crores. You kind of slightly lower than that in the recent quarters as well. What is the expected FY27 revenue growth over FY26, considering that the BESS play is now starting to work for you?
FY27 is going to be a lot better, and we are going to beat the estimates what we have projected. And we do have, as I said, we have a strong order book, and execution is already started. So FY26 to FY27 was that, FY26 was the energy storage business was just started, right? So now this is in the full form now in terms of, the execution is already started for various projects, and the revenues are getting booked. And then FY27 is going to be a good year for us in terms of the numbers.
Okay, just wondering, what is it that you have guided to, Mr. Madhi Shetty? I mean, I don't have that number.
We have guided about 3,100 crores.
For FY27?
Yes, and we are going to be, we are comfortable on that, and maybe even we'll be crossing that.
Oh, that's a healthy growth then. I mean, that's nearly a 30-35% growth in FY27 or FY26. And you are saying you may even beat that?
Yes.
Okay.
Excellent. Okay. Just a quick question to you and to round things off, which is that if you're looking at this 30-35% growth, I'm wondering if with the influx of more of these BESS projects, how does that change the profile of the financials? In that, are these better margin products than others that you might be taking? And so therefore, is the mix improving for the better? Or are these going to bolster your revenue at the cost of maybe margins to a certain extent?
See, the revenue is for sure that is strong revenue growth would be there, but then the margins, the current margins are quite healthy. We're at about 11% packed in the previous quarters. But then on this BESS, there is an import component called energy and the battery cells. So there is a price volatility that might impact a little bit here or there. But for us, we being the manufacturing and the project company, so for us the impact is much lesser compared to the peers in the market, because if somebody takes this project only as a EPC contractor, so he would have more impact in the current situation. Whereas for us, since we are a manufacturer, so it would be, the impact would be lesser. But having said that, there is a price volatility because of this West Asia conflict. But we are hopeful that this gets resolved soon, and then the prices would be corrected.
We all hope that that is the case, sir. But just to give us a sense, and you've been forthright, and we appreciate that you've been very forthright with what you anticipate in FY27. If you can give us a range for the margins that you're expecting as well, I think that would be beneficial to your shareholders.
Bit early to say, because how long this current issue continues, it depends on that. But small correction, I wouldn't say too much of impact, but the small correction on the bottom line would be there. But that largely depends on how long this issue continues, and then we have impact on the dollar. All this are to be catered to.
Mr. Madisetti, thanks so much for taking the time, and really look forward to catching up with you perhaps after the next quarter results and getting a sense of how things are going. And hopefully by then the conflict will be done and dusted.
Thank you very much.
Thanks so much. All right, now, in the recent past, we've been talking about transformer companies for various reasons, and the stocks really have taken a bit of a battering. If you pull up the long-term charts for some of these companies, Transformers and Rectifiers India, though, delivered a reasonable execution during the quarter gone by, but it missed its full-year guidance on certain key metrics. We're going to be speaking to Chanchal Rajora, who's a CFO, or rather Director of Finance, as I remember, of Transformers and Rectifiers. But before we do, let's go across to Varsha, who joins us with what worked and what didn't work for the company.
Well, let me, Alex, start with the order books, because that provides almost 18 months revenue visibility for the company. The order book stands at around 5,000 plus crore. Talking about the new entry, which is HVDC strategic entry, company received first of its kind HVDC repair order. This is a high entry barrier segment with only 3 to 4 global players, and which is seen as a high margin long-term opportunity. Talking about US policy tailwinds also, which is the other thing which is in favor of company. Tariffs reduced from 50% to 25% to 10% now, improves export competitiveness over time. But let's also highlight about the key concern or what is not actually working for the company. One is, of course, the margin pressure, which was seen in Q4. Company also missed guidance. Margin fell to 15% versus 19% year on year. Also, higher cost for transformer oil, bushing and insulators were one of the key concerns, and supply bottlenecks increased working capital intensity as well. Lastly, Middle East exports slowdown also impacted sales momentum. So overall, a lot of things, yes, actually working in favor of the company, but there are some few concerns as well.
There are. Thanks for that, Varsha. And Chanchal Rajora, Director of Finance, Taril, joins us right now on the show. Mr. Rajora, good having you. Thanks so much for taking the time out. We missed you when the earnings came out, but it does seem that this Middle Eastern conflict is impacting the sector because of maybe lower exports, maybe lower order inflow, and transformer oil prices or input cost prices going up. Would all these three be impacting you right now, and therefore could the near term be subdued?
Neeraj, morning to you. And I basically take the opposite view on this. Right? In a short term, yes, because of the transformer oil pricing, it is affected us a little bit. But in the long term, it is a very good opportunity for the company when the revival of the Middle East will start comes. We are seeing good amount of the orders and opportunities from there when the time to come. That's the one thing, and I just want to correct one thing right now. When Varsha was talking, we never gave the margin guidelines of 19%. We always give the margin guidelines around 17% on the console basis, and we are right on target on this year also on that.
No, Fine, and I'm sure we'll come to the numbers, Mr. Rajoda, but when I heard you say that you were taking the opposite view, you are basing it on the premise that some of these things will reverse. What I'm trying to understand is, as things stand, are all these three things impacting you on a daily, on the business? On the sector at large?
Marginal basis. On a marginal basis.
On a marginal basis, you are saying. Okay.
Yeah, there was some export we had for the Middle East, which we were supposed to do in quarter 4, which we had to defer them for the coming quarters. All right, but those are very firm orders, so they are not going anywhere. Because if not this quarter, then next quarter we'll be exporting them out.
Okay. No, so your margin guidance was 16 to 17%, but your EBITDA margin last quarter was 19% or year on year was 19%. There has been a drop in your EBITDA margins in what you've reported in Q4. Isn't it, Mr. Rajoda? Very good morning, Tamanna here. And I just want to understand if your FY26 execution guidance has also come a little short at 2,500 crores versus 2,600 crores. Because Q4 is before all of the Middle East trouble.
Tamanna, morning to you. First of all, understand one thing that in quarter 4 this and quarter 4 last year on the margin side there is a difference, right?
Okay.
The difference is this, that this year we have given a sizable amount of the ESOPs to the employees, stock options, and we have to make the provisions for those ESOPs from this year only. And that is impacted on our book as compared to the last year, right? That is the one point which I would like to clarify. Yes, we had given a guidance of around 2,600 crore rupees, and we have closed around 2,510 crore rupees. There's a slightly gap in that. And the gap is particularly, there were around 90 odd crore rupees or 100 odd crore rupees were supposed to go to the Middle East, which we have not shipped because of ongoing conflict.
Okay, I see. Though the Middle East conflict would have started after you have put these numbers in place, it would not have been in the Q4 period, right? Because if I'm not mistaken, the Middle East conflict started after.
No, Middle East conflict started somewhere in February itself. You know, so
okay, the lag period which has come. That is actually an important insight, Mr. Rajoda. Thank you for sharing that, because if that few days of Q4 and the start of the Middle East conflict has had this kind of an impact, what are you expecting to see in Q1? And I know you talked a short while ago about the short term and the long term, but if I'm looking at quarter 1 specifically, do you think that the major hit has been taken there?
So look, on the quarter 1 side, if we see that those particular number of transformers which were supposed to send it to Middle East, we are now taken back into this quarter 2 of coming year, because we see that this is going to take some time to settle down this issue. And on the quarter 1, our major focus is on the indigenous supplies and electrical arc furnace transformers, which is our key product, which we have made for the ArcelorMittal Mexico, is going now.
What is the exposure to Middle East in total, if you can just give us some sense? And now, is there a delay in orders? Is there a rerouting? Is there different routes you're looking at? Or what is the status there?
So, understand one thing, there is no reroute for Iran and Iraq. You have to route them from the same routes what they are there. It is that. The orders has been stopped for a while from the Middle East by and large by everybody, and everybody wants to see, since this issue settled down, they will go for the new orders and all this thing. Supplies also, not only us, everybody has stopped the supplies. That once things will come down, we will definitely go for the full-fledged supplies to all these places. We don't have much order book right now with the Middle East. If you see that whatever orders we have, the transformers are almost ready to ship. As soon as we'll get the window, we'll ship them out.
How much can you quantify that, please, sir? When you say not much, how much is it?
Say around $8 to $10 million of the transformers.
And proportionally, what is the percentage of your total orders right now that is impacted?
This is not even 5% of my order book, not even 5%.
Okay, but that is to the Middle East. What about orders that you have to ship using that Strait of Hormuz?
So there was no orders which we were using for this particular route.
Okay. Speaking of orders, Mr. Rajora, I want to talk about that PGCIL HVDC repair order. It's being seen as a big milestone. But what are the timelines and what is the execution plan for this one?
We already started execution on this, and though we have significant time from the PGCIL, but we wanted to finish it off in 6 months' time so that we can go further and get the new orders from the power grid for HVDC.
Rajora, just from the way that the market is seeing, and okay, I take your point when you say that you expect this to be short-term headwinds that will pass, and fine, I'll take that point. But the way that the market is looking at it is all transformer companies, not just yours, the stock prices have come off. And in fact, those companies that have inputs that you consume, and I'm talking about transformer oil, those prices have gone up substantially because the expectation is that their earnings will go up and your earnings to that extent will get impacted because of inputs going up. Specifically on transformer oil, what is the kind of impact that's going to have on earnings, at least in the short term?
Alex, look, first of all, you need to understand these are the market sentiments, right? Investors see it in a different perspective because they feel that this is going to be a problem for us, but we feel in a different manner. You know, oil is almost 4% of our entire raw material requirements. So if it increased by even say 0.5%, it does not make much difference to us. And just short-term phenomena when the companies try to leverage off or the producers, manufacturers try to leverage as, okay, supply is not there, will increase the pricing and all, but ultimately at one point it has to come down. So not only for us, for the whole transformer companies, it is not impacting that much what actually has been taught.
Mr. Rajora, then you have to give us a sense of what actually the case is, so that when there is clarity and if the market is hearing from the management itself, then it can take a decision on the pricing with a better set of information. So if you're saying that there is not much of an impact, can you quantify that?
Alex, please understand one thing that, the pricing, in fact, whatever comes, we always, when we do our pricing, when we do our raw material pricing, we always take 1 or 2% here and there volatility in place, right? As far as oil is concerned, as I told you that from the total entire raw material, oil cost us 4%, right? It's not that transformer oil has got doubled. It has not got doubled. It is just an increase of around 10 to 15%, which has been happened. And if you see in overall perspective on my raw material, not even a 1% effect has come up. And not only to us, for everybody, it has not come up. So this is it's the thing is, it's not only the Iran which is giving us the material. The government has already sought so many options, and they are working on those things. So I don't think that this is going to be, it is a big issue. The issue is that yes, the short-term impact is there on the oil, but also on the supplies to the Middle East countries. But one also has to see that what is after the conflict finished. There is a good opportunity coming up for everybody from all these countries.
No, Mr. Rajora, no doubt that the transformer opportunity is here for the long term. What we are trying to do is assess that how strong and for how long can the short-term blip be, and which is the essence of this conversation that we are trying to get from you. That yes, the opportunity is here. So, sorry, no, just let me just finish my question. My question is this: that as things stand, the conflict is on. If this were to last for a better part of May and June, could it be realistically possible that the margins, the revenues, etc., for all transformer companies, not just you, be very much impacted for the June quarter?
No, Neeraj, I don't agree with you.
I'm asking you.
Yeah, the only thing which will affect or which is affecting is the oil pricing, right? Other products are coming from the different channels. Right, so the margins are not going to impact that much. as I said that when we plan our profitability things, we keep those volatilities in mind. Okay, this is a different kind of volatility or phenomena, but it will not impact the overall margin, not even 0.5%. I can say the companies will get effect.
Just want to understand what is the kind of US opportunity that you're seeing, Mr. Rajora, right now?
I said, Tamil post trade deal announced, US opportunities are coming up quite good.
Yeah.
And quite a lot.
Plus, there's news today that their 10% tariff has also been knocked off. At least one of the ports has knocked off. So, because we've been spending a lot of time on Middle East, I'm wondering how this opportunity is working out.
Yes. We are, if Tamanna, if I tell you as of today, when we are talking about, we almost $200 million negotiations going on at a different level in USA. And we see them coming up converting them into the orders very soon. And the opportunity for the transformer industries is from the next year also onwards is going to be quite huge from the US, because US is also now starting from the replacement market from 2027 onwards. And they don't have any big power transformer suppliers or inverter duty suppliers other than India. So that's the opportunity is sizable, is going to be come up, and all companies are going to be benefited with that. And not only for the transformer companies, but all power sector companies are going to be benefited when the replacement market will start coming from US.
What is the timeline you see for this?
Let me complete, Tamanna. Let me complete one. Yeah. At present, the biggest requirement which is coming from US is the inverter duty transformers and the data center transformers. These two things. And we expect that in this particular year only, we should get quite a good amount of orders from US for this, particularly these two sectors.
So there's a 12-month timeline which you have in mind when you're saying in this year itself?
Yes,
or
you
faster?
can say 6 to 12 months time. 6 to 12 months time.
Okay, thank you, Mr. Rajora, for coming in. We always enjoy speaking with you because you take all our questions, and we love sort of having this kind of an interaction which is open and transparent. That is what we always enjoy.
Nice talking to you always. Thank you.
Okay, Transformer and Rectifiers, very detailed conversation there on everything that's going on with them. But let's talk a bit about Arvind. They're making a strategic move with the acquisition of Dalco GFT, gaining control of a profitable US non-woven fabrics player. What is this all about? Why is it important for Arvind? Why is the stock not really reacting? Let's go across to Mahima for more.
Right, so overall, Tamanna, it's a good news only for Arvind Limited. What they've done is they've gone ahead and the wholly owned subsidiary, that is AAML of Arvind Limited, has gone ahead and acquired 61% controlling interest in US-based Dalco GFT. The deal is valued at around 7.75 times EV to EBITDA, amounting to around $136 million. It is both margin as well as EPS accretive as well. Just a brief about what this company does. It basically is a US-based manufacturer who specializes in needle punch non-woven specialty fabrics. They have reported a top-line CAGR of 10% in the past 6 years. It is, right now at a top line of around $100 million and at around 17% EBITDA margin and a 40% ROCE. The acquisition is margin accretive as well as EPS accretive for the ultimate holding company, that is Arvind Limited, and has also 2 manufacturing units in the US. Now, what does this mean for Arvind? Basically, it provides them with a massive, total addressable market in the US, which is around $2.25 billion. Expands customer base as well by 75 plus active customers and 88 plus sole source positions as well, and adds 3 more sectors to their overall portfolio, that is automotive, furniture and furnishing, and construction as well to their existing profile. So this is the overall view of what this acquisition is, what this means for Arvind Limited as well.
Got it. All right. Thanks so much, Mahima, for that. Now, there are a few social media posts that are going around. One in particular stood out to me. There's this screenshot, guys, of a tweet saying coronavirus ends in 2022 hantavirus starts in 2026. So there's a lot of fear-mongering going around, and it's important, therefore, to get a conversation going with the experts. Now, what are we talking about? Hantavirus cases have triggered health concerns across the globe, but what is it? It's a rare but potentially severe viral disease carried mainly by rodents. Humans are affected through inhalation of dust contaminated with rodent urine as well as droppings or saliva. The World Health Organization has confirmed 5 cases of hantavirus linked to deaths aboard a cruise ship in the Atlantic Ocean. And in fact, let's listen into what Dr. Tedros Ghebreyesus, who's the Director General of the World Health Organization, had to say about the hantavirus cases.
So far, 8 cases have been reported, including 3 deaths. 5 of the 8 cases have been confirmed as hantavirus, and the other 3 are suspected. Given the incubation period of the Andes virus, which can be up to 6 weeks, it's possible that more cases may be reported. While this is a serious incident, WHO assesses the public health risk as low.
Okay. Should you be worried about hantavirus? What really is happening with hantavirus? Dr. Rajiv Jayadevan, Convener Research Cell, Kerala State at IMA, joining in to speak more about this. Dr. Jayadevan, thank you so much. Tell us first off, is this a situation which needs any concern and degree of concern? From what we're reading so far, it does not transmit that easily.
Upfront, I will say this is not another COVID.
Okay.
COVID was an unknown virus in 2020 that nobody knew or nobody had seen or read about. Whereas the hantavirus has been well known to the scientific community for over 35 years. And this particular strain of the hantavirus, which is Andes virus, has been well described over the past 30 years, 30. So this is not a mystery. Now the question is, are we concerned? Yes, we are concerned for the people who are stranded on the ship. There are about 150 people close to that. And we are also concerned about the 40 people who have disembarked the ship as the outbreak was going on. So that is, these are the 2 areas of concern. But if someone is saying that this is a new virus that's going to spread around the world, it is not. This is not a fast spreading virus. Hantaviruses generally are considered a dead-end infection. Basically, it means it circulates freely among rodents or various types of rats. But accidentally, very rarely, humans, when they're exposed to rat dust, as was mentioned earlier, they can get infected, but their infection stops with that person. But the Andes virus is one of around 30 to 50 types of hantaviruses, and that happens to be the only known hantavirus that can actually spread from human to human. But under exceptional conditions, for instance, close and prolonged personal contact, as in the case of a caregiver, spouse, person who's sharing a very closed space for a long period of time, as happens on a cruise ship. Remember, a cruise ship is an exceptional situation where many people are in prolonged contact with each other. They share the air, share the ventilation systems, share eating spaces, they talk. And this particular this particular cruise ship is special because it has people who are on a wildlife expedition, so they get off and on the ship frequently, and they talk amongst each other. They hold sessions. They have classes.
Are they, Dr. Rajiv, are there any known cases on that ship heading towards India?
There is no known case as far as the official announcements go. It appears that they're all in quarantine, which basically means they're in isolation to make sure there is no further spread. But remember, the spread started sometime in the first week of April, and it has a long incubation period. So even if someone is not showing symptoms now, that can happen anytime in the next few weeks. So that is a matter of concern. A person who seems apparently well now could turn out to have the infection later. There could also be false alarms because a common cold is a far more common problem than a hantavirus infection. We saw the flight attendant who was tested for suspected hantavirus, and she turned out to be negative. So there will be a lot of false alarms as well.
It manifests as a common cold. Thank you so much, Dr. Rajiv, for speaking with us and just clearing that up. We thought it was important to inform our viewers about what they're seeing on social media and whether that's actually a concern. And that's really the last thing that the world needs. But it's good to know that it does not spread like COVID. And very clear statement coming in: this is not like COVID. Yeah.
Thank God for small mercies.
Yeah.
I agree. In fact, so therefore, let's go back to what you need to watch out for. And earnings, of course, front and center. We've spoken about all of the earnings that have come through. But Titan expected to post its Q4 numbers as well. And Mahima is joining in to tell you about what the street is penciling in. Mahima, what are the key numbers to focus on?
Right, so Alex, Q4 business update did suggest a strong growth yet again for Titan, and this time we've seen both volume growth and bar growth. So I think the numbers that we'll be watching out for in terms of operational metrics is going to be the bar growth and volume growth in terms of percentage. In terms of the numbers, revenue is expected to see a growth of around 26% as per Bloomberg estimates. EBITDA may rise around 34%. Margins will be around that 11% mark, which has been the case in the last so many quarters. Net profit may rise around 46%. As far as the business update goes, just to give a recap of that, consumer business saw growth of around 46%. Domestic business saw growth of 42%. Jewelry growth at 46%, where like-for-like growth stood at 48%. In terms of watches, the overall growth was at 7%. Eye care was at 16%. Emerging business has also seen a strong growth. And as far as international business goes, overall growth stood at 156%. North America business grew 50%, and Middle East business, of course, did see an impact because of the West Asia conflict. So this is the overall view. So I think key things that we'll be watching out for will be volume growth, one thing, buyer growth, and the commentary coming in on West Asia conflict, and that impacting their overall the mass acquisition that they've done. So this is the overall view of what you can expect from Titan.
Also Tata Consumer, and you're having a busy day, Mahima, because there's so much to track, not just the results that have come through in the way of Dabur and Britannia, as well as Pidilite, but there's more. There's Tata Consumer. What would you expect from that?
So for Tata Consumer also, it's going to be a strong quarter. That's what at least the estimates are suggesting, because revenue might see a growth of 13%. EBITDA might see an uptick of around 21%, and net profit a growth of around 18.5%. Margins might also improve slightly because the expectations are that the tea inflation has stable a little bit, but overall in terms of what to expect, strong revenue growth potentially in double digit. India food business is expected to show a significant amount of growth, likely to maintain healthy volume on the back of tea and salt business as well. Acquisitions yet again to aid business growth and digital first, because these are digital first acquisitions as well. Key things to watch out for, I think the impact of pricing intervention in international markets is something that we'll be watching out for Tata Consumer, plus the impact of West Asia conflict and price hikes as to how much have been taken, how much will they take in Q1, and overall impact on volume. So this is the overall view of what you can expect from Tata Consumer.
Well, thanks for that, Mahima. Now, SBI is set to report Q4 numbers as well. Shivam, what should one expect from them?
Well, yes, the first key highlight points are the margins, which are expected to be at around 3%. And if you look at the deposit repricing thing, that the impact of deposit repricing has also been a key monitorable, as 75 to 80% of the deposits were already repriced in Q3. So their impact in Q4 remains a key monitorable. Now, on the provisions front, there isn't much impact expected, and on the back of that, the credit cost remains. Credit cost is expected to remain stable. Now, however, in terms of treasury income, due to higher yields, elevated yields, we will see a lower treasury income. On the cost of fund side, it is expected to be stable, while the asset quality is expected to improve a bit, with a return on asset to be stable near 1.1%, and advances growth is likely to be led by SME and corporate segments. Also, if we talk about the GNP and NPA ratio, improvements are expected in those, and profit is expected to be at 18,800 odd crores, and NI is expected to be up 9% on a YOY basis.
Okay, we'll take a very short break. We're coming back with a lot more on the other side, including understanding why markets are so cautious right now. Stay tuned. All of that action when we return.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
All right, welcome back. You're watching India Market Open. Let's pull up the benchmark Nifty 50, and it's been about an hour or so since the start of trade. We're off the low point of the day, certainly, but cuts of about 0.5% for the benchmark Nifty 15. You were seeing a little bit of resilience in the broader markets. That continues to be the case. You are trading just about flat for the mid-cap index. The small-cap index is where you're seeing the real resilience because it's up about 0.2%. It's off the high point of the day, but still treading water in the green. So the breadth continues to remain relatively robust. Let's go across to Varsha now to talk about KP Green and KPI Green, which has capped off a strong quarter with sharp execution as well as margin expansion. Let's find out what has worked for the companies. Varsha, take it away.
Well, I would say for both the companies, that is KP Energy and KPI Green, the revenue growth was well on the upper side of guidance, I would say. Well, for starting with the KP Energy, the revenue growth was led by sharp execution ramp up, and the EBITDA growth outspaced the revenue growth, showing scale benefits. Higher EBITDA and operating leverage flow to bottom line as well. And growth for FY26 was at higher end of guidance. Now, talking about KPI Green, well, the growth was driven by faster project execution and scale up, and the margin was stronger and better project mix, and of course the operating efficiencies. Overall, company is also entering into BESS, green hydrogen, and lots of capacity expansion is also taking place. So overall, a good set of numbers, and yes, the numbers were on the upper side of the guidance. Now we need to watch how will FY27 pan out for the company.
Got it. All right, we're joined this morning by Dr. Farooq Patel, who's the Chairman and Managing Director and Promoter of the KP Group. Mr. Patel, always a pleasure speaking with you. And let me start, of course, by asking you about the guidance that you had, the 50 to 60% range for KPI Green as well as KP Energy. The question is, how does FY27 pan out? Because there are certain headwinds that are coming through, things that are not necessarily under your control.
Everything is going in a very good momentum. Thank you very much, and very good morning to you, all of you. All results what we are giving is not only the result, is execution on the ground actually, and you can see by 26 and 25 trajectory, it is a 40% in the KPI and the revenue, 55% KP Energy, KPGL 64%. It shows the confidence, it shows the work, what we are doing on the ground for sure. Whatever comes up or whatever comes as a hurdles, we are crossing them and we are doing our best and giving the results year on year, dear.
Okay. So therefore execution has gone well. The numbers look good. Again, I'm just wondering, in the first quarter, some of your peers are being a little cautious because they don't know what the extent of this geopolitical crisis will be. So if you look at your own companies and you think about what the external front exposure is, do you anticipate any issues at all?
See, KP Group has a different type of business. If you can understand, we are not exporting anything, and what we are importing, that is we are only the company who are doing all the work from the India. So very less impact of the geopolitical on our company for the new orders and the execution part also. So as such, we cannot see any problem over here in KP Group, because see, we have the order already altogether in a KP Group is 8,525 megawatt already in our hand, you can say. And the thing is KPI 4,627 megawatt in our hand. KP Energy, we have the 2,162 in our hand, and all of this order is unique and distinct. So there is nothing interchange or something like that, and it is going to be happen in next 1 or 2 years. You can see this year's we gone up to 2,742 in KPI. We gone 1,506 in KP Energy, 1,250 in KP Green Engineering, and still we have an order in hand of 4,500 crores, 3,000 crore and 1,800 crores. So 9,300 crores order in hand, which going to be executed in next year and after that also. So this year we have crossed as a group wise, we have crossed 5,400 crore rupees. But next year also order 9,000 plus crore order in hand, which we are going to be execute. So there is nothing what we are watching in a near future which geopolitical can disturb us as a KP Group.
Got it. Mr. Patel, good solid growth. I'm tackling it company by company, but one of the companies, which is KPI Green, you've reached circa 2,700 crores and expanded margins, I believe about 1,000 crores of operating profit. Is there a formal guidance that you're laying out? Your order book is there, but is there a formal guidance that you're laying out for FY27, let's say for KPI Green?
Of course, KPI Green is, we have the 4,500 crores order in our hand. And all together in megawatt, if you say, because we are in a solar and KPI, so 4,627 upcoming projects which order already in our hand. And that's not a small order. The Coal India and NTPC and the SDVN, like that companies order what we are executing this year also. So that is a guideline also. You can see what we are. This year we have crossed the EBITDA 1,000 crore, as you say, rightly says, and cash profit is 788 crores, and PAT also 509, which is a remarkable what people on the field they are doing, and order is in our hand. So we are guiding the people or our company that 27 will be more good than this year also.
Mr. Patel, sorry, it will be better than FY26 for sure, because you have the order book. But what is the execution? I mean, from 2,700 crores, is there a formal guidance that you're giving for growth? 25%, 30%, 40%? Is there a number?
See, we always says that we are going 40 to 50% all the year till 2030, and we are committed to that, and we will do it. And team already got the 3 gigawatt experience now, you can see on the board also, which is declared already. So company is now in a different trajectory for sure.
Okay, Mr. Patel, one final industry-related question. We are hearing that the prices, the input cost prices for you are actually coming off because a lot of manufacturing companies of solar panels, etc., have a lot of inventory. The Q4 numbers of Vari, some of the others showed that there was inventory at hand for them. Are you seeing a price reduction in solar modules, which are an input for you?
It is there because because of the geopolitical situation, early question were that it will be the reverse. To us, it will be the benefit for the India because the nothing is going out of India. So there is a big capacity lying on the manufacturing of the panel and the wind also. So people, of course, we will get benefit as a developer.
Got it. Okay. Mr. Patel, thank you so much for taking the time out and all the best for that 40-50% growth targets. Wishing you good luck.
Thank you very much.
All right. Let's get across to Britannia Q4 earnings con call.
Talking about e-commerce for the last few quarters, and what we see is that we are building this momentum and acceleration for the last few quarters. So just to share a few more points, almost 70% of our business today is coming from the quick commerce part of e-commerce, and how we see this is further moving up to 85% because, as you know, Amazon is scaling up their quick com model as well as Flipkart. Now, the big upside of this is that there is a big change in the assortment. While on the marketplace or e-commerce platform, we were very heavy on staples. What's happening because of this change in quick com is that we are able to premiumize our assortment and we are able to sell much more indulgent categories, and that's the impact which you see on the right hand side, which is adjacencies growing almost 3x. So going forward, what we are doing is we are collaborating with platforms, we are getting used to their playbook, and therefore activating a lot of our brands through their playbook by close collaboration. So I think going forward, the 6% you will see moving up, as well as the assortment towards premium as well as impulse will keep growing. Yeah, Rakshan.
Thank you, Vipin. So let me continue with the next slide, which talks about key brands and products on air. So you would notice that in the last quarter, we have been on air with the variant of our 50/50 brand, which is cheese dipped. Also a variant of Marigold, which is the Doodh Marigold, which was launched across select markets, and also Good Day Butter. This was complemented along with multiple consumer engagement and brand activations, which covered Tiger Crunch, Treat, which is our wafer brand, also Croissant and Jim Jam. And as you would know, Croissant is a very exciting category, doing very well for us. If you take a look at the adjacency business, if you take a look at the cake Fudget, this is really a Gen Z focused brand. We have promoted it significantly during Valentine's, and we can see that there is significant growth in that, and it becomes an impulse kind of a confectionery kind of a purchase. So wafers continued growing healthy double digit. Cake and rusk, high prevalence in e-commerce, driving growth at about 1.4 times of biscuits. We have successfully scaled up our brownie, also very well accepted by consumers. Dairy business also double-digit growth and fueled by ghee, which has done excellently for us in the last 1 year. Also, our innovations have gained traction. So the cheese dipped, the 50/50 cheese dipped, and a variant of that, the caramel dipped, which we launched, which has been heavily advertised on TV also during the Indian Premier League, has already become the second biggest player in the sandwich cracker segment in 3 months of its launch, and continues to grow month on month. Also, we have what we call these are signature brands, Treat, Little Hearts, and Jim Jam. They are actually outpacing the overall company growth by about 3x. And as we see, and we continue to see growth in the coming quarter also. And obviously, to leverage this. The teams have innovation and
all right, so that was a Britannia con call. Those updates will continue at the bottom of your screen. This is something that the street is watching closely, and a bit of recovery in the stock actually from where it started. But overall, the fact that the management has talked about how the West Asia crisis is a bigger pain point for them than anything else, than even the LPG shortage, is something which is worth noting. Aditya Suresh with us, Managing Director, Head of Equity Research, India at Macquarie Capital. Aditya, welcome. Great to speak with you always. Why is Macquarie turning more optimistic on India? And why do you believe it's coming out of hibernation at a time when FIIs are continuing to flee and don't seem like they're coming back anytime soon?
To be quite candid, that note which you're referring to was from the start of the year. And since then there's been a change, right? So maybe end of Feb, early March, the dynamic was that we went back to our kind of guarded stance, if I may. But just to take you back to the framework and our thinking and why, right? Is that the key dynamic is, as you kind of point out, is at least the broader large cap market index. The theme which we think about is what foreigners are going to do, right? That's the marginal buyer here in the market. And the points we were making is that, at least as of early March, was that this entire earnings growth dynamic is still a challenge for India, at least within kind of index, because the broader point here is that you're looking at consensus expectations is sitting at about 15%, but within that there's an element of revenue growth of say 10-12% with some margin expansion. There is that testing for that margin, right? So, and in particular, as you kind of go through FY27, FY28, to the extent we do have that increase in fuel price and inflation, I think that margin expansion theses will be tested. And so the broader kind of headwinds that one is you have this earnings downdrift phase, whereas when you look at just three stocks in MSCI, which is Samsung, Hynix, and TSMC, which is now about say 26% of the MSCI emerging markets, those companies are in beat and raise mode, right? And combined cumulative market cap is at 4 trillion for those companies, and consensus is meaningfully lifting up numbers. But when you look at those stocks, they're trading at say 10 times earnings, right? When you look at consensus. And so that really is a challenge for India, which is that one is you have this earnings downdrift phase, whereas other parts of EM, you're seeing expectations being revised upward. At an aggregate level, this market multiple remains high, even though we don't have that growth premium and ROE premium, what we typically are used to kind of enjoying compared to other emerging markets. And that really is a challenge here for us to work through. Now, almost paradoxically, the glass half full version is that so ultimately we're buying and selling stocks. And so the whole point is that once the top-down index, it looks challenging, the same comment is leading to meaningful bottom-up opportunities, right? So I think the hunting ground, if I may, for these bottom-up quality kind of growth ideas, that's becoming more fertile. And even if I take you back to performance here in April, we've seen that kind of express itself in the mid caps. So it is a bit of a bipolar comment, which is that the top-down index, MSCI India level or Nifty level, it's still fairly guarded, challenging, not inspiring on a say 12-month basis, but bottom-up looking far more interesting.
Aditya, am I reading this correctly? What you're saying effectively is that while there is an earnings upgrade cycle there, at some point of time, valuations and the coming off of those earnings upgrade versus the valuation that India is trading at means that there could be some reversion to mean, if I can loosely use that term, and that could very well propel Indian markets higher?
To be quite candid, no, that's not what we're saying. So what we're saying is that like when I look at foreign selling, and foreign selling in March and April has been intense, right? It's almost worth the amount of selling we saw last year, which in itself was really high. And when we then think about why is that selling happening, in at least our minds, it's almost very, very clear as to why that's happening, which is that in other parts, you're getting more growth, better ROE at a meaningful discount market multiple. And so specifically looking at foreign flows as a kind of lens, we can see that challenge remains here for India to kind of work through. And the incremental point is that at least with India, you're not as yet seen meaningful increases in fuel prices. That's not yet in kind of consensus earnings in terms of margin kind of compression, which is an additional kind of headwind. So whether it be kind of foreigners remaining absent as a meaningful kind of participant, or it be kind of consensus earnings continue to kind of downgrade, it is a problem. You know, when I look at broader MSCI India or kind of Nifty 50, etc. The point I was trying to make was that when I look at then, let's say, these quality growth, mid-cappy kind of ideas, far more of those ideas are becoming more interesting, you know, because valuations had kind of meaningfully pulled back. So on a bottom-up basis, more interesting. Top-down, in particular the larger caps, which is kind of where a lot more foreign investors are kind of positioned, not an interesting outlook.
Aditya, I just want to understand, and you've already spoken to a certain extent about the earnings expectations in FY27, and I understand that quite a bit of this can change based on what happens with the conflict again. But if you say that FY26 was driven by that bottom line growth and margin expansion, that is clearly likely going to be a challenge in FY27. Is there any potential of volume-led or revenue-led growth?
So, Alex, I think the main theme that when I look at, again, MSCI India is roughly about 160 stocks. It's a fairly wide basket, and consensus is building in about 10 to 12% nominal top-line growth, right? This is an aggregate kind of comment. And underneath, and within, and then there's also kind of margin expansion on top of this, right? So therefore, net profit growth at about, say, 15. Volume growth in certain sectors has clearly surprised, right? Like, at least, for example, autos this quarter was a positive surprise. But when I think about what's in our expectations for FY27, FY28, there is a meaningful moderation in that growth, which at least our analyst is building in. So volume, I think, yeah, so we're still in the camp of maybe we get 8-10% kind of volume growth. Pricing, I think we will get that growth, or at least price hikes will kind of push up kind of how revenue line looks. But is that price hike enough to offset the cost inflation? We are seeing challenges there, right? Because as I say, it's got to be price hike and margin expansion. This is price hikes to kind of offset the fuel cost inflation, general cost inflation.
General cost inflation. Okay. So in that context, Aditya, and you mentioned that there are bottom-up ideas. Where would you be hunting if you were an investor looking to deploy at this juncture, and you had reasonable confidence in time frame to say that you're investing not for the next 3 or 4 months, but for the longer term?
Yeah, so there the framework which we kind of systematically use is this kind of Trinity framework, and we have this best ideas kind of list as well. And effectively what we're trying to do there is looking at, on a bottom-up basis, where do we have conviction of revenue growth, let's say at close to about 15%, with margin expansion, with free cash flows, right? So those three kind of broad brush kind of comments. And where we are finding that is in areas like hotels, is in areas like EMS, right? Certain auto ancillary companies, we are kind of seeing that. But it's a very bottom-up specific kind of comment, Alex, than it being broad brush, say, financials or industrials, any of that. It's very selective. But so names which we like, for example, in that same mid-cap list is names like, say, Delivery, which is in third-party logistics. We like Avalon. We like Amber. We like Lemon Tree Hotels. So these type of companies. So there's no commonality between those, apart from the fact that we are confident that there is revenue growth at, call it about 15%, with a margin expansion story and underlying good free cash flow generation.
If the Bay Club was listed, Aditya would say that I love Bay Club as well. But that's another level. Aditya, we are out of time completely on today's show, though, unfortunately. But thanks so much for taking the time out and being with us today.
Thank you.
All right. Well, the markets, about a 0.33% or thereabouts low. So nothing too dramatic. Nifty IT, actually, incidentally, just before we wrap up, if you can pull up the intraday of the Nifty IT, that one is actually doing well. This week, you have to admit, Wednesday, Thursday, Friday, IT stocks have actually done really well despite all of the issues surrounding the sector. But we call it a day on this leg of India Market Open, at least. So from Tamanna, Alex, and me and the team that put this show together, thank you so much for tuning in. But stay tuned, because Ask Profit is up next, and the three of us and Hiral will be back
for the editor's cut at 3:30.
Yeah, and on closing as well. So you'll see a lot of us today, but if you want to know what's happening with your portfolio, stay tuned after this very short break. We'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Good morning and welcome back to NDTV Profit. We're now in conversation with the management of Greaves Cotton after reporting a decent set of numbers in Q4. Revenue grew 21%, EBITDA up almost 48%. But post that, it's not translated into profitability growth as well. So let me pose all these questions as well as what he thinks of the company's future in FY27 to Parag Satpute. He's the managing director and CEO of the company. Mr. Satpute, thanks so much for joining in. Firstly, let me start off with this, right? Because growth across your key verticals like engines as well as electric mobility has been quite strong in terms of revenue, but hasn't translated yet in terms of profitability. If I look at Q4 as well as for the year, how do you review this period? Because there have been a lot of measures that you've taken over the last 2 years, which has continued in this year in terms of brand building for the electric business, as well as your engine business as you continue to grow the legacy one. So can you give us some perspective of how do you review the performance in FY26?
Indeed. Thank you very much for having me, Puneet. Pleasure to chat to you today and to share with you some business results for Greaves Cotton Limited. Let me start by saying that FY26 was really a defining year for our company. We moved from defining the strategy under Greaves.next into execution. And I'm very happy to share that we have seen good business results. Our consolidated revenue grew 22% for the full year, as you noted. Also, and one of the good things about this was this growth was broad-based. It was across all our sectors. Within the core businesses, our energy solutions, our mobility solutions, and industrial grew, and the investee businesses, which is the electric business largely, also showed a very strong performance through the year and in the quarter. All of this is, of course, focused on execution and delivering according to our strategy, and we believe that we can continue with this momentum going into the next year. Another important thing for us this year was to see that our focus on international business is also paying off. So the contribution of international business to the overall revenue of the core business has moved from 9% to 13% during this year. Again, very much in line with our strategy. And I'm also happy to say that all of this is translating into better margins. So if you look at the full year results, consolidated results, our margins have improved significantly. And even at the business EBITDA levels, margins are steadily improving. Now, finally, to your question about the Q4 results and whether there was some exceptional item there. So during Q4, especially, we took a view of some of the investments that we have made in technology. And one of those investments, we have decided to take a exceptional write-off, which was we could not see it translating into a commercial business in the short term. But it's a one-off item, and it in fact helps to make our foundation even more solid, and we can see a continued execution in the coming quarters.
Mr. Satpathy, thanks so much for addressing quite a bit of those key aspects, because the last 3 years before FY26, so between 23 and 25, your revenue has actually largely been stable at that 2,500 to 3,000 crores in terms of revenue. You now cross 3,500 crores, but the profitability essentially has been very, very volatile, right? Because FY24, you had that big loss of almost 300 crores. Last year was also loss-making, but reduced that materially. And this year, you've done a 35 crore of profit. So given the potential, because of 1% PAT margins of so much investments into engines as well as a new brand, doesn't quite justify the current, the numbers that you're showing right now. So just if you can give us a medium-term perspective of what's the outlook that you have for profitability for the next 2 to 3 years, and what would be the measures that will be taken to ensure that profitability?
So Puneet, you pointed out yourself that it has been a steady improvement from FY24 to FY25, and now for FY26, it's a significant jump up. So as you can see, the trajectory is in the right direction. We have been working very diligently with all our businesses, and the results are starting to show. So we believe that we are on the right path. During FY26, we also further pruned our portfolio, made sure that we are focused on segments and products where we have a strong right to win and where we can have a price premium, and we are continuing to execute on that. So we believe that this steady growth we have had also in margins will continue. And now that our top line has also started growing, we can see that a lot of that will flow into the bottom line as well.
In terms of your electric mobility business, that's the other key factor, that almost for 3,500 crores of revenue, that's 786 crore for this year. You've reduced your losses from last year now down to 180 crores. But could you give us some perspective if this business currently is EBITDA break-even at that level as of now?
So the Greaves electric business has also seen a very strong year. As you can see, their revenue has increased year on year by 19%. But even more hearteningly, their volumes have been very, very strong. And the market share has gone up from 3.3% to 4.4% this year. And actually, we are in the top 6 electric two-wheeler manufacturers. So once again, a very strong performance in terms of operational execution. The company has, of course, filed for a DRHP for an IPO. and they are working diligently to continue this strong execution.
Well, that was the management of Greaves Cotton there, and they highlighted to us as well that the Greaves Cotton business will now, of course, the electric business has filed for a DRHP, so that will be listed separately and hopefully reduce some of those losses as well. But welcome back to the show. This is Ask Profit, of course. My name is Puneet Zaveri. With me is Mahima Vachajani, and we'll start taking your stock-related queries now. So if you haven't already, do start sending them on the WhatsApp number that's flashing on the top of the screen. You can also call us as well. But a very quick check of the markets as well, because we've seen today that in terms of the Nifty 50, it's been slightly more sluggish as well. So we're down to 24,230, continuing to maintain 24,300 as a key level to watch out for, at least in the near term. And we said that in the FNO setup today as well. But the overall breadth of the market has been led by some individual movers. So the mid cap and the small cap index has been doing relatively better, to say the least. It's in the green for now, up 0.10%, but and small caps up 0.3%. And the BSE 500 though, that's where the real reactions are coming in, at least for results today. So First Source Solutions up, Craftsman Automation again up 10%. Stock was up almost 10% yesterday on the back of results. So is Thermax on results. Sonata Software, the quarter wasn't the greatest, and other income helped the company reverse almost 30 crore of an impact compared to quarter on quarter. But stock's still up 8% at this point of time. Metropolis is up, so is Finolex as well. But on the losing side, Britannia is one of the stocks that's bearing the brunt today on the back of weak results. Escorts is a similar one as well. But apart from that, so most of the stocks in the gainers are moving in terms of the results reaction today as well. But let me welcome in our guest for today, Sameer Dalal of Natwar Lal and Sons Stockbrokers, as well as Somil Mehta, Head Alternate Research at Mirae Asset Share Khan. Sameer, I know already why you're laughing. I hope I got it right this time around. I have been practicing.
It's high time you get it correct.
But I hope, Sameer, it was correct this time around.
That's absolutely correct. The pause before the...
I took the pause. Yes, I took the pause. I knew that you would notice it. I took the pause just in time for that. And hopefully that does redeem some of my skills at anchoring at this point of time. But Somil Mehta, Head Alternate Research at Mirae Asset Share Khan, also joining in. Somil, very good morning. Welcome to the show. Just go across and take the first question in. This one's from Rohit Mahajan on Zaggle Prepaid Ocean Services. He's holding 245 shares at 331. Now he's asking if she should average down now at this point of time. Somil, on this particular counter, what would you recommend? He's currently sitting on a loss.
Yeah, I'll be positive on the stock. In the short term, not in the medium term. My short-term target should be around 280 and 300. These are the two targets. Keep a very strict stop loss around 247, 245. I'll be positive on this stock. It has broken out of an ending diagonal pattern and bounced back very sharply. Now it is consolidating around 20 and 40 daily moving average. So positive setup, buy on declines.
All right, so that's the view on Zaggle. The next one that we have is on BASF. Nihal Mohandas from Mumbai is asking about this counter. He says, he's asking, by the way, whether he can invest at the 3,900 level for the next 1 to 2 years. Sameer, any view by any chance on BASF?
Yeah, we do have coverage on this and we are positive. The problem is valuations are a little bit on the higher side. Apart from that, we believe the entire sector is turning around. You will see prices moving up, which will allow realization, so top line to grow. Given they're integrated vertically to a little limited extent, but they are vertically integrated, they would be able to get the benefits of those higher prices. So profitability too would see a slight bit of an uptick. But like I said, 1 to 2 years might be a little short, but yes, positive. If you have a 3 to 4 year view, I think the stock will give you at least anywhere between 12 to 15% CAGR return.
Got that view, Sameer. But the next question now coming in, it's on Sign Life Sciences, and A.K. Balla, who's a regular viewer of the show, is holding shares at 1,038. So he's currently in profits and he's holding 400 shares at that. So asking what he should do with this counter now. Somil, would you recommend him to book some profits or completely exit the position? What would you recommend?
No, I think you can hold on to the position. Keep a trailing stop loss around 20 daily moving average, which is 1027. A good stock to be in. It has broken out of a huge triangle pattern around 200 daily moving average. It has started a new move up. I'll be expecting much higher levels. Probably in the medium term, I'll be looking for 1200, 1250 levels. So hold on to it. Keep trailing the stop losses.
Okay, all right. So that's the view on Sai Life Sciences. We've got Udit calling us from Mumbai. Udit, a very good morning to you. What's your query about?
Good morning, Mahima. You got my name right this time. Good morning, Samir. Good morning, Puneet. My question is on Ludlow Jute. I don't have it. I am contemplating of buying it, but it's going on circuit by circuit for the last few days. Is it a good time to buy now, or look for an alternative like Sive or Gloucester? Fundamentally, which one I should go for? A jute company.
So, Udit, unfortunately, this is a 360 crore market cap company, and the problem with these micro cap companies is that you'll keep seeing these circuits because of the liquidity issue, right? So it's difficult to get a fundamental view on this one. Samir, I'm sure you'll not have a view on this one. Is that correct? It's a very small company.
I don't have a view on jute companies at all. So.
Yeah, and I mean, if I'm not wrong, it's also advisable to not reach out, like go ahead and invest or trade in these micro cap companies as well. But having said that, if you've asked, we'll try to get a chart view on this one. Somil, if you'll be able to give any view on the charts as well.
It's a little difficult because it's very difficult chart. But yes, on the upside, it has broken out of a few positive patterns, trading above averages. However, it's circuit to circuit. Yeah, either it is circuit to circuit down or circuit to circuit up. So my view would be that it will go up till 410. Probably very quickly because it's already moved up. 410 would be my target. I don't want to give a bigger target than that. But yes, positive on this stock at the moment.
Got that view and appreciate you giving a view. There's Somil as well. But go across and take the next question on Sagility. Kamlesh from Delhi is asking us this question, and he's holding shares at 42.75. So he's in profits right now. And he can hold on for the next 1 year. Samir, what would you recommend? Is it a good time to continue holding, add a little more position, or the existing one suffices at this point of time?
No, I would say hold on to the stock, right? The space that they are in medical softwares and things like that, we believe the opportunity is quite strong there. If you look at the valuation, Sagility, ever since its listing, has of course no doubt doubled. It's gone up from 22 or 23 or whatever it was at the bottom to about 50 and then corrected down to 42. But 20 times earnings is not very expensive. We believe growth will come. Yes, the entire space is going through a bit of a challenge, but I think this is a stock that will be able to grow over a period of time. So 20 times is not expensive when you're paying for growth. I'd say stay invested for a year.
Okay, all right. So that's the view on Sagility India. The next one that we have is on Symphony. Malika has bought 100 shares at the levels of 860. She wants to know whether to hold, add or sell. She's not mentioned the time period. Somil, your view on the charts for Symphony? Symphony Limited is what we're talking about.
Symphony, just give me a sec.
Yes, if you can try to pull that chart up, Symphony Limited. There you go. It's trading around 1.5% lower today. Yeah. Did you get the charts? Yes. Go ahead.
Yes. Got it. Yeah. Symphony, my view would be negative at this point of time. In the short term, in the medium term, both trading below 20, 40, 200 daily moving average. Broken a upward sloping trend line on the downside. So trend is down, broken trend line downside. So the setup is negative. I would not expect this stock to go up in the very short term, in the medium term as well. So my targets would be around 730 and the previous swing low, which is 685. So my targets will be there. So I'll suggest to exit or stay away from the stock.
Got that view, Somil. But the next question coming in on Enviro Infra Engineers now. And our viewer, Hemendra, has actually bought 1,400 shares at the IPO price. Now, his question largely being, what should he do for the next 10 years or so? What do you recommend here, Samir, on these water plays? There are a few now that are listed. What's a very long-term view on the stock now?
Okay, so this is a company we don't cover, but I like the fact that he has a 10-year view. I wish I could give an answer for this one because you rarely get people who ask this long, for this long of a period. But having said that, on the water kind of space that you're talking about, I don't even know what Infra does. So I've never studied this company. But if you're asking if it does water purification and all of those water treatments and all that, that is a space that's going to grow immensely over the next 10 years. If it is in that space, if the valuations are not too expensive and they are able to grow their business competitively with good profits, it's not only about profits, it's also about cash flows, right? Because this is a very capital intensive business. So look at those kind of things and then decide whether you want to stay invested. But I have no coverage on it.
It's more in the water as well as the wastewater treatment plants, water supply projects as well. So Samir, you're right about that key aspect as well. But that's the one on Enviro Infra. IPO price was roughly 140, so he's sitting in gains as well. So kudos to you on that investment. But and 1,400 shares as well for Hemendra at this point of time. But go across and take the next question now. This one's coming in on Mazgon Doc. For Chandrasekhar from Bangalore wants to know if it's a good time to enter this stock right now for the long term, and if this is a good price. Samir, what would you recommend?
So, it has corrected from the peaks. So the valuations are a little better off. We do believe that the entire space of shipbuilding is going to keep growing over time as India needs more of their in-house domestically produced ships, and the opportunity is quite large. Valuations are a little bit expensive. I would suggest staggering investments. See, I've been wanting to say that the stock is great at 1,800. Am I going to get that price? Probably not, given the fact that, India's growth story plus, there's so much money flowing into the system that it may not come off. But yes, slowly keep adding on little by little small lots over the next 6 months to a year, you'll get an average. And over the next maybe 3 years, you will make some returns, but don't expect anything major or any fireworks in the short term.
Okay. All right. So that's the view coming in on Mazgon, but it's time to take a look at the F&O space. And we have Sharath joining by to give us some perspective as to what the cues are indicating. Sharath, over to you.
Thanks a lot, Mahima, for that. And largely, we see there was a little bit of a gap down opening initially, but we're seeing that sell-off actually maintaining, and it's still in the red when it comes to Sensex and even BankX. Of course, the VIX has also gone up, a little bit of geopolitical tensions, but what's working is, of course, Adani Post, the top gainer in Sensex. The stock is up 3%. Asian Paints, HCL Tech also doing well, but the sell-off is a bit on the higher side, at least for the benchmark indices. This, of course, includes Axis Bank, HDFC Bank, and Ultratech Cement as well. But on a positional basis, we might be going under a level of consolidation as well. And remember, today is the last trading day of the week. Avoid to have larger positions because you never know on Friday, post-market hours, and Saturday, Sunday, we might get some announcements in the geopolitical front. But let's come back to the stocks. Long build-up is happening from Nuvama. Good build happening. Expect a corporate development in this soon. NBCC also a good buying happening. The stock is up almost 5%. Volumes are doing well. And apart from this, looking at the short covering candidates, if you could just pull out the short build-up candidates, we have Britannia here. There's an earnings impact at play, and Voltus also a little bit of profit booking coming in this counter as well. Apart from this, the long unwinding, we have Dalmia Bharat and Samman Capital. And lastly, I'd like to point out the short covering candidates. This includes Coforge and Persistence. A good recovery happening in the mid-cap IT space as well, even though the valuations are questionable for both these companies. So these are the important stocks which should be in your radar in the F&O space.
Thank you so much for getting us those details. We've got our next caller, in fact, lined up. Avi is calling us from Kolkata. Avi, very good morning to you. What's your query about?
Hi, good morning to all of you. So I have got 1,000 shares of Senco Gold bought at 284 rupees. So I'd like to know whether I should book profit today, or if I can hold it for the next 1 year, and what could be the target, something like that.
Okay, got your question, Avi. I'll take this up with Samir. Samir is sitting on handsome profits of around 72,000 rupees, considering this is Kolkata based, and when Sharath spoke to the CEO as well, he did mention that he's very bullish when it comes to now expansion in West Bengal as well. So your overall view for the next 1 year, can you continue to hold for further upside?
So I definitely believe this is a space that is going to grow, right? We've been positive on some of the other companies in that similar space. We believe the formalization of the economy that is happening, and Senco Gold is part of that, will see traction. We will see sales growth at the store level, which will lead to operating margins. Now, the problem is, are we going to see this all within 1 year? That becomes questionable. If you have, again, a 2 to 3 year view, I'll say stay put, add a more also at this point of time if you have a longer term view. The problem I face is that over the next 1 year, what's going to happen, which is, we discuss stocks, but sometimes you got to discuss the economy as well. I see inflation peaking its head up because at some point of time, the government is going to up its petrol and diesel prices, and that is going to be inflationary in nature, which could lead to some amount of slowdown in the near term. So 1 year is a very short period for me to say what is going to happen. But if you have a 2 to 3 year horizon, I say very much stay invested and add on.
Got that view, and fair point as well there, Samir, on the discretionary demand could get impacted. Could see a similar impact on auto as well, as we do see generally when the economy is in a downtrend. But go across, and take another question now from another caller actually from Hyderabad. And Chandu has a stock query for us. Chandu, very good morning. What's your query?
Very good morning to all. Yeah, so my query related to I have like a 30 lakhs funds actually to invest actually. So I regularly follow your channel, and Samir also I follow Samir, whatever the suggestions and all. I invested like SW Solar at 5% of my portfolio.
Wow.
And Keystone, the developer also started investing. So the other stocks I need to invest. So is the best time to invest Keystone at 5% of portfolio, and other stocks also I want to invest around 30 lakhs.
Got it. Well, so okay, you want to invest across sectors and stocks, and you have quite a bit of amount to do that. Got it, Chandu. But Samir, it didn't take us long, around 20 minutes to get to the first SW Stola query. But that's almost 5% of his portfolio. But he also wants to invest substantial capital now. What would you recommend his strategy to be?
That's a very good question. And first, let's address the SW Solar. The stock is started to perform. I would love to have a technical view because I do follow technicals, but I'd love to have a technical view later from him, from our technical analyst. But having said that, fundamentally, we're just waiting for the Reliance orders to come through. Once that comes through, we are sure the stock will re-rate itself and move up. I will say in the next 1 year, I'm expecting over 300 rupees. Okay. That's the first part. Now, second part, there's a question that he asked. A very good question. 30 lakhs to invest. Yes, diversify. Make a portfolio of 10 stocks. You want to push it up to 20 because you want 5% in each. That is also fine. There's no problem in that whatsoever. So be more sector agnostic in the sense, look at multiple sectors. I would have 10 to 15% in banking and NBFCs. I would put 10 to 15 in consumer discretionaries. So stocks like Trend, stocks like Bata, stocks like Metro Shoes. In the banking and financial space, we've always said IDFC First Bank is something that we like. IndusInd Bank is a re-rating candidate. HDFC Bank is the largest player in the market, available at not stress valuation, but deep discount to its historical valuation. So that is something one can buy. In the auto space, and put another 15% between auto and auto ancillaries. So our top pick in the auto space right now, top two actually would be Tata Motor PV and Mahindra and Mahindra. Mahindra and Mahindra gives you a kind of, I would put 10% there for the simple reason that gives you so many businesses. It gives you real estate in the Mahindra lifestyles. It gives you the hotel business in the Mahindra holidays. It gives you the finance business in Mahindra Finance and the tractors and the commercial vehicles. So it's a great investment to have over the next say 3 to 5 year period. Then you can look at hotel sector. Indian hotels is something that we like. In power sector, Sterling and Wilson you've already got. I would say you can look at something like a Suzlon Energy. You can look at something like an NTPC Green. You can look at transformers and rectifiers. So build a portfolio, putting 5 to 10% in various sectors, and then make like a nice portfolio and stay invested for 3 years. I think this is money to be made. So this is probably one of the best questions that has been asked. And I wish we could do a show and address how portfolio building should be done.
We have been tinkering with that a little bit, Sami, at this point of time as well. But, thanks so much for giving us that detailed response. Saumil, sorry, because of paucity of time, just a 30-second view on the charts, if you can give on, before we start the rapid fire round on Sterling and Wilson.
SW Solar.
Yeah.
The trend is down. Definitely, the trend is down. I don't want to disappoint anyone, but the trend is down. It's been down for a little while now. However, the positive parts are that the quarterly positive close is going to come this time. It has bounced back from 150, so the base has become 150 now. I'm not expecting the stock to go below 150. That's the first thing. If it crosses above the previous swing high of the quarterly chart, which is 253, 254, then the trend reverses back. Your 200 daily exponential moving average is at 232, 233. So that will be also a very crucial resistance. So I think if it crosses about 253, 254, I'll be very positive. But at this point of time, it is trading below 200 daily moving average. Trend is down on monthly charts, weekly charts. So I'll be a little negative right now.
Well, so those are some of the key levels that Saumil has given that once it crosses there, and you already know the fundamental view if you've been watching the show. But let's go across and start the rapid fire round in this edition of Ask Profit. The first question is on Clean Science. Ramesh has bought into 878 at 878 rupees per share, 100 shares, Saumil, and he's asking a 3 to 6 month view on Clean Science now.
See, I'm positive on this stock. I'll be expecting a target of 960, probably 980 levels, not more than that. Positive at this point of time. Keep a very strict stop loss around 812.
Okay, the next one is on South Indian Bank. Shankar from Bengaluru wants to know if this is the right time to make an entry into this counter considering the recent earnings, but he's looking at a short-term perspective. 1,000 shares is what he wants to invest in. Saumil, your view?
In the short term, no. Avoid the stock. In the medium term to long term, yes, definitely a good stock to be in.
Good. Well, the next counter that's in our focus is Idea Forge. Now, our viewer Neha is holding shares at 590. It's in a big up move in this week itself. Saumil, would you recommend her to book her profit now?
Nah, you can keep holding on this stock. It has crossed above the previous swing high of quarterly, monthly charts. Great stock to be in. Stay invested. Keep trailing stop losses.
Okay, the next one is on Cupid. Our viewer Nandagopal wants to know if he can go ahead and buy and what's the target for this year end. So, Saumil, your view on the charts?
See, it has already run up a lot. So I would be expecting short to medium term book profits. In the long term, you can keep trailing your stop losses at the averages around 102 levels would be the stop loss and keep holding. But short term, medium term, please book your profits.
Got it. Well, the next question is on Suzlon, bought at 46 rupees. And the question largely being, what should he do with this counter now, Samir?
Hold on.
Okay, the next one that we have is on Canara Bank. Our viewer Shiv Kumar has got 30 shares at the levels of 162. Wants to know if he can continue to hold or shift to something like an SBI. Samir, your view?
I think hold on to Canara Bank. Look, you bought it at the highest price. In fact, I would say even average out a bit because now you're getting it at a better valuation if you're more positive at 162. Bank is doing well.
Vijay from Chennai wants to know view on RBL Bank, Saumil. He wants a short-term target.
RBL Bank positive short-term target would be around 380, 390 levels.
Okay. The next one that we have is on Tejas Networks. Satyan wants to know as to which one between Tejas Networks and Moschip is better from short-term perspective. Saumil, your view on the charts and possibly targets as well on the charts?
See, both are looking good to me. No doubts about it. But I will go with Tejas Network. Better price, just broken out of the triangle pattern. Target would be around 625, 650.
Sriram Raguraman from Chennai holds 5 shares of Aether Industries at 903. Samir, should he continue to hold this counter, add more?
Hold on. Like we said, the chemical sector is turning and this will...
Okay.
This is Aether Energy or Aether...
No, Industry.
This is the bike company.
This is the Aether Industries, the chemical one. I think you got it right the first time.
Yeah.
Okay, the next one is on BEL. Our viewer is asking as to what time frame will it take to hit the 480 to 500 levels? Looking at the overall percentage gain going forward. Saumil, your view on the charts?
Probably 500 levels would be at least 6 months from here. I'll be expecting a sideways correction, but yes, very positive on the stock.
The next one coming on HPCL, IOC and BPCL. Our viewer Venkatraman holds 500 shares in these 3 counters. Samir wants to exit 2, but keep the third one for dividends amongst others. What should those be?
Sorry, he wants to exit one.
Wants to exit a couple of them from HPCL, IOCL, BPCL, but wants to keep one of them.
So for me, I think BPCL is the one to hold on to. Yes, IOC is the larger player, but this is a sector I'm not very fond of. So I would say if you want to hold BPCL, but that would, out of the three, that was the one I would suggest.
Got.
Hello and welcome. You're watching NDTV Profit. Dabur is in focus on the back of its Q4 numbers. It's been a great quarter's volume at 18 quarter high, revenue at 15 quarter high. And to, kind of discuss as to how things have fared in FY26 and what lies ahead in FY27, we're now joined by Ankush Jain, who's the CFO of Dabur, joining us now. Ankush, thank you so much, first of all, for taking out the time. My first question is with regards to volumes at 18 quarter high, if I'm not wrong, at 6%. And this has been the story for FMCG this quarter, right? Volume-led growth. From here on, how are you expecting volumes to be in FY27? Because I understand that there would be price hikes. Do you think that volumes from 6% can go to that high single-digit number or maybe early-digit number?
Yeah, first of all, good morning to you and to your viewers. And before I get into state of the volumes, some bit of background about the quarter 4 results.
Sure.
We posted a strong result in terms of overall 7.3% growth. India FMCG 9.5%, near double digit, backed by strong volume growth, as you said, 6%. And this was driven by our HPC, which grew by strong 17.5%. And also our healthcare saw a rebound, which was almost 12% ex-glucose. So it was an overall good performance. Even our international business grew by 4%, despite heavy headwinds across Middle East. Now coming back to volume, yes, sequentially we are seeing a recovery in India, especially in volumes. And even last quarter was 4% volume, this quarter 6%, so 2% incremental volume even from last quarter. And going forward, we see, given that a lot of fiscal benefits and fiscal benefits from the government in terms of GST cuts and income tax cuts, the volumes have started increasing overall, mostly in HPC and even in healthcare, and even our food and beverages saw a rebound this quarter. The beverage business has come into positive territory after a couple of quarters, and even as you rightly said, volume is an all-time high after 18 quarters of 6%. So this shows a positive momentum, and this is backed by strong execution on the ground, gain in market shares, and distribution gains across the region and state. Even some of our highly competitive categories like hair oils, we grew by 24% gain, almost 150 basis market share. Even toothpaste, we gained market share. So everything is backed by market share gain, which shows a strong, momentum. Also, we have stepped up our media investments to reach more consumers, both via digital as well as traditional. So I think we are a bit optimistic going forward from both volume and value perspective. And we see that at least in Q1 and Q2, where we have a near-term visibility, we see strong results in terms of top line going forward. Yeah.
Okay. And what about volumes, Ankush? Do you think, early high single digits is possible in FY27?
Volume, in FY27, we are at an aggregate level in terms of volume plus value. We are targeting high single digit or low double digit volume. It will be a combination of volume and value, while it can be a mix of both in terms of 50% each. So I think 5 to 6% volume and 5 to 6% value. While this is a moving part, since because of inflation, we will be taking some bit of calibrated price increases. Hence, while the overall number might still remain high single digit to low double digit, but yes, things to see. But I think things are becoming better as we see, sequentially.
Fair. Ankush, price hikes, just want to get a sense. You've already taken price hikes of around 4% if I'm not wrong. Going forward, if you can give us some range in which you are expecting price hikes in Q1?
Yeah, so while we have taken, as you rightly said, around 4% price increases, we are in the process of calibrating, more price increases shortly because the inflation is going much beyond, what we expected at the beginning of the year. So we'll be taking another 3 to 4% as we see during the course of the year. And our philosophy is very clear, category to category, every teams are expected to take price increases to maintain or protect the gross margins, and any upside is then reinvested back in either demand generation or in distribution expansion or in digital capability building. So we will be taking price increases very in line with competition and wherever we are market leaders to protect our margins.
Okay.
So another, I think overall in the year should be around 5 to 6%. In aggregate, yeah.
Okay, 5 to 6% of overall price hikes in the entire
During the
year.
year.
During the year, got it. The other aspect, the interesting takeaway from a con call was that even in your press release, you've mentioned that the gap between rural and urban demand is kind of narrowing, right? So just want to get a sense in terms of the observation, because when you say narrowing, is it the rural demand which is not picking up very fast, or is it the urban demand which is picking up very fast? What is the observation overall in terms of where the markets go right now?
Yes, I think if you see the earlier gap between rural and urban was rural was higher by almost 500 basis. But if I see March 26, which are the latest published numbers, indicated data, we see the gap has narrowed down to almost 340 basis, which means the rural has slightly, it's growing, but at a lower rate than urban, and urban has started picking up. And if I, rewind back, this is mainly because of the GST cut and, the income tax cuts, which has now started going into the hands of at least, increasing the disposable incomes and putting more money in the hands of consumers, especially urban. So we are seeing, uptake in urban, while rural is also growing, but the gap is narrowing. Yeah.
Okay.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
All right, welcome back. You're watching Ask Profit here at NDTV Profit. On this side of the show, we are also joined by Devin Mehta, who's the manager of technical and derivatives analysis at IDBI Capital Market and Securities, joining us now. Devin, thank you so much for taking out the time. When viewers are tuning in, you can either give us a call or send us all your queries on the WhatsApp number that's flashing on your screen up there. And Anjali has done the same. Anjali is calling us from Hyderabad. Anjali, a very good morning to you. What's your query about?
Good morning, Mahidi. So my query is regarding ONGC. I'm holding 700 shares at the rate of 275. So the stock hit all-time high recently, but unfortunately I couldn't able to sell. So shall I wait for the similar price range, or I should sell now?
Did you look at the charts while buying it, Anjali?
Yes, this is for short term. I bought maybe 3 to 4 months. I bought it 2 months back.
Yeah. Got it. Okay, got your question, Anjali. I'll take this up with Devin. Devin, the problem with these counters like ONGC is that you have to, look at it with correlation to crude prices as well, right? What would you suggest for the next 3 to 4 months, considering that crude prices are volatile right now?
Correct. So overall, after this stock was bought 2-3 months prior, the stock went up towards 308 odd levels, and currently it has corrected as crude oil prices have slightly come down. But the exact support where I can see is exactly near the buying cost of 275. So I think one should hold with a trailing stop loss of 275. If it closes below 275, then only one should try to exit from this counter. Overall structure remains positive. On the higher side, the immediate resistance is placed at around 293 levels. So 293 can be the first target. One should try to book partial profit at 293 levels, and further one can hold for the next target of 308. So yes, overall structure remains positive. One can hold with a trailing stop loss of 275.
Got that view, Devin, and welcome to the show. The next question coming in on Techno Electric. Our viewer Kesha from Chennai is holding 30 shares at 1280 and wants a 2-year view. Samir, do you track this counter, and any view on the stock?
Yeah, hold on to the stock. Look, we've been saying for a while that the entire energy vertical is going to do extremely well over the next 5 years. India has got a real wake-up call with this oil prices moving up the way they did in the recent past. We need to reduce our dependence on that, and we need to move more towards clean, green energy, which needs transmission line setup, and Techno Electric does that. Yes, not cheap, but like I said, in India, you have to pay for growth. So buy it if you don't have it, and if you have it, hold on to it.
Okay, all right. The next one is on IRIDA. Prashant from Hyderabad is holding 120 shares. He's saying that he's currently sitting on a loss of around 42%. He says that his average holding time is for the next 1 to 2 years. So he wants probably a fundamental view on this one. So Samir, I'll stick with you for IRIDA. What's the view like?
You found one stock that caters to the power space, which I find something that is not worth investing in. It's a great business. What they're doing is they're lending money to renewable energy setups, which is a growing space. But that doesn't mean that the competition is not there. Just because of the name, people went gung-ho on the stock and ran it up, I think, all the way to 300. That is not the right price for it. And I think even at 134, it's trading at maybe 2.5-3 times book, and you have PFC, REC trading at 1 time book. I much rather have those. So my suggestion, convert it to PFC or REC. The conversion ratio is already there. See which one's working out better. I think REC is trading at a slight discount. So if you buy REC, eventually you'll end up with PFC. These are high dividend paying companies, great growth opportunities. We think this is going to re-rate as well. So these are the stocks that we would suggest.
Got that view, Samir. But Rajesh from Hyderabad actually has the next question. It's an interesting one. He wants to invest into Bharat Forge, and he probably would have caught the management commentary on our channel yesterday as well. When we spoke to them, we discussed the results as well, and stock was up 5% today post the results. Now, his question is that the company is trying to increase its capex as well as in defense, and for data centers as a key opportunity. They're also putting up new plants for explosive. But Samir, any view that you have? Because he's asking a 5-year question. stocks run up substantially in the last 6 to 8 months, despite or maybe on expectations of earnings being better in FY27. What's your view on the stock?
So first up, I didn't think the earnings were that great, to be very honest, right? I thought they were subpar. Now, the opportunity for them in the defense space is good, but what is the defense exposure of the company compared to what they're trucking and forging for the auto spaces, right? So we conveniently want to, because defense is the key word, everyone wants to be a part of it, the stocks have run up. But that is contributing to maybe 15 to 20% max of the top line at this point of time. I don't have the exact numbers on me. And on the profitability, even smaller. Now, if the US trucking business sees a slowdown, and that is where the key, top line and profitability comes from, if that takes a hit, then I don't think it justifies just because you're going to be putting in capex for defense, for explosives, for all of this. All of the investments that you do take time to reap benefits. It's not like today I put 100 crores, tomorrow I start earning 15% on it, and I start adding to my profit. It doesn't work like that. It takes time to scale that business up. So for me, at this point, valuations are rich. I think people have looked at the wrong side of the business. I think there is going to be pain that comes from the export business, especially in the autos to the US for Bharat Forge. So for me, at this point of time, I would avoid the stock. If it comes closer to 1400, I'm talking of, a 600 rupee correction. So we're talking about 30% correction. That is where my comfort level will come, and I would say it's a buy.
Okay, all right. So that's the view coming on Bharat Forge. The next one is comparatively a small company, and we don't get a question on this a lot of time. It's on Tasty Bite. Our viewer Sriram from Chennai has bought it at an average cost of 10,800, so at elevated levels, and 20 shares is what he's bought. He says that it seems to be trading about the 200 moving average, 200 simple moving average, and wants to know if he can average at the current levels and see it crossing 11,000 levels. Devin, any view on the charts?
I think from last 2 trading sessions, the volumes have gradually increased and stock has crossed its 200-day exponential moving average above 8,150 levels. I think it is good time to buy this particular counter. It is showing some sign of a reversal. So one can average, but I think there should be a strict stop loss with this. Support on the lower side is placed at around 7,450 levels. So I think 7,450 can be the stop loss for this particular counter, and one can look for averaging this particular stock at current market price.
Got it. Well, Ellen Parkhe, who's also a regular viewer of the show, has sent across an interesting query. He's holding 40 shares of Abbott India, but he's bought it way back in 2017 when the stock was trading at 3,700. Now, of course, he's taken away he's booked some partial profits. Let's pull up Abbott India very quickly. And you'll see that he's booked out a lot of his investments already. So at 3,700, he's almost up 8x on that price. And he's a retired professor, aged 70, from Hyderabad, and asking if he should continue to hold or discount or book out some profits. Now, Samir, I think it's a day of good long-term investments or long-term investing for now. And I think we've got a lot of queries on that. But what would you recommend Mr. Parkhe to do at this point of time?
Yeah, so, I love to hear long-term investing, because eventually this is a place for investment and not a casino to make gambling black or red bets. Will it go up or won't it? Anyways, having said that, Abbott, great counter, continue to hold it. Their products on the medical FMCG side are doing really, really well. We think the opportunity is still extremely large and going to keep growing. Yes, trading at about 35 times trailing earnings. But if the company can post a 15 to 18% top line growth and margin expansions or margins remain the same and operating leverages play out, it's trading at a PEG of about 1.6. So it could probably move up over a period of time. So stay put in it.
Okay, we've got Murli who's calling us from Hyderabad. Murli, very good morning to you. What's your query about?
Good morning. My query is on IRFC. I had about 500 shares and I sold 100 plus 7. It touched around 150 plus. And I still have about 375 shares at an average of 39. So I wanted to know when it would reach the next high in about a year's time.
In about how many years' time?
in about a year's time.
In about a year's time. Okay. I'll try to get you a technical view on this one, Murli. Devin, your view on IRFC, what do you think the charts are indicating in the next 1 year?
So if we look at the IRFC's chart, it has shown a good correction from higher levels, but currently it has moved above its key important moving averages, the short-term and medium-term moving averages, and has been trading into a range from last 5 to 10 days. On the high side, 107. On the lower side, 102 is the range which it is trading in. So I would recommend to hold this particular counter with a trailing stop loss of 100. If it breaches this particular level, one should try to exit as the trend will again go down, and there will be a downward trend continuation after it breaches 100 levels. Whereas on the high side, stock can move towards 123 levels in the coming days. So overall structure remains positive for short to medium term. 100 can be the trailing stop loss for this counter.
Got it. Well, let's go across, take a next caller very quickly from Delhi, and Sanjay has a stock query for us. Sanjay, good morning. What's your query?
Yeah, my query is regarding Paras Defense. The day I bought on 24th of April, it was on 849.
Okay.
Since then, it is down and down and down. Yesterday, it came up. It came up. And now it is a little bit up from a buying price of 849 rupees. I'm looking a short-term target of 900 rupees. Would I be able to get it in a short while, or shall I exit?
Devin, what would you...
Profits.
Got it. Well, Devin, what would you recommend on Paras Defense?
Structure remains positive for Paras Defense. It has given a strong breakout above 770, and it is heading higher towards 930 levels. So definitely one should hold this particular counter for the target of 930. One can definitely keep a stop loss of around 790 levels, which is a strong support and 20-day exponential moving average. So I think definitely it is an hold with a trailing stop loss for the target of 930.
All right, so that's the view on Paras Defense, but time for our rapid fire round. Devin as well as Samir, try to keep your answers as short as possible to buy, sell and hold. The first one that we have is from Ekambarai, who's asking about NCC. He's got 400 shares at the levels of 203. What's the charts? What are the charts indicating for this one? Can you continue to hold, Devin?
Yes, the counter is hold. NCC looks positive on the downside. 160 is the strong support. It's 20-day exponential moving average.
Right.
It can move higher towards 180.
Okay.
Got it. The next question is from Prashant, and because of paucity of time, couldn't take the whole question because it's quite big. But he wants to know, Samir, on the power equipment space, the likes of ABB, Siemens, GE Vernova, CG Power, anything that you like from that space?
So Siemens is good, but the stock has just recently run up. CG Power also very good, and transformers and rectifiers is the one that I like a lot because it's down quite a bit.
Okay, the next one is on Patanjali. 900 shares bought at the levels of 475. 3 months view on this one. Ansh from Australia wants to know. Devin?
Patanjali overall, the trend is negative. I think one should try to exit on every bounce.
Got the next question coming in now. It's from a viewer Bala Subramaniam, and he wants to know a view on ACC. Samir, he's bought shares at 2561. What should he do?
Hold on. I think cement will do well, and it will eventually become a Ambuja, so you'll do well.
Got it. And of course, the standard disclaimer that the stock we just discussed is part of the Adani Group and shows the channel that you're watching. Let me go across, take another query from Pradeep from Bangalore on Black Box. He's holding 500 shares at 350. Devin, do you track this counter by any chance on Black Box, and a view for Pradeep?
No, I do not track this particular counter.
Okay, the next one is on Eternal. From a short-term perspective, Padma from Bengaluru has bought at the levels of 251. What should she do next? Devin, your view?
I think Eternal can be holded with stop loss of around 242 levels. There's a strong support. Upside can be seen towards 270.
Got it. Well, Bhavit had a question on HDFC Bank, which Samir has answered. But Samir, also on Ramco Cement at 951, he's holding shares. Should he continue to do that?
I haven't studied Ramco recently and the valuations, but cement space, I think, will over the next 2 years do well. So hold on to it, I think.
Okay, Coforge for the next 13 months. Is it a good bet? Mahalakshmi from Hyderabad is asking. Devin, your view on the charts?
Yeah, I think it can be purchased on dips around 1320 levels if we get any dips. The target for the coming month is around 1430. So yes, definitely can be holded at levels and purchased on dips. Support is placed at 1240 levels. So stop loss can be 1240.
Right. Well, Jose from Kochi is holding on to APL Apollo and he wants to know a view on stock. Samir, by any chance, do you track it?
Yeah, I think one can hold on to it. We've seen some amount of correction, but look, valuations are expensive, but hold on. I think
Okay, Union Bank, 3,000 shares bought at the levels of 179, already sitting on a loss of 45,000. From a long-term perspective, can our viewer continue to hold? Siva is asking this question. Samir?
Absolutely. Banking very positive. Union Bank also will do well, so hold on.
JSW Energy at 606, bought by B. Soumya Devin, and asking a immediate expected target price.
I think the stock can be holded with a stop loss of 950. Expected the target is around 590 and further above that is 605.
Okay, the next one is on L&T. Our viewer has bought at the levels of 3,200 odd levels. Wants to know if we can continue to hold from a long-term perspective or replace this with something else. Samir?
So L&T, premier company, hold on. Short term, not the best because they're going to be finding difficulty in growth because of the problems in the Middle East, but long term, 3 years, hold on, I think it will come back very strong.
Got it. That is the end of the rapid fire as well as the session of Ask Profit. Samir, as always, thanks so much for joining in and giving us your views. Devin, thank you for all your views on the technical setup as well. But viewers, that's all the time we have on this edition of the show. Thanks so much for watching. We'll take across all the other stock-related queries at 2 p.m. in the afternoon edition of Ask Profit. So stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew.
markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis.
Hello and welcome to all of you, and now is the time for KYC. This is the hottest show where I get you one of the best companies where you can analyze and is there any alpha or not. We try to decode that. But before decoding that, there are some hints. Give it a guess. The first hint, it's a Navi Mumbai-based diagnostic company. Of course, the headquarters is in Navi Mumbai, especially the Turbe area. The second hint I would like to give you is recently the company came out with its numbers also. And I know a lot of diagnostic stocks are buzzing in trade. So, nevertheless, strong Q4 numbers also coming in. Let me give you one more hint. Try to guess it. From March lows, the stock is up 35%. And interestingly, there is an interesting angle to it. The FIs, DIs, they have increased their stake in the last 2 years as well. A lot of restructuring has also happened in the company. And I'd like to give you one more hint. Try to guess it. They recently appointed Madhuri Dixit as the brand ambassador. Try to guess, and I'm going to give you the company's name. There are a handful of diagnostic companies. It must be getting easier for you to guess it. But if not, don't worry, I'm here. The company in focus is Thyrocare Technologies. They're pretty much interesting. There is a little bit of, you could say, there's a brand change also there. And the company itself looks a bit different from last time when we had a chat with the management. But there are a lot of questions to be asked. The first and foremost, earnings kaisa tha? वो आगे क्या बढ़िया रहेगा? That's the big question to be asked, and that is why I'm going to ask the management the outlook for FY27 and the Pharma integration. What are the processes and the timelines everybody is looking at? And overall, we'll be asking the growth targets for the franchisee business, how they are moving forward, and importantly, the growth numbers for it. International expansion, एक ही lab है इनके पास टांजानिया में, but ये क्या नया market खुलेगा? That's the big question to be asked. आगे बढ़ते हैं. Let's see what else is there. It's of course genomic, specialty diagnostics, and the key launch pipeline ahead. They are moving into newer businesses also, because at times we talk that the pathology and the lab business is definitely there. But there's a question at times investors ask, is it commoditized? So we'll try to see the specialty angle to it. Of course, the preventive and the lifestyle package, what's the momentum looking like? What are the products coming in? What are the new areas of this happening? And to decode everything, we'll have Rahul Guha. He's the MD and CEO of Thyrocare Technologies, where he'll answer our queries and also give us some hints on why the diagnostic stocks are back in business after almost 2 to 3 years of pain. But company समझते हैं क्या है? We know that it's a diagnostic company, but इसके अंदर क्या है? Is it just a diagnostic company? No, there is something more to it. Let's go and understand that. This is of course a Navi Mumbai-based diagnostic company and has 40 labs in India and 1 lab in Tanzania. It's pretty much interesting to talk about. But किस तरह धंधा करती है कंपनी? एक होता है फ्रेंचाइजी देने का, दूसरा होता है आपका पार्टनरशिप्स के साथ. Of course, these are asset-light models which I'm talking about, and the D2C models, even though the revenue subscription or the revenue contribution, is on the lower side. Let's also talk about the other key factors to look at. The services, there are other services. This includes ECG, genomic testing, insurance-related products. आपके घर में आके भी जो है checking हो सकती है. Of course, you must have understood about the diagnostic that you have to go, but there are some services which can be done at home also. Quarterly attractive franchisee, that's the count coming in at 10,800, and the processed is almost 6 crore, 59 million to be precise, for the screening and investigations. That's pretty much interesting. And recently they changed an object clause also in the company. That means more ancillary businesses, data related businesses in diagnostics. That's where the things look. But Q4 numbers kaisa raha, and that is why most of the companies have done well. Strong performance coming in both financially and operationally as well. And of course, they are welcoming commentary coming on the lab expansion and the new offerings. Street wants to know a little bit more about this. This is what we'll be asking the management because they have done well when it comes to the numbers. The gross margins that improved by almost 113 basis points year on year. So definitely the margin outlook trajectory is something to watch out for. And the revenue segment, how it actually works. The franchisee is still at a higher side of almost 61%. And if you get that, for 34%, that comes in for the partnership segment. Very limited, almost 5% is for the D2C segment. So this is the entire revenue contribution for you. And how the growth has happened in the fourth quarter, that's also pretty much important to understand. And franchisee partnership, this is very small. So look at these two when you're analyzing, they have done really well. Both of these segments, 20% plus growth. But why are diagnostic stocks, all of them rallying in trade? There are some reasons for it. There's strong Q4 numbers. ये कंपनी लीजिए, मेट्रोपोलिस लीजिए, विजय डायग्नोस्टिक्स, सब ने अच्छे नंबर्स लाए हैं. प्राइसिंग प्रेशर जो था बाजार में after 2 to 3 years, that is bottoming out, and that trend we have already caught and explained to you earlier in the months at NDTV Profit. The price hikes is likely to happen in FY27 for diagnostic stocks, and importantly, the benefits of consolidation. So you get the larger players getting more market share, and that's what we are seeing that's happening. Street is bullish on for the foray into the high margin business, and that is where we are looking at diagnostics as some kind of a value creation as well. But to put things in perspective, let's understand how we judge a company in KYC. There are a lot of ratings which we follow, and largely I have tweaked a little bit of ratings. यहाँ पे operational parameters मैंने ले लिया है. If you are a regular at KYC, this is a return ratio parameter. Of course, these three numbers we never change because this is the holy grail of financials. Apart from that, let's look at the street cred, the shareholding pattern, how things have moved, and of course, I'm comparing them 4 to 5 major players in the diagnostic space, where to understand, is there any valuation here? And of course, the outlook, what the management expects going ahead. Of course, we'll try to get some quantification number also from the management when we start talking with them. The first one, income statement. Let's get in that parameter to understand what's happening here. Largely, it's a decent up move. Bottom line numbers, it's a 37% CAGR coming in the last 3 years. EBITDA also almost touching that 30% mark. So operationally, some benefits are definitely coming in when it comes to this company. Also, the Q4 numbers have been really strong, and that's what the street is awarding the stock. And look at the growth which has happened. Like a turnaround हुआ year on year basis पे आंकड़े देखिए 123% year on year basis पे जो है growth देखने मिली है. तो nevertheless, the key numbers to track, EBITDA, net profit, they have done well. Let's look at the margins also, because that itself has done well, and the margin trajectory was earlier between 23 to 28, but now it's hitting that 30% mark, 32%, and now it's at 34%. That means there is a good strength coming when it comes to the margins. Abhi kitna upar jayega? That's what we try to understand with the management. Net income statement is a strong thumbs up as of now. Balance sheet, let's have a look at that. And it seems very nice. There is no borrowings, it's zero borrowings pe hai, and now it's well capitalized also. If you look at the cash balances, 68 crore rupees. And of course, there's a good backing and fund infusion coming in the company. Because of that, the balance sheet remains rock solid now. आगे जाके acquisition करेंगे, expansion करेंगे, that's what we'll be looking out for. So income statement has been good, balance sheet has been good. Let's have a look at cash flow. Where does it stand? And overall, that has also improved. Earlier, this was a net operating cash flows which was coming in. This was at 168 crores, but overall it was on the negative side. That has turned in, and see, overall, the momentum has been really strong. If you just compare the last 2 years, of course, the 9-month FY26 numbers it's also to look at, but net, this seems really strong as well. So that is where the growth momentum is coming in. So तीनों ही financial statement के आंकड़े में, income statement, balance sheet, cash flow, all the things the company has passed with flying colors. But let's go into more details. Let's try to understand the operational parameters this time I have taken, and this is the FY26 numbers I'm talking about. And when you judge a company in the diagnostic space, you need to have these important metrics, and this is something which I'd like to put it out. There's a revenue per patient, tests performed on the patients, total patients, and the active franchises जो इनके operational धंधे में काम आती है. और look at that, most of them have done well, at least these three. Revenue per patient, of course there was a competition in the industry, pricing को लेके, discount को लेके, so that's why this number is not very high, but other things are doing really well. and these are the particulars to look out. So that is a strong thumbs up coming in. But shareholding, let's see what's happening here. Promoters, of course, diluted the stake last year, and now it's coming in at 61%. But on the other hand, one good positive thing about the stock, the FIs and the DIs, is the increase in their participation. March 24, it was just 3%, and DIs, it was just 15%. But look at the story, how it's changing. Now that has almost doubled to 5%, and DI has also increased the stake by almost 6%. So FIs, DIs are lapping up. Public is decent enough, and that shows the faith in the company or the institutions. But net to nullify the promoter stake sale, I will be giving this a shareholding. But apart from the shareholding part, let's talk about how things are moving when it comes to the street trade. Kitna paisa bana? That's the big question we always ask. And from March lows, definitely all the diagnostic stocks have done well. So has the company. The stock is up 35%. From 2025 highs, it's still down 11%. And if you are holding the stock for 1 year, congratulations, you have made almost 50% plus returns. But there is a bad news. The bad news is for the last 5 years, if you're holding the stock, just 33% returns have been made. So a really long-term investor technically hasn't made that much money as a short-term investor has made in this company. So to balance things out, I would be giving this a neutral rating when it comes to the street cred. But let's talk about the valuations and see, is there any kind of a valuation comfort with its peers? Well, technically it sounds quite similar. Metropolis is cheaper, Dr. Lal is on the expensive side. These are the 12-month forward P ratios I'm talking about, and 36 times is what Thyrocare is currently trading at. Let's have a look at the other stocks also, which are there as a peer, and that's where we get them in. Suraksha Diagnostics and Vijaya Diagnostics. That itself is in line with most of the peers. Only outlier, it seems, is the 57 times P. Why is market giving that to Vijaya Diagnostic? That's the question to be asked. But as of now, it's quite neutral from its historic averages. A little bit correction is there, but it's evenly placed. Neither too expensive, neither too cheap. When I talk about the valuations for Thyrocare, maybe wait it out because the stock has run up as well, and maybe if we see some good earnings coming in the coming quarters, the valuations might turn attractive. So net, it's a neutral rating when it comes to the peer comparison. But the last rating is the most important. That's the outlook segment. Let's get in the first reason. The pathology strategy, that remains to be a key B2B service provider. And when you're a B2B service provider, your margins largely always remain compressed. Also, let's talk about expanding partnerships across insurance and ECG. Okay, these are high margin businesses, but this will take time. They have a higher gestation period. And remember, there's a lot of competition in the markets. The franchisee is going deeper into India with its focused test menu, and I'm talking about tier 2, tier 3 expansions also. And it's evenly placed. When I saw the map where most of the labs are located, they are strengthening this network and they are focusing on the larger players. So that's the eventual step to come in. But how much will the valuation premium market give to the diagnostic players? That's the big question to be asked. And they are strengthening their presence in Tanzania. Lab to sirf ek hai. But let's see what options come up or potential comes up in Africa. So net, it's a strong outlook, and I've given this a thumbs up as well. So let's give you an entire revision of the ratings in the show, and largely the company has done well in most of the parameters, be it financial or operational. That is why I've given 4 thumbs up. All 3 numbers they have done well, and operationally also the FY26 numbers has been good. Shareholding, it's kind of nullifying with the promoter selling stake and FIs and DIs increasing the stake. Street cred and valuations will keep it neutral, but outlook remains strong. So let's add up the total rating parameters, and it's roughly coming 6.5 out of 8. So it's largely positive than the average numbers which we generally give to a company in our KYC show. So that's the entire rating coming in. And Rahul Gua, he's the MD and CEO of Thyrocare Tech. He will be speaking with us, and there are some interesting snippets about him. He has been reappointed as the CMD for the next 5 years as well, and that was just announced. And he's also the MD at API Holdings. So बहुत सारे brands हैं जैसे कि Pharmacy, Ritalio, Docon or Acnamed is something which he's a part of. 17 years of experience in Boston consulting, and of course education coming in from IIM Bangalore. So tune in. We'll be just taking a short break, and we will be getting important queries addressed by Rahul Guha.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and
Welcome back to KYC, and joined in by Rahul Guha. He's the MD and CEO of Thyrocare Technologies. Hi Rahul, it's always a pleasure to have you, and congratulations for being reappointed as the CMD for the next 5 years as well. But Rahul, I just want to understand first and foremost, we are here for the earnings. Very strong Q4 numbers have come in. I just wanted to understand the outlook, and if you can quantify any numbers you're targeting for the next 2 to 3 years.
Sure. Thank you first, and thank you for the compliments on I was watching the KYC show as well, so thank you so much for the assessment. Look, our strategy has been working very well for us. Last 2 years consistently, we've been growing at 20% plus, well ahead of the industry. And actually what you called out in your presentation is really what's working with us, going deeper and deeper into India. Almost 80% of our revenue comes from tier 2 and beyond. Only 20% is metro tier 1. And we see huge pockets of growth where our value proposition of affordable, good quality diagnostics is really clicking with the market there, as well as our partnerships. And today, I think almost every major health tech, insurance, pharma company works with us to be their partner for diagnostics. So I think these two parts are going very well, and that has resulted in 2 years of greater than 20% growth. And as I always say to my team, growth solves everything, right? And operational leverage kicks in. You are able to invest more. You are able to take a bit more risks in terms of new areas. And if they click, then it just continues to grow the growth momentum. I'm hopeful. Of course, we are sitting on a high base now. 2 years of 20% growth is not easy in a competitive industry. So we're sitting on a reasonably high base, but our long-term expectation, I would say, over the next 3 years is mid to high teens, and we expect to, land in that range.
So long-term aspirations is mid to high teen growth. That's pretty much nicely put. And remember, there is a high base also angle to it. But I just want to understand about the diagnostic stocks. All the industry itself, of course, they are doing well. Of course, does it look like the industry is coming out some of an inflection point? Because long enough, a long time, the story was that it's a commoditized industry, a lot of competition is there. But now, Rahul, what changes? Is there any growth trigger happening for this diagnostic industry, or is something building up on the ancillary space where the market is looking differently?
I think overall, I think diagnostics awareness is very high post-COVID, and it has taken some time to mature. But I think, there are a lot of boosts that come. For example, almost every major insurance provider now provides an annual health checkup for free with their insurance policy. So people have got into the habit of now doing an annual health checkup. There are so many health tech providers, that offer you diagnostic testing at the convenience of your home. And it's, available now at a click of a button. So if you go 3-4 years back, you had to walk to a collection center, wait, you would be fasting for 8-10 hours, right? You would do the test. It was quite a bit of a headache. And, if you had to do it on the weekend, then, you'd lose half your day and all of that. So many people kept postponing this decision. Now, at a click of a button in the convenience of your home, within 15 minutes of your booking slot, someone will come and do your blood test and you'll get your report the same day. I think people have realized that convenience is immense, and there's no point pushing off an annual health checkup of a blood test. For example, I'll give you an example, right? A heart attack costs lakhs of rupees should it happen. But if you do a simple cholesterol check of 500 rupees and you take a lipid regulator of 300 rupees a month, you save lakhs in healthcare costs. And I think everyone, insurance companies, corporates, everyone has realized that prevention is the answer. And therefore encouraging their employees.
Right. Rahul, apart from that, I was just reading the key announcements coming in, especially that genomic testing is something which is new. You call something as a specialty diagnostics also. What are the key launch pipelines ahead for this? Because this is a new industry. Of course, the margin profile will be on the higher side. Just wanted to understand what kind of, announcements or launches we can expect in the next 12 to 18 months.
Yeah, in routine and semi-specialized, we have made diagnostic testing very affordable and convenient. Our next wave of growth is specialty testing. Specialty testing has been very expensive and very inaccessible. And we aim to solve that with our investments in genomics, allergy, histopathology. We believe that specialty testing should not be unaffordable. Someone who is going through, really a crisis should be able to get the best advice and the best testing from Thyrocare as a partner. And that's where our investments are going. And that is a huge opportunity that we haven't touched at all in the last 2-3 years. But we've now made the investments and we believe we are ready.
Right. And Rahul, I was just checking something else also. The object clause has been altered. Interestingly, some more ancillary services around diagnostics. So there's a lot of word usage of data here. And also there's an investment in Think Health Diagnostics. What's next here? Just give us some kind of a flavor of what's happened here.
Actually, we've seen many opportunities in different areas. It's actually internal to our strategy at this point in time. Maybe in a couple of quarters, you will see announcements related to those modifications. But at this point, I don't want to comment too much about it, but a lot is happening in the ancillary space, and we think, our value proposition can go very far in those areas.
Yes, it makes sense also with, of course, you are having the charge of API also. There's a good capital there, good technology. So I'm assuming there will be some good synergies as well. But nevertheless, the company will announce it in a couple of quarters. So we'll be waiting for that. But let's understand your international expansion part, Rahul. In short, you have made a very small inroad into Africa. But Africa is a huge opportunity for anything, be it medical or even diagnostics. We have already spoke with a lot of peers like yours. So Rahul, how do you see that expanding? Because you must be expanding to much more labs than just one lab in Tanzania, right?
Yeah. As you know, we are very cautious in Thyrocare, and we like to learn the market before we double down on expansion. If you look at us also, it took us several years before we opened the first few regional labs. Today, we are at 40 labs because we know the playbook that works. Similarly, in Africa, Tanzania is our foothold into Africa. I believe if you fast forward 10 years out, the opportunity in Africa will be as large as India. And so we've put our foot there, and we are now learning the market, establishing our African playbook, because we believe that what works in India will not work or may not work in Africa. So we still have a lot of learning to do. And so therefore we are starting small, understanding the market, what it takes to win. And once we are confident that we've got the right playbook in place, I can assure you we'll expand very rapidly.
No, that's true, and you keep mentioning playbook because there is a consultant also behind your brains, and it's very lovely to pick your brains like that. But just want to understand the preventive and the lifestyle package. Of course, you spoke about your value-added services, but preventive and lifestyle is much more bigger margin profile, and of course the client is very niche segment. What kind of offerings are being planned, or do you think that side we are going?
I think the days of the annual health checkup or the generic annual health checkup is gone, right? Most people now know they are diabetic, hypertensive, have some liver problems, some kidney issues. And that's why we have launched Janch, where if you know you are a thyroid patient, a diabetic, a heart patient, these are specialized profiles that are there to help you manage the condition better, be aware of your early warning signs so that you don't end up in a hospital. And I think that is where the future lies in preventive. It's not a generic full body checkup, that people do. I think most people now know what health issues they are dealing with, at least in the 50 plus age category. And we really feel specialized testing linked to the disease profile or the condition that you have is going to be the future of preventive.
Right, so it becomes quite, pinpoint the solutions. That's what you're talking about. But Rahul, it's wonderful. We are out of time, but of course we'll continue our conversation someday. But it's wonderful to talk with you and a strong set of numbers. So congratulations. It's always a pleasure to talk with you.
Thank you. Always a pleasure.
Yes. So that's the management of Thyrocare speaking about the company's numbers, some interesting trends in the preventive healthcare segment. And interestingly, they have changed their object clause. Expect some announcements over the next 2-3 quarters. That's all, folks, for today in KYC. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect.
Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar. And yes, Pidilite is on the radar as the stock has really performed well, 2.3% up. In fact, take a look at the 1 month chart as well. This stock has really performed well and the numbers are also well taken by the market. And we will be joined by the management to talk more about the future as well as the highlights. All right, Sudhanshu Vats, who's the managing director at Pidilite Industries, joins in now. Sudhanshu, good set of numbers, but of course in line with the estimates of the market. In terms of the margin, there is a very big jump as well, over 300 basis points. What have been the key highlights and the drivers in this quarter?
We are proud to declare a strong set of numbers for quarter four. I think what has really worked for us are three things. I think first and foremost, our disciplined execution and our field marketing. I think the work which we've been doing actually plays out really well when the demand situation improves. And in quarter four, if you see that there was a little bit of buoyancy in demand in general, I think, Nisha, which you would have heard from other people as well. So we saw that in urban and in rural. So I think that is something which helped us. But within our portfolio, if I was to say, our growth brands, which we look at our portfolio as core and growth, our growth brands, particularly Roff and Dr. Fixit, did very well in this quarter. So I think they had a standout performance. While our core brands did well, and especially Fevicol, which is our largest brand, also delivered double-digit growth. So it's the performance of our growth brands, which was really strong, coupled with a steady and solid core performance. A double digit for Fevicol particularly helped us to deliver a mid-teens kind of underlying volume growth. And I think what happens is, Nisha, the moment you get that kind of growth, so you start getting operating leverage. So 100 bips improvement in gross margin translated to roughly around 300 bips improvement in EBITDA. So I think that's the story of the quarter.
All right, Sudhanshu, of course, Fevicol stickiness we know, and of course its growth momentum has been good. But what about the margins? It has really seen a bump up because of the cost pressure coming down, while the rest of the industry is really basing up for higher costs due to war effect. How is this quarter going to look like? Are these margins sustainable?
That's a great question, Nisha. I think as far as the previous quarter is concerned and most of last year, we actually had benign input costs, and you are right, that helped in gross margin, but then our performance on growth helped in operating leverage, and therefore but we've always guided EBITDA margin, Nisha, in a corridor of 20 to 24%. Pidilite has steadily guided that. Last year, if you look at it, we delivered at the higher end of that corridor, arguably exceeded it marginally. I think we are also facing a lot of inflationary pressure on our raw materials because of West Asia crisis. I think weighted average is roughly around between 40 to 50%. So we are basically, our philosophy is that we will pass on absolute rupee increase in raw material as price increase to the market in a calibrated fashion. We've already done first round of price increase in April. We have done another one in early May. We are going to pass this on in a calibrated fashion. And our desire is to maintain the growth momentum, to stay focused on demand generation, and pass on these costs in a calibrated fashion like we've always done at Pidilite. So in this period, we will be having a little bit of margin compression, depends on the length of West Asia crisis, depends on how the demand is playing out for the balance part of the year. But we stay steady on our guidance of 20 to 24% corridor. So I think 20 to 24% corridor of EBITDA guidance will remain, but we are going to manage within that as we go forward.
Right. So, Sudhanshu, price hikes is something that you will take in calibrated manner. Is export decline in the B2B segment also owing to the supply chain constraints because of the war? And what's the picture on exports?
So that's a very good question. Again, I think B2B, the way we look at it, I think our domestic B2B continues to do very well. And I think within that, if you look at our projects, tends to do really well. So our projects business, B2B business is doing very well. Our domestic industrial business is doing well. Our export business has indeed suffered particularly. So there what happened is last year, most of the year, through the year, earlier there was uncertainty around tariffs. And as there was a little bit of clarity around tariff and orders started coming in, and we had the order book, I think supply became a constraint because of the West Asia crisis. So we are ready for a lot of exports, particularly our pigment business has export intensity. I can assure you and I can share with you that we have a good order book. So there are a lot of inquiries. I think a lot of the actual delivery will depend on how the West Asia crisis plays out. So we've got order inquiry. We are well settled for that. The good news as far as Pidilite is concerned, that our export intensity is smaller. So therefore, our overall business growth and overall business will continue to deliver well, independent of the export issue. And if export comes in, that will be the icing on the cake, I think, So.
Right. So it will add more momentum to your already good domestic picture. But what about this year and this quarter's volume as well as value growth? Can you give us some outlook into that?
So we actually always continue to say that we will deliver double-digit underlying volume growth. We want to continue to do that for both segments. If you look at the quarter 4 that went by, we delivered 15.3% or 15.4% rather on consumer and bazaar. We delivered about 14 odd percent on our B2B. I think our desire to deliver double-digit underlying volume growth for both consumer and bazaar and B2B remains intact. Early signs we've seen in this quarter, the demand seems to be intact as of now. I've been traveling personally quite extensively, both in big town India and in small town India. And I think as of now, the demand seems to be intact. Inflation is there. But moving forward, depending on the length of the conflict, what will be the impact on demand is to be seen. And that's a conversation to be had as and when that plays out. But we stay very confident of our disciplined execution.
All right. And what about FY27? Give us an outlook on what are the key areas that you're looking at, even CapEx and new units being added.
No, FY27 will be, I think we will continue to do a lot more things. Basically, we continue to work on newer areas which are there. We've already talked about our interest in driving our industrial footwear business. I think that's something which we will do as we go forward. As far as capacity expansion is concerned, we continue to look at capacity expansion. Our CapEx tends to be in 3 to 5% of revenue. In the year that is coming by, in early part of the year, we should look at our renovated, fully automated, Fevicol plant coming up in West Asia. It's a consolidated large plant which will come up in West India. And I think, in Mahar. So that should happen in early part of FY27. So we stay focused on driving CapEx for growth, CapEx for automation and consolidation, and for newer businesses. And I think that's something which will continue. Our focus and will remain on growth and disciplined execution.
All right. Thank you so much, Sudhanshu Vats, for taking all our questions, and all the best for the next quarter. That particular stock is gaining in terms of the kind of volume growth that is seen, and also the demand picture that has really gone on in the last quarter gone by. But the management says that demand needs to be watched out for, as inflation on the ground is very much visible due to war. All right, moving on to another important development today. Hantavirus cases have triggered health concerns across the globe. It is a rare but potentially severe viral disease carried mainly by rodents. Now, humans are infected through inhalation of dust contaminated with the rodent urine, droppings, or even saliva. Now, the World Health Organization has confirmed 5 cases of hantavirus linked to deaths aboard a cruise ship in the Atlantic Ocean. Let's listen into what Dr. Tedros really had to say about this from WHO and what is the grave concern about hantavirus.
So far, 8 cases have been reported, including 3 deaths. 5 of the 8 cases have been confirmed as hantavirus, and the other 3 are suspected. Given the incubation period of the Andes virus, which can be up to 6 weeks, it's possible that more cases may be reported. While this is a serious incident, WHO assesses the public health risk as low.
All right, so keep an eye out on that particular virus and the health concern emerging globally. Now, there are a lot of stocks which are really buzzing and will be buzzing on the back of the earnings that are really coming in today. What's on your list, Puneet? Have you made a list of all of them that are on your watch list?
Well, Gravitas is the first one. Good set of numbers for the company. Revenue is up 13%, EBITDA is up 22%. And more so at this point of time, the company has decided to enter the copper recycling space. I think that's something that the market will look at very positively as well. Given where copper is, given the price point that it operates at, the capex for the copper recycling plant is 160 crores and this will be in Gujarat. So watch out for that. They've also continue to maintain a higher guidance as well because expanded its Mundra-led recycling capacity from 80,000 million ton to 145 million ton, and they're targeting over 8 lakh ton per annum capacity basically by FY29. The second one, Sonata Software, this one was a mixed set of numbers where the revenue was down 17%, so largely nothing too great in revenue growth, and EBIT is just up 5% and profits largely up 25% because of other income. So actually a weaker set of numbers for the company where they won 2 large deals, but it's a weaker set of revenue growth, so stock might be under pressure today. And finally, Aditya Birla Lifestyle, recent demerger happened over the last 3 to 4 quarters. So for this one, which operates brands like Allen Solly and Louis Philippe, the revenue is up almost 12%, EBITDA is up 14%, and profits are up 42% in this quarter. Lifestyle brands, which is of course the majority that I've just mentioned and named, the revenue is up 11% for those, almost 1,800 crores. Emerging businesses within the sports vertical also is growing well at almost 18% this quarter. And like for like, retail growth slightly slower at 4%, but e-commerce continues to drive the momentum. So these 3 stocks in focus, continue to monitor them on the back of results.
Right. Thank you so much, Puneet, for getting us all those details. Now, Mahima also walks us through the expectations coming in from Tata Consumer's Q4 earnings. Mahima, growth has been mostly, robust for most of the companies. How's Tata Consumers expected to stack up?
So for Tata Consumer also, it's going to be a strong quarter. That's what at least the estimates are suggesting, because revenue might see a growth of 13%. EBITDA might see an uptick of around 21%, and net profit a growth of around 18.5%. Margins might also improve slightly because the expectations are that the tea inflation has stable a little bit. But overall, in terms of what to expect, strong revenue growth potentially in double digit. India food business is expected to show a significant amount of growth, likely to maintain healthy volume on the back of tea and salt business as well. Acquisitions yet again to aid business growth and digital first, because these are digital first acquisitions as well. Key things to watch out for, I think the impact of pricing intervention in international markets is something that we'll be watching out for Tata Consumer, plus the impact of West Asia conflict and price hikes as to how much have been taken, how much will they take in Q1, and overall impact on volume. So this is the overall view of what you can expect from Tata Consumer.
All right, Tata Consumer, that's gaining in trade ahead of their numbers. Thanks so much for that, Mahima. And also a slew of newsmakers that will be in focus today. Shivam has also tabulated a list of those. Shivam, what makes you to your list today?
Well, yes, the first stock that should be in our watch list is the Page Digitech, which has been up nearly 3% in today's session. Now, the company has received an order which is worth 702 crores from Damodar Valley Corporation, and order is for the implementation of a 250 megawatt battery energy storage system project in Jharkhand. Now, the scope includes supply and APC execution commissioning of the projects in a time period of around 18 months, and also following a 12-year period for operations and maintenance. Now, this marks this is a significant order for the company, as this marks the first BES order win for FY27 for the company. Now, the chairman and MD says the company will be focused on expanding their presence in this high growth segment. Second stock is Vijaya Diagnostics, which has reported a strong Q4 numbers, and the performance in the revenue growth was mainly led by the volume growth, and broad-based growth has been seen across the segments, where it was led by the strong strong momentum in pathology and radiology segments. Now, the company also plans to introduce advanced genomic testing capabilities, and a strong growth in testing and footfall metrics has also been seen. And as a result, the net profit of the company has been up 37.5%. Next stock is Sandur Manganese, which has also seen a strong Q4 results with the focus on specialty steel segments, and the realizations were led by the manganese ore. Back to you.
All right, Shivam, thanks so much for the entire list. And take a look at Lupin stock after the results. It is seeing some bit of profit booking, 2.5% down. If you take a look at the 5 days or a 1 week chart of Lupin, it had gained in terms of anticipation of good results. Ramesh Swaminathan, the Executive Director, Global CFO, Head of IT and API plus SBU at Lupin joins in. Ramesh, always a pleasure to speak to you. All around beat when we look at your numbers. It has been a strong quarter. Can you take us through the key drivers? What really impacted well?
So clearly, it is because of the kind of top-line buoyancy that we've been able to sustain with very good performance across various markets. So if you look at America, we continue to have a very good run with products like Mirabegron, Tolvaptan, Albuterol, Spiriva, and of course the inline products itself. When you come to India, we've done very well. Last quarter, for example, we grew by 14.5%. The whole of the year, we of course did extremely well. We serviced the index as well in terms of IQVIA and other matrices. If you look at the emerging markets, I just pick out Brazil, because it's done extremely well. We had products like Dapagliflozin that we brought into the market. Europe continued to do well with, in fact, Albuterol, with Namuscla, and with products like Foster, so that Lufobec. So that did extremely well. So there are good reasons for the for good performance across. And of course, the EBITDA margins, they are a result of the top line that we bring in, and of course the constant focus on costs that continued. And the result is there for people to see.
That's right. Margins have also picked up on a YOY basis. But given the kind of cost pressure, the war-led inflation that is being seen, Ramesh, is the margin really going to be sustainable? Give us a picture for the next quarter. And we are halfway through this one. So Q1 FY27.
So America, when it comes to, in fact, products like Tolvaptan and Mirabegron, there would be some competition coming up. As you know, we just ran into, we entered into a settlement for Mirabegron. And to that extent, there would be a reduction in terms of overall profits out there. But there are newer products coming in, essentially Ravicti and a host of products when it comes to, in fact, the biosimilars front. India will continue to do well with good performance across our major therapy areas, cardiovascular, diabetes, respiratory, and the like. There's some semaglutide opportunity. And the emerging markets, so we expect, in fact, newer products to be introduced in Brazil and the like. So clearly, the buoyancy would continue. There are, of course, tailwinds, in terms of course, the geopolitical tensions that exist today. And as a result, there is, in fact, cost increases. Air freight has increased by about 60%. Ocean freights have increased by 15%, not to speak about input costs on raw materials and a host of other things. There's also a question of availability of certain, of key materials, because of issues around supply chain and the like. So there are some, dark clouds on the horizon. So overall, we are still pretty optimistic about the overall margins that we can kind of sustain. Around the 25% mark is what we think at this stage. But we need to take appropriate action based again on the context from time to time.
So there are many headwinds, Ramesh, that you mentioned. So let's just narrow it down to this particular quarter. You've already seen almost half of it. The war really continues. The pressure points really are emerging. Is this quarter margin going to match the quarter of the previous quarter?
So clearly, we are concerned about the situation as it is emerging. It certainly has an impact when it comes to profitability. It is obviously, the various factors that I spoke about, which is essentially input costs, as well as, in fact, the logistics cost is certainly going to weigh in. There's sometimes the availability of containers to kind of ship in, essentially that's going to be a problem. So overall, we are still, reasonably confident. of a pretty good margin, though of course not necessarily the same levels as you saw in Q4, but pretty healthy, all the same.
A lot of new launches and 15 products have really escalated your momentum and your performance in the last quarter. What are the new launches in this particular fiscal year and their impact on the performance?
I think the most important thing would be the forays that you speak about in terms of biosimilar products for America, Pegdisi, Sive, ranibizumab, and the like, and so on. Clearly, that would be an important entry from our perspective. It'll help us to kind of sustain, overall run rate of above $1 billion for the annualized for the full year. So clearly, we are bullish from that perspective. Though, of course, we do believe that there would be the impact of competition coming in for tolvaptan at some stage, and more for mirabegron. But there is, as I said, a lot of scope for optimism.
Right. So Ramesh, a lot of products really in the limited competition space has really impacted your growth, but a lot of products would be going out of the limited competition. How many of them, when, and what would be the impact?
Difficult to say, so when it comes to tolvaptan, we do expect competition to come in, and at least it is not coming in the first quarter. So hopefully, perhaps, it might stay this way for some more time. But we are penciling in that there would be competition at some point. Mirabegron, we've already entered into a settlement. And there are, again, there is a general feeling that there would be competition coming in if they do pay the $75 million as license fees of kinds, which others are also expected to pay. So there could be some competition, and there's of course the pressure on because of the royalties and the overall profitability. So these will have to be factored in.
Now, of course, semaglutide, GLP-1 opportunity, something in which you had a tie-up with Zydus also a month back. You are looking at expanding that portfolio. How are you taking this particular opportunity, and what could be the impact in terms of growth in this financial year?
Clearly, we are bullish about it. We have a very large franchise when it comes to diabetes products. So clearly, from that perspective, we do believe that we will do extremely well. But there is going to be competition. So there's no denying the fact that there will be a number of players on this. To the extent it's going to be a bit of a crowded market. But given our edge in terms of the entire ecosystem, so in terms of patient support systems, the fact that we also have a digital health, which could pitch in some ways. So all of this, because the most important thing at the end of the day is going to be how do patients, along with the doctors, kind of calibrate the intake of these medicines. Because at the end of the day, it is, not an easy thing to kind of manage. But given our experience and the overall patient-centric approach that we follow, we're pretty bullish about it.
All right, Ramesh, always a pleasure speaking to you, and thank you so much for taking all our questions. All the best for the next quarter for Lupin. Thank you so much. All right, take a look at the Lupin's stock as well, and that has reached the low point of the trading session, was about 2.3% down, 2.4% down when we started this conversation, and has dipped lower. Also to note that there will be margin pressure when it comes to this particular quarter's performance, and it will not match the quarterly margins that has been really announced for Q4. So Q1 FY27 margins not to match Q4 FY26 margins is really stated, and that is coming on account of a few factors all related to the Middle East tension. That is also airfare, also freight cost, cost pressure in terms of their raw material, and even supply chain constraints when it comes to sourcing some raw materials. So that's the pressure point that is really building and an important guidance for the next quarter going forward, and that's also seen on the stock performance. Now let's take it straight across to PSU major SBI, which is set to report its Q4 numbers today. Let's take it across to our in-house banking expert Shivam for what to really expect from SBI's number. Tell us, Shivam.
Well, yes, the first key highlight points are the margins, which are expected to be at around 3%. And if you look at the deposit repricing thing, that the impact of deposit repricing has also been a key monitorable, as 75 to 80% of the deposits were already repriced in Q3. So their impact in Q4 remains a key monitorable. Now, on the provisions front, there isn't much impact expected, and on the back of that, the credit cost remains. Credit cost is expected to remain stable. Now, however, in terms of treasury income, due to higher yields, elevated yields, we will see a lower treasury income. On the cost of fund side, it is expected to be stable, while the asset quality is expected to improve a bit, with a return on asset to be stable near 1.1%, and advances growth is likely to be led by SME and corporate segments. Also, if we talk about the GNP and NPA ratio, improvements are expected in those, and profit is expected to be at 18,800 odd crores, and NI is expected to be up 9% on a YOY basis.
All right, thank you, Shivam. That particular set of numbers will be closely watched out for today. And let's take a look at the markets as well. Yes, there is pressure that is visible on the markets. Remember, the earnings are also getting digested, and a lot of companies have been incorporating margin pressure coming in and building in for this particular quarter. And that is also getting baked into the overall market momentum, apart from the global cues, which have not been very encouraging. So therefore, Sensex at this point, 0.6% down. Nifty 50 is really trading at the current moment with more than 0.5% downtick. When we take a look at some of the sectors, well, Nifty Bank is underperforming the key indices, and that's also causing a concern when it comes to Nifty 50, where the largest part of the contribution draggers are really coming in from the banking space as well. Well, some of the companies, like from the consumption space, like Asian Paints, HUL, are the ones which are showing green tinge, and also Apollo Hospital, Adani Ports. But on the downside, big boy Reliance Industries, along with banks, are the biggest dragger and eroding a lot of value away from Nifty 50. In terms of sectors, the ones which are really holding in the green, IT, after being beaten down a lot today, is seeing a good day of trade, and also Pharma as well as FMCG. So some bit of consumption play really playing out because of the demand, which has been good in the last quarter. With that, out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better.
Hello, welcome to NDTV Profit. You are watching Trending Stocks with me, Mahima Vachhrajani, and Sharad Dubey, who is standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, over to you.
Thanks. Good afternoon, Mahima. And just looking at the markets, we had a gap down opening, Mahima, but after that, the market has been, in a range, but of course, trading on a negative basis. We are near the day's low level. And we can expect, this trend to continue in the day's trade today. Nothing much happening unless something comes from the geopolitical segment. Let's pull out the Nifty Bank to see what's happening there. Is it mirroring the Nifty or is there some more sell-off? And yes, there is more sell-off. The stock, or you could say the index, is down 1% as well. So no major moves which are happening. It's looking like another boring day of trade. And expect the volatility to continue, especially on the geopolitical developments. And Mahima, I'm talking about this as an extended long weekend as well. Nifty Bank's technical still weaker than Nifty, but nevertheless, the medium-term setup is still on the positive side as everybody is having a wait and watch. The crucial support is 24,100 to 24,150. That's where the two bounces happened in today's trading session. Apart from that, looking at what the trade could be. Remember the diagnostic and the IT stocks. This trade is seeing a good buying, and across the segment, the numbers have been really strong. And remember to avoid any large trade, carryover positions going into the weekend. Cannot expect, a lot of changes can happen, and that might impact your numbers on Monday's trade. Apart from this, also the small caps, interestingly, Mahima, are outperforming the mid caps and the large caps, and that is showing a good strength, especially on the value buying front. So that is a good point. Apart from this, the risk of sentiment is likely to continue, and it's back. That's what we had earlier in the beginning. The story was different, but now it's earnings. SBI, Titan and Tata Consumer. These are the companies which will be coming out with their numbers. They are in the Nifty. Of course, look at Tata Consumer. The stock is up almost 2.5%. So, Mahima, I'm sure you'll be tracking most of these consumption names as well. But what else is there on your list?
Right, so Shah, definitely tracking those consumption names as and when they come out with their earnings. But I think paint companies, let's start with our watch list as to what counters are buzzing in trade right now and why. Paint companies are amongst that pack. Asian Paints, Berger Paints, etc. On the back of the Investec upgrade coming on a lot of these counters are seeing a good up move in trade today. Apollo Hospitals is the other one which is buzzing on the back of volumes. Thermax on the back of strong earnings plus data center continues to be the new sector with strong future growth potential for this counter. You have Sonata Software, which is also, in terms of the numbers, fairly well. Margins saw an expansion, 1-2 large deals in Q4, and healthy large order pipeline is what we're looking at into this counter. Vijay Diagnostic, another one with its earnings where growth in revenue was supported by volume growth. A lot of diagnostic companies have done very well this quarter, keep in mind. Thyrocare Tech is the other one where higher test volumes and strong franchisee expansion has supported growth. So this is also a part of the diagnostic pack. In terms of Craftsman Auto as well as Gen Recycling, we're seeing both of these counters hitting that all-time high, and we'll have to see as to how charts move from here on. The other one in focus will be SBI. As Ashad was just mentioning, SBI, Titan, Tata Consumer, big Nifty 50 names coming out with their earnings today. Probably in market hours, so all of these are buzzing just ahead of their numbers. You also have Shipping Corporation, which has hit a 52-week week high right now and buzzing in trade. Kena Metals, NRB Bearings is are the twin names which are also buzzing on the back of their numbers, where they've both seen a turnaround quarter. And there's Sandur Manganese, where realizations were led by manganese ore on QoQ basis to fully utilize the capacity that they have in terms of permissible annual production limit for iron ore. There's Britannia also buzzing on the back of a weak Q4 numbers. Margins did decline, but management commentary not very negative, on a positive footing. Dabur is the last one in focus on the back of a good Q4 number aided by price hikes is what they've said, but they've gone ahead and said that margins is something that they will be protecting at any cost. So that's with regards to where the watch list goes. But Bharti Airtel earnings are out, and you have that number flashing on your screen up there. Africa Q4 net profit has seen a growth of around 12% at that $199 million. Revenue saw an uptick. So this is, the Africa numbers, of course, in focus. Africa subscribers at that 184 million versus that of 179 million on a QoQ basis. Revenue numbers also flashing on your screen up there, up 3.7%. Average revenue per user at that $9.7 versus that of $2.6. Is that, I hope that number is correct, but EBITDA margins at 50.2% versus that of 49.1% on a QoQ basis. So that's the Bharti Airtel Africa performance that was flashing on your screen. So putting spotlight on the numbers as well. But moving on, Sharad, and Sharad is standing by as always in the market fit for the rapid fire round. Sharad, over to you.
Thanks a lot, Mahima, for that. Joining us, we are having Akshay Bhagwat here. Good afternoon, Akshay. It's always a pleasure to have you. We'll start our rapid fire segment, but just before that, Bharti Airtel, we saw a good spike coming in from its Africa's numbers. Just a quick chart check on Bharti Airtel. Akshay?
Good afternoon, Sharad. So it's a neutral setup for Bharti Airtel, but till 1800 support holds, you can expect some bit of a pullback from current levels, and if the pullback extends, 1900 can be a short-term target.
Okay, and your views on the paint stocks, Asian Paints, Berger Paints, there's an Investec upgrade coming in. Do you think there is a strength in these paint stocks right now?
Yeah, absolutely. From momentum perspective, 2550 swing highs taken off by Asian Paints, setting up for possible targets till 2675. Berger Paints, a strong breakout of inverse head and shoulder bullish pattern at 490 today. Targets around 535 to 540 on the upside.
Right, and just pull out the chart for Thermax. Akshay, a very good up move coming after Q4 numbers. Is there more steam left to this rally, or do you think a good time to, partially book profits?
I think 4850 to 4900 is still on, so momentum is strong, can carry forward from BTST perspective.
And your views on Sonata Software, a good gap up opening coming in. On the charts also, it seems like a up move is expected, at least in the medium term.
Yeah, strong reversal attempt seen on the charts, short-term bullish patterns on the charts, target 315 on the upside.
Right, good numbers and a bullish commentary in our special KYC show. Thyrocare, that's the stock we're talking about. Stock is doing well. Do you see a good momentum coming in this or the other diagnostic plays?
Yeah, so diagnostics has been doing pretty well, and for Thyrocare Technologies, the move has been pretty much positive today, but I believe one should book out profits if it's short term, because resistance of 520 has been hit in opening trades.
Right, for the second straight day, Craftsman Automation has been buzzing in trade. Yesterday it was the stock of the day by Puneet also. Just wanted to take your views on this. Do you think it's a good time to book some profits?
Absolutely. Overbought on short-term technical parameters. Book out profits. Look for re-entry opportunities around 8600 on dips.
Right. So there's a book on profits coming in for Craftsman Automation. That's the rapid fire segment. Interesting. Over to you, Mahima.
Right, let's now take a look at what's trending in terms of where Google trends go and stocks that are, being most searched on Google right now. Let's try to pull that up. HFCL, Bajaj Auto, Lenskart, of course, on the back of the block deal that, we broke the story yesterday and today it's confirmed as well. Pidilite on the back of its numbers, strong volume growth, beat in terms of where margins go, and MRF is also one of that heavy counter that's on the Google trends right now. But Akshay, I'll take up two counters from this, right? Lenskart is the one, if you have enough data on the charts to give a perspective, and Pidilite. We've seen good fundamental performance in the last 1 year. FY26 has been good, Q4 has been extremely good, but what are the charts suggesting?
So for Lenskart, first of all, the stock has been in a bit of a downtrend on short-term charts, but it's nearing an important support. 470 is a trading support, around 460 is the 200-day moving average support, although the data is a bit limited. But somewhere my belief is the stock should rebound from the areas of 470 to 460 zone. So the downside looks capped. Be prepared for a rebound. It's a short-term rebound right now, which I'm expecting, and 520 can be on your target list. As far as Pidilite goes, well, it's more of a buy and hold kind of a stock. Short term, it's tested a resistance in the opening trades. So in all likelihood, small correction till 1450 can unfold. But if you give this time 3 months plus holding, then overall 1600 to 1650 are the targets still open from a medium term perspective.
Okay, all right. So that's the view coming in on Lenskart as well as Pidilite. But Titan is another one that is in focus today on the back of its, the expectations of its Q4 numbers, and it could come anytime soon now because they're having their con call at 3 p.m. today. But overall, the expectation for Titan is that the revenue might see an uptick of 26% odd. EBITDA may rise around 34% odd. Margins may be at that 11% mark, which has been the case for the past so many quarters for Titan now. The question really here would be as to when margins start to pick up. Net profit might see an uptick of around 46% odd. As per the Q4 business update, just to give a recap of that, consumer business saw a growth of 46% odd. Domestic business saw a growth of 42% odd. Jewelry business a strong growth of 46% with a like-for-like growth of 48%. In terms of buyer growth, that after 3 quarters has seen a high single-digit growth in terms of buyer growth as well. Watches saw a growth of 7% odd. Eye care saw a growth of 16% odd. Emerging business has been doing very well. Fragrances 30% growth. Women bag 47% growth. However, Taner is still something that's lagging behind. A downtick of 1% is what they've seen this quarter. But I think international business has also done fairly well. Overall, a growth of 156%. North America business growing at 50%. Middle East business, of course, did get impacted because of the West Asia conflict, but overall, GCC business has seen a growth of around 37% odd. I think key things to watch out will be in terms of volume growth as to how much that has been, that plus the percentage of buyer growth that we're expecting, and how Middle East has impacted the overall performance in terms of how it is expected to impact going forward as well, and margins commentary from here on is something that we'll be watching out for in Titan. Akshay, your view on the charts for Titan?
Technically, still overall the broader view is positive. It's just that the stock has lost momentum in the last couple of weeks in terms of the acceleration move on the upside. My belief is still 4200 support holds. It's still a positive chart, and you can continue to hold on to the longs, today being the result day. If it holds the support, sees a bounce back respecting the support, you can be again prepared for targets of 4500 plus.
Okay, Tata Consumer is also the other one from the Nifty 50 pack that is in focus. Earnings today, of course. What are the expectations? Where the expectations are that revenue might see an uptick of 13% odd. EBITDA will grow faster than revenues at that 20%, 21% mark. Margins might slightly improve to 14.4%. And net profit might see an increase of 18.5%. Now, strong revenue growth potentially in double digits is what we're expecting. India food business is expected to show significant growth, likely to maintain healthy volume growth in the core tea and salt business. Acquisitions will aid business growth from here on with regards to the Organic India acquisition. Tea inflation could see some impact on the margins. That's something that we'll be watching out for in terms of how margins fare this quarter and what the outlook looks like going forward in FY27. But I think impact of pricing interventions in the international markets is one thing for Tata Consumer, which is a key. The other aspect is impact of West Asia conflict. How has that been? What are the price hikes taken? What are the price hikes going to be like in Q1? And what is the volume growth going to look like? These will be the key things to watch out for when it comes to Tata Consumer. Akshay, that's the overall view of what you can expect from Q4 numbers, but what are the charts indicating?
See, we are nearing a very strong resistance zone for Tata Consumer product. 1200 to 1220 is that zone. If that zone is overcome, then you can expect a massive breakout. But till then, it is more of a neutral setup. Right now, 1140 is an important technical support. Till it holds, you can expect momentum to regain. So continue to hold till it trades above 1140. That's the recommendation on charts.
Okay, so that's of course the view coming in on Tata Consumer, but let's also take a quick look as to how the markets are doing at the hour. You have your Nifty 50. Let's try to pull that up as to where it is trading at right now. There you go. It's down by about 0.6%. The Bank Nifty, as Shahad was mentioning earlier as well, was down by about 1%. So not in tandem with the benchmarks, at least at its day's low point. 55,400 levels is what we're seeing on the Bank Nifty right now. But Biocon, let's try to pull that up and see as to how the earnings have fared. Q4 earnings have definitely surprised on stronger footing. We've seen beat on low expectations. Q4 FY25 had a higher base, but CRDMO revenue grew only 2%, limiting overall growth. Revenue saw an uptick of 2.3%, EBITDA down 5.4%. Margins at 22.6%. But in fact, my colleague Varsha spoke to the management and listened to that conversation.
When it comes to biosimilars EBITDA margin, which was almost 26% in Q4, how much is this sustainable? What is the expectation when it comes to these margins going ahead? And if you could also help us with the growth outlook when it comes to your biosimilar, considering the change in product mix and of course the new launches and also the operating leverage.
Yeah, well, first up, Varsha, thank you for having me on your show. It's always a pleasure. The quarter that's gone by has been another tremendous quarter that we've had. Very strong showing, as you rightly said, on a like-for-like basis. We've had good growth on both our biosimilars business as well as our generics business. The biosimilars business particularly has shown exceptional growth year on year, 16% in revenues. We've got a 40% growth in the EBITDA. So clearly a very strong set, like you said, on the biosimilar side. On the generic side, if you look at it, if you were to again look for the base business, we've seen an improvement in margin both year-on-year basis. We've seen growth in revenues, almost 13%, and on 300 basis points improvement sequentially over the previous quarter. So again, that business also is pointing in the right direction. So I would say that the quarter was underpinned by North America and our oncology business for the biosimilar side of it, and the peptide and the US or rather ex-US for the peptides in the generic side of it. So quite diversified and very focused in terms of margin profile. You talked about whether the mid-20s is a sustainable EBITDA margin. I would say very much so. We've had quarters where it's been higher, but we've always guided that we will be in the mid-20s on the biosimilar side, and that's where we are.
Right. So, continuing on that point, when it comes to margins of biosimilars, could biosimilars eventually become a 30+ EBITDA margin, once utilization stabilizes fully? I know this is not possible in the next 1 or 2 years, but talking about the medium-term opportunity, can you see biosimilars margin going at around 30% plus?
Yeah, I mean, certainly in the mid to long term, these things are all possible, particularly when you have new launches that will stabilize over a period of time. Because as you know, in the biosimilars business, you don't see an immediate reflection of a new launch into the numbers. It takes several quarters before you actually start seeing your product reflecting in the margins. So I would be quite hopeful. The near-term signs of this are that your gross margins are strong, and that's what you're starting to see. Your costs are moderated, which is why your EBITDA margins have started to creep up from the low 20s to the mid 20s. And the reason for that is you have an operating base which is not growing even as your revenues have grown. So that's the operating leverage that you see flowing into your EBITDA. And which is why we feel very confident about the mid 20s. But in the mid to long term, for it to move in the direction of 30 is not an impossibility.
Right. Mr. Tambe, where I was coming for this is, biosimilars globally are becoming increasingly competitive with, pricing pressure intensifying. How will you, defend your margins while continuing to scale the market share when it comes to, these products?
Yeah. So I think the first piece is that the fact that there is increased interest in the biosimilar space is a validation of the thesis that we had presented more than a decade ago when there wasn't anybody looking at this at all. At that time, we were the first movers and we said very clearly this is where the next wave of opportunity is going to be. And now you're seeing that happen. You're also seeing companies announce acquisitions and starting to make investments in that direction. We're seeing hurdles come down in terms of development costs. So the industry is headed in the right direction. Now, how do you maintain your lead? Well, we've already invested significant amount of time, energy, effort, talent in developing our position and getting up to this point. We believe we at least have a 5-year head start, both in terms of capability, other in terms of the investments we made just from a time value perspective. And more importantly, if you were to look at the full integration that we built from a business standpoint, which is development, manufacturing, and commercial capabilities, that allows us to leverage across the value chain. And that is something that is not something that can be built overnight and will allow us to create enduring value.
Right. And, what is the next major biosimilar opportunity, Mr. Tambe, that you believe can, materially move the revenue needle for the company?
Yeah. And again, like I said, we've not got any one bet that you would play and then it would be a hit or a miss. We've got several products that we are launching in the coming fiscal, in the current fiscal now. So we are looking to see that these ramp up in a steady way, because this business is something that delivers enduring margins, like I said just a bit ago, and we focused on that. If you've seen the products we've launched 8 years ago, they still deliver significant margin contribution and have held a fourth of the market share, which is 25% and more. So that's the business we are building. It's not a flash in the pan. The idea is to build a business which can deliver lasting returns for more than 7 to 10 years.
Right. Quick 2 questions, Mr. Tambe. One is, of course, you also highlighted that the deleveraging progress and interest savings are beginning to accrue. What is the medium-term target for that? And also wanted to understand how important is the GLP-1 opportunity for Biocon over the next 5 years. 2 quick answers on this.
So first is the interest savings of 300 crores is what we expect to accrue this financial year. So that's as near term as we can get. And we expect to start seeing that in this quarter itself. It started accruing from last quarter partially as we concluded the acquisition of the minorities in BBL. But now you will see the full benefit of it play out in fiscal year 27, with roughly about 75 crores starting to play in the interest line in Q1 of fiscal 27. So that's the immediate position. Our debt EBITDA ratios have already moved from over 4x to less than 3x. So that's another significant indicator on that. So that's your question number 1. The second question in terms of the GLP-1 portfolio, again, a very synergistic portfolio to our insulins pipeline. We have a leadership position there, as you know, and we believe that this will complement it, developing a diversity profile in a portfolio which is very differentiated from us.
Well, that's the management of Biocon. Akshay, I just wanted to get your views on the charts for Biocon as well. Of course, there is a slight positive momentum in the stock, but do you think this will sustain going ahead?
There has been a good move on charts, and for short term, it's a bit difficult that it sustain. There might be some sideways action before the next leg of upside resumes. So I think from a positional perspective, 1 month plus holding, it might make sense to continue to hold because the support is 350. But for short term traders, it's an exit. Wait for dips around 370 to take re-entry opportunities.
Right, Akshay, SBI is also coming out with its numbers today. Initially, what are the chart levels suggesting here? Of course, we are seeing some kind of a volume build-up also. Could you give us the key levels for SBI?
So as of now, it's a neutral setup with 1120 being the upper end of the range and 1050 being the lower end of the range. It's expected to be within this range, and at this point, there is no trade which is seen from a risk-reward perspective. Let either side of the range break to take a fresh trade or re-entry in State Bank of India.
Okay, so it's a kind of a wait and watch right now until the numbers start coming in, and that's where we'll see the reaction in the stock. But another stock in focus is ABB. Just the numbers are expected to come. And the revenue growth, it's likely to get aided by two segments. The first one is, of course, the electrification and the motion segment. The robotic divestment is something which the street will be watching out for. And also, the process automation segment, that's expected to remain weak when it comes to overall numbers. The margin pressure is likely going to be there, of course, for the commodity inflation, which is largely known in the markets, and a strong order inflow and backlog growth. That's where the bullishness is coming. You can see the numbers also, the expectations coming in from ABB as well. Just wanted to get ABB on the charts as well. Akshay, how is the positional setup looking like for ABB, and also if any other capital goods stocks is there which is attractive right now?
So the broader setup is still positive. Lately, 5-6 sessions has seen a slight corrective action, but my belief is around 6,800 to 6,900 zone. There should be another rebound attempt or buying action in the stock. So continue to hold. Possible upside targets are till 8,000.
All right. Thanks a lot, Akshay, for your time. Of course, we had a wonderful session, rapid fire, and the other stocks as well. It's always a pleasure to have you. But now we are running out of time. From me, Mahima, and the entire team who put together this show, it's a thank you, and stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, We connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Breather on Dalal Street as Nifty closes in the red near 24,300. Broader markets outperform with FMCGs, PSBs and IT indices being the biggest laggards. Traders expect to end the week on a flat note. FMCG majors Dabur and Britannia announced Q4 numbers. In line set for Dabur while Britannia misses on revenue expectations. Lupin delivers a strong quarter while Biocon results show steady growth. And amid looming health scare related to another virus spread, the World Health Organization has said that 5 cases of hantavirus have now been confirmed in relation to an outbreak on a cruise ship. Many more may follow. That's the warning coming in due to the virus's 6-week incubation period. And moving on, then let's talk about oil prices that are sliding for the week as diplomacy still holds the upper hand. Despite fresh US-Iran clashes near the Strait of Hormuz, President Trump insists that ceasefire remains intact at this point in time, keeping markets caught between peace hopes and war risks. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's quickly take a look at the markets as well, because it is a largely lackluster day that you're seeing coming in for both Nifty as well as Sensex. And when you talk about Nifty, about a 160-point knock is what you're looking at, as you can see on your screens as well. Sensex, that cut is in fact much deeper, more than a 500-point cut that you're looking at right now. When you talk about the broader markets as well, they're slightly outperforming benchmarks as well. So that's largely the kind of picture that you have right now. But let's also talk about some of the sectors that are in focus right now. So it's financial services that's on the back foot. There's Nifty Bank, oil and gas, PSU Bank, energy, metal and realty, exactly in that order. Those are the sectors that are under pressure. What's holding up a little resilient at this point in time is perhaps IT, FMCG, Pharma. So those are some of the sectors as well that are holding on to a little bit of gain also coming in. But when you talk about the list of losers, something like a Dalmia Bharat makes it to that place from within the broader universe with about a 6.5% cut also coming in. But when you talk about the Nifty 50 picture as well, about some of those losers like HDFC Bank, that's one heavyweight that's trading under pressure, quite under pressure right now. Coal India, Bajaj Finance, Axis Bank, Ultratech Cement, ONGC as well as Hindalco down anywhere between 1.5% to 2%. When you talk about the list of top gainers as well, Tata Consumer up about 2.5%, Asian Paints, Apollo Hospital, Quality Walls as well as Adani Ports. So those are some of the gainers from within the Nifty 50 complex. But when you talk about the entire commodities complex as well, that's also something that's very much in focus as we speak as well. Let's also quickly take a look at the roundup that we have coming in terms of oil prices as well as gold right now. Oil prices, of course, slumping with that Brent also slipping, and that's something that you're seeing coming in. In terms of oil prices, when you talk about gold prices, they're rebounding on the flip side. So that's largely the kind of picture that you're looking at right now. With that in mind, let's also get you a check going in terms of what you can be expecting going forward, because as you can very clearly see, Brent is just back above $100 a barrel. When you talk about US WTI as well, a little bit of strength that you're seeing emerged on that front as well. But let's also get in NS Ramaswamy, head commodity desk and CRM at Ventura, also joining us on the show right now. Thank you so much, sir, for taking time out and joining us this afternoon. And first things first, I wanted to try and understand what you really think about what's happening with oil as well, because it has been a very volatile week. On one hand, you do have the entire war premium that is just slowly starting to also recede just a tad bit. How are you looking at all of the triggers that we've gotten in the week gone by thus far?
Crude oil is again, the news is only about how the talks are going to really happen and potentially how Iran is going to respond to the proposal which has come up. So basically, it's totally volatile. The moment we don't get to hear anything positive as regards the talks or the proposal that has come up, we immediately see a WTI as well as Brent going on the upside. However, the floor has already been formed. When you talk of WTI, we don't see it crossing $99 or $100 per barrel. If you talk of Brent, again, maybe 105 looks like to be a floor. But again, if the peace talks and other things were to materialize, we are really going to see, by the way, even moderation can come up from the China discussions and China interfering or giving a view that the peace talks has to really translate into opening of the Strait of Hormuz and the supply constraint should be removed. In that case, we are going to see another 8 to 9, 10% fall in the WTI crude. So it's just a matter of unknown and uncertainty prevailing in the energy segment. One cannot predict how things will happen, but definitely a floor has been formed and it can come down and get corrected to maybe $85 per barrel in WTI and probably close to $90 per barrel in Brent if something positive really happens in the energy talks.
Well, absolutely, and that makes sense in terms of how you should be looking at prices as well. But, do you think that higher for longer oil prices is a reality that you're looking at right now when it comes to oil prices? And do you also think that the base for oil prices has changed just a little bit because of the war right now? Because the way that we were looking at oil prices perhaps seems to be a little different right now.
Absolutely. The floor, as I said, the current volatility and the floor is what I was talking about. But the higher side of the price is bound to remain. It has to actually translate into usage. It has to really translate from the Middle East and to the various Asian economies and Europe and everywhere. And then only we would see some correction. So we are not going to see a very high going forward when we are talking of a medium term, 3 to 4 months down the line. We are not going to have a pre-war type of price levels. The energy segment price of crude, WTI and Brent are definitely on the higher side. It will remain on the higher side, but certainly over a period of time in the medium term, it can get corrected to maybe post-war session of maybe 75, 80 range. That would be the price which we have to accept, and the world has to move on with that higher level of oil prices. Because there is the shortage is already seen. There is no extraction happening because the storage is already full. So there is no further production that is happening. So there is bound to be some supply constraints that is bound to come up in the medium term.
No, absolutely. And thank you so much for helping us with that update also coming in terms of what we should be looking at for oil prices as well, for the base as well. That is now to be looked at very differently. But, when you talk about gold as well, there's a little bit of indication that we're getting in terms of China also stepping up their buying. And the central banks, of course, were a key trigger in the bull run for gold in 2025. Are you looking at it in perhaps the same light for this year as well right now that we're, firmly looking at that sort of indication also coming in from BJ?
Absolutely. That said, we need to immediately see the short-term impact. Like today, Friday, we have got the US non-farm payroll report, which is coming up. So gold is actually positioning ahead for this non-farm payroll data, which is coming up. It is very well supported by a lower yield, which we have seen the 10-year treasury yield from 4.37 to 4.38 level. It has actually got corrected to close to 4.3334. So the lower yields and probably the dollar correction, the USD correction in the dollar index declining is definitely giving a support to gold. And basically the volatility in gold has begun after a very, very compression period which was there in gold, close to $4,600, $4,580 per ounce. It has really bounced back. The volatility has begun again, and it is trading above the resistance levels of close to $4,680 level per ounce. So now it is quoting at around 4,730. We are expecting gold to now rally further, excepting for one negative, and that is going to be the headwind, is going to be the interest rate. The rate cuts, whether it is not likely to happen looking at the inflation and other triggers which are coming up. So that is a persistence higher interest rate regime could be a headwind for gold. But then the volatility has picked up and gold is on the move. ETF has recorded again a strong buying spree and an inflow has started. And as you rightly pointed out about central banks, that is also going to give going forward for 2026. It's definitely gold is a good asset class one has to look out for.
No, absolutely. And, if somebody already has chips on the table or if they're looking at fresh buys right now, given that there's this kind of heightened volatility that we've also seeing, even for gold prices right now, the entire safe haven demand picture has drastically shifted ever since the war began. How are you then on both of these counts looking at gold prices?
Absolutely. We are in fact seeing that should be a strategic for an investor outlook. If you were to see, there has to be a strategic asset allocation. The general 10% rule which we talk about in a portfolio, we need to have between this 5 and 15% allocation to gold over a diversified portfolio is what is really maybe a conservative investor looking out can lean towards maybe 12.5 to 15%, but a very aggressive investor who is looking out for risk on assets, they can probably park gold with around 5%. But again, the 10% rule for an investor goes on. There is a gold which works out, ETFs can work out like an SIP, and there can be a constant purchase on every small correction that or dips that we can expect whenever such situation arises. So I think that is the holding pattern has to be constant in gold. Nevertheless, there is never a reversion that is happening in the price levels. So there is no question of anybody going to quit the positions in gold. In fact, that has to be added on constantly in a staggered manner.
No, absolutely. Staggered manner, that's the keyword also coming in. Thank you so much for taking time out and joining us this afternoon. So there you go. That's how you should be really staggering your gold purchases as well. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Welcome back. Thank you so much for staying tuned in. Let's talk about BSE that continues to fire on all cylinders, delivering another quarter of strong outperformance as well. You're looking at profits, revenues and margins that have all beaten estimates, in fact. And that's driven by a sharp surge coming in index options trading and operating leverage that has been kicking in. In fact, my colleague Sharad Dubey caught up with the management. Let's go across and listen into a slice of that conversation as well.
Just wanted to understand, how did these numbers come up, and if you could just give us some operational angle to it as well.
Well, as you know, BSE started its derivatives journey only just 3 years before with the relaunch of Sensex derivatives. The product was well supported by the market participants, and the last 1 year there has been significant amount of growth in some of the parameters, which has helped in the performance of the contract. The number of members went up by around 140, 150. The number of FPIs almost became 5 times what it was before. We have increased the number of co-location racks. Because of the expiry changes, what happened was more and more volumes started happening, not necessarily only on the expiry day, on the remaining part of the day as well. Some amount of trading increase has happened in the monthly contract volumes, which is another very good contributor for the top line and bottom line. So all these factors has led to a wonderful performance in index options. But there has been no overall growth. Equity also did well. And in the mutual fund area, we had record number of transactions. We had record number of FMCG listings. And we also had good amount of colo offtake, and therefore the costs associated with colo were clearly taken care of. And index business went up significantly well and has started doing very well. All this has contributed for the success and the numbers of BSE.
Right, and of course we can see that in the numbers playing out. But I just wanted to understand a little bit about the April and May trends when it comes to your operational parameters, and also the market share gains has been there. If you could just give us a flavor of the market shares.
BSE has always been taking the stand that we are not looking at market share as the parameter for us to track in respect of equity derivatives. Market share, as you call it, actually is between apples and oranges, because the products are unique. So how can we make the comparison between two different products and say this is what is the market share has always been our view. Our parameters has been that how much you are deeper and how much you are broader in terms of market and the product. That is what we have been concentrating on. As well as April and May, what you're talking about, May is too early. Compared to the last March, if you look at it, the April volumes, the ADTV has almost become twice the number. If you look at May 23, 24, 25 and April 26, May 25 to April 26, the ADTV of premiums has almost doubled. From around 15,000 crores to 33,000 crores. That is a very good parameter. The number of contracts traded has gone up from 7.8 crores to 17.6. Future ADTV has gone from 368 crores to 777 crores. And the peak OI has also increased by around 50% from 60 lakh lots to 99 lakh lots in the index option segment for us. The number of UCCs who are registered with us has gone up, while there are 33 lakh UCCs. Regular participation we are seeing from 3.5 lakhs people. The expiry day concentration came down from around 70% to 80% to somewhere around 40% to 50% now.
Right. Right. Ramamurthy sir, let's talk about the launches also. Could you give us some hints about your new product launch? It's there on the focused IT index futures and options. It's an exclusive derivative index in the country. Just a little bit details about it, sir.
Wonderful question that you have asked me, actually. Focused IT is a special type of an IT index. When we were talking to the market participants about a new product, one point that came out was, post this AI revolution that is happening, IT scripts are seeing a lot of volatility. More and more people have IT stocks in their portfolio. If they want to effectively hedge their portfolio, they were finding it very difficult with the existing index. So they wanted us to coin a new index and launch products upon them. So based on the market feedback and also in line with the guidelines for SEBI on sectoral indices composition, we constituted this index, which ensures not any one security can sway the index. It is a free float market capitalization weighted index. But it puts a threshold of max of 20% on a single stock as a representation, and 3 stocks put together not exceeding 43%. Therefore, it is a sort of a balanced, focused IT index, which will help the market participants in terms of volatility that they are seeing because of the global crisis and global volatility and the increase in the AI use and its impact on the IT industry. People will be able to effectively use this, is what we feel. And so we are launching it from May 11th onwards as required by the market participants.
Right.
After taking approvals from the regulators.
Right. Ramamurthy sir, I just wanted to ask a long-term view. This has been for the last 3 years. The Sensex derivative is celebrating almost 3 years of its relaunch. What are the success metrics looking like? How has the journey been? If you could just reflect on that.
Honestly, this answer will be a repetition because this journey has been from 8 brokers and 28 clients on the first day, and no software vendor, front office and back office supporting BSE, and with our system capability maximum of around 10 crore orders processing per day. Today, where we stand, we look at 571 members, more than 500 plus FPIs, and a very active market. And the capability for us is to handle around 1,800 crores orders, 1,800 crores orders per day is our capability today. And we are utilizing at least 40 to 50% of it on a regular basis. And our order per second management has also significantly gone up to around 22 lakh crores at this point of time, 22 lakh orders per second. So clearly there are a lot of improvements in technology, in the peripheral systems, in the participation, the support from the software vendors and back office vendors, the support from the market participants in terms of brokers and FPI. All this has contributed to the success and great journey of 3 years of BSE.
Right. And the last question, sir, is of course we spoke about the past, but the future for FY27. Which are the new areas where BSE would be going through? Of course, we spoke about the launch of your index, IT index futures and options contract, but what else is there? Any other important instruments being introduced?
See, we are introducing more products in IT, in derivatives, that is for sure. And also we want to grow the market for equities. Unfortunately, though we are today having the regulatory capability to have a common contract note, somehow many of the market participants are not still using best price execution and become exchange agnostic because their approvals for SOR apparently are pending from other exchange, because of which they are not able to implement it. We wish that this changes and the people are able to become exchange agnostic and take the benefit of fair prices and at all venues that are available, and therefore the markets overall grow. We feel that this will be a complementary thing for the market, not into cannibalistic, and therefore overall market growth will become imminent, and thus therefore bring in more liquidity, more capital formation and better economic development. That will be one area. And mutual fund is another area where we will continue to concentrate upon, apart from just simply having more products in the index option segment.
Alright, then there you go. So that's the word coming in from BSE that is firing on all cylinders, at least when you talk about the results and that strong outperformance. When you talk about the stock, of course, it's trading with a cut of about 1.5%. But what's doing well right now from within the Nifty 50 complex is something like an Asian Paints with the 2.5% uptick also coming in. And a bunch of your paint counters, in fact, doing well, just like Asian Paints. So Berger Paints up about 5.5%. Quite some trigger also coming in terms of Investec's view, and it is making it to brokerage radar as well when you talk about some of those paint companies. So it's an upgrade coming in for Indigo Paints, where they've hiked the rating to buy as well, Kansai and Aerolac as well. And Asian Paints and Berger Paints also a rating upgrade that is coming in. And in terms of the target price, when you talk about just the target price, you also have Indigo Paints, where they've hiked the target price to somewhere close to 1,200 rupees. That's largely the kind of picture that you're seeing coming in for some of those paint counters. But when you talk about the peak competition, that's also something that Investec is talking about, where they're saying that that seems to be behind for some of those paint counters. Incremental market share, that's also something that they're talking about in terms of how it's going to be moderating on some of the newer players, and that's also something that you're going to be seeing happening. Lastly, when you talk about Birla Opus, it appears to be focusing on reducing losses, and that's also something that they've gone ahead and highlighted. But what's happening very clearly is that they've hiked the target prices and ratings across the board. But with that in mind, let's also move on and get you some other news flow as well. And 149 passengers aboard a luxury expedition ship are stranded in the Atlantic after 3 deaths and 8 hantavirus infections. Health authorities, in fact, across 4 continents, tracing passengers who disembarked before the deadly outbreak was detected and monitoring those that may have contracted this particular virus as well. Let's take a look at this report.
Ha concluido la evacuación de todas las personas sintomáticas en Cabo Verde. El barco va a continuar rumbo a Canarias, donde espera arribar en el plazo de 3 días al puerto secundario de Granadilla de Abona.
The Dutch-flagged vessel MV Hondius left Cape Verde Wednesday evening. It is bound for the Canary Islands following the medical evacuation of 3 symptomatic patients. Spanish authorities are preparing for a coordinated disembarkation.
Contará con todas las garantías de seguridad necesarias. Tanto la atención médica como los traslados se realizarán en espacios y transportes habilitados especiales ad hoc, evitando todo contacto con la población local y velando en todo momento por la seguridad del personal de asistencia.
This specific strain, the Andes variant, is unique. Unlike most hantaviruses spread by rodents, this version can spread between people. Experts believe the ship's confined spaces facilitated the transmission.
A partir de que una persona se contamina con el ratón, después cuando tiene su afección pulmonar puede contaminar por vía aérea a la persona que está cerca, que es lo que ha sucedido ahora en el barco, que era un lugar cerrado y personas que estaban difuminando el virus.
The investigation now focuses on Argentina, where the cruise began on the 1st of April. A surge in local cases there is being linked to climate change. Scientists are currently shipping RNA samples to Europe to help refine testing for the remaining passengers. Meanwhile, South African health officials have also traced over 40 people linked to the outbreak so far.
La letalidad es mayor y tiene la particularidad de poder formar clústeres, que haya grupos de personas que se pueden contagiar entre personas. Es la única cepa.
While the WHO states the general public risk is low, the long incubation period means monitoring will continue for weeks.
This is not the next COVID, but it is a serious infectious disease.
The ship is expected to dock at Granadilla de Abona this Saturday. Strict biosecurity protocols remain in effect as international health teams prepare for the vessel's arrival.
Alright, then there you go. So that's an update coming in when it comes to this virus, and that's something that we'll keep watching out for as well. But that's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price, volume and now earnings as well. So what's on the show today? Firstly, we'll be speaking with the management of RSWM. Now it's on earnings that the company has reported. Its PAT number that the company has reported in the fourth quarter is the highest that we have seen in the last 8 quarters, and the stock is up nearly 22% in the last 1 month. So what's the way forward is the key question that we'll be asking the management of RSWM. Apart from that, we'll be also covering the earnings of Global Spirits. Now, the number on the face of it might look very good, but actually it has missed analyst estimates. The stock is down nearly 10% in trade, and this was largely on the back of lower volume number that the company has reported compared to what analysts were estimating. Even the revenue has been a miss compared to the analyst estimate, and that is the reason why the stock is down here. Apart from that, we'll be also talking about NRB Bearings. It has seen its biggest gain, intraday gain since March 2024. Highest EBITDA is something that the company has reported in at least the last 3 years. The stock is up nearly 13% in trade. And lastly, we'll be also speaking about Suryodaya Small Finance Bank. Now, the company has been able to meet its FY26 guidance that it had given at the start of the year. Moreover, for FY27, they have guided a 30 to 35% loan growth and deposit growth is the guidance coming in. The stock is trading at its 1-year intraday high, and there are strong volumes on this counter, nearly 30 times its 20-day average. So this is basically what we'll be doing today on the show. Now, if you look at the market, it's not been a great day. We are down nearly 140 odd points, but market is holding on to the 24,150 level that we have been seeing in market. Now, if you look at the sector indices, on the losing side, we largely have the financial names, banking, private bank index and the PSU bank index. And on the gainer side, we have IT as the one of the major index that have been gaining in trade. But when it comes to small cap names, the Nifty small cap index is also trading in green despite the fact that the entire market is largely trading in red. So Varsha, which are the key stocks here that have been buzzing?
Well, let me start with First Source. If you see, the stock is buzzing in trade. Good uptick there. There you go. The stock is up almost 17%. Even Sonata Software is buzzing. This is on the back of Q4 FY26 numbers that the company has posted. The stock is up almost 14%. Strong volumes there too. Vijaya Diagnostics, another good quarter for a diagnostic company, and because of that, Metropolis is also buzzing. Good quarter expected. Overall, if you see, Dr. Lal also had good quarter. Even Thyrocare was also, had a good Q4 quarter as well. And on the back of that, all the diagnostics company are actually in focus. You have MRPL also in the buzz. Even Electra Green is also buzzing in trade. There you go. MRPL is up almost 8%. Electra is up almost 8%. On the loser side, though, you have CCL products. The stock is under pressure. It's down almost 7%. You have Vardhaman Textiles, Ratan India, and VIP India, which all these stocks are under pressure when it comes to small cap segment. But one stock which is in focus is RSWM. Now this is. So we are going to speak to the management. This is on the back of Q4 FY26 numbers. Company has posted a strong set of numbers. To speak about more on Q4 numbers, how has the quarter gone by, what are the next level targets that the company has been eyeing to, we are joined by Mr. Rajiv Gupta, who is Joint Managing Director at RSWM. Mr. Gupta, welcome at NDTV Profit. Always pleasure to have you. Just take us through the Q4 FY26 highlights, and how is FY27 looking like for you in terms of revenue and margins?
Thank you, Varsha and Sumit. So this is actually a good quarter we had. So if you look at RSWM numbers for the year, we clocked EBITDA of 327 against 233 of the previous year. So similarly, quarter is also best quarter in last 8 quarters. And the journey has been good. As you know, RSWM is a multi-product company. We are operating in yarns, recycled polyester fiber, denim, and knitted fabric. So the challenges in all the businesses have been different. What we did particularly is a better supply chain management, handling the raw material fluctuations, which were really very, very high in this quarter because of uncertainties in Gulf area. So the polyester staple fiber, which is one of the major raw material we have, there were huge fluctuations. So we worked on that. Working capital optimization has been another area which was very closely worked. And if you look at the numbers, year over year, there is around 12.5 CR of reduction in overall interest cost. Then sharper market alignment is one area which we did. We worked on the diversification of market because of the uncertainties created because of geopolitical situations. So we consolidated across geographies as well as segments, worked on improving our product mix, focused largely on higher value-added offerings, and also rationalize our low-margin businesses. So if you look at overall cost optimization in the segments because of the challenges posed by gas prices, right, freight cost, and all that.
Right. Yeah. But if you could just take us through how have things been so far in April? Have you seen any impact of the Middle East war? Has your cost gone up? Anything on that front?
So it is continuing. If you look at the availability of gas, it is smoothened out. In March, there were challenges in availability. So that is over now. But the cost price of gas definitely has gone out. Similarly, the freights are still on the higher side. So the cost-led pressure is definitely there, particularly visible in our denim segment and to some extent in our knitted business segment as well. But if you look at things are smoothing out in terms of demand, there is slightly better outlook in the current quarter. If you look at numbers in comparison to Q4, April has been more in line with Q4 or slightly better in few of the businesses we have.
Okay, so what could be, can you quantify the impact of the same that we could see in the first quarter of FY27, given the fact that you're saying that gas cost has also moved up, freight cost has also moved up, or what could be your margins be? Any guidance on that front?
So we, as a company, as I said, we are into 5 different segments. So this poses more challenge in our denim segment at this point of time. But if you look at our synthetic yarn business, which is almost 1/3 of total revenue. It is more a domestic business and do not have that much impact from the challenges. So similarly, recycled blister fiber that we made is also one which is more for domestic focus and do not have that much impact. So overall, if you look at, we as a company will be able to maintain more or less similar or slightly better margin in current quarter.
And also, if you could just take us through, do you have any exposure towards exports, and in which countries do you export your products?
So we have exposed almost 40% of our turnover comes from export, though this varies from business to business. Cotton yarn business, we do almost half of the sales from export, whereas in synthetic yarn, it is less than 25%. But overall, as an organization, we do around 40% revenue from exports. And we do in more than 60 countries of the world, touching almost all the countries which are importing textile from India. So we get impact in the various countries accordingly. One of the major countries we are exporting synthetic yarn is to Turkey, which is disturbance at this point of time. But at the same time, to other countries in Europe and to Bangladesh and China, the trade is more or less smooth now.
Right. Sir, so in FY26, for the whole year, there was a degrowth in revenue, though margins saw 200 basis point uptick. Just wanted to understand, how is FY27 looking like? What is the growth expected? Will you see a higher growth considering the negative growth that you had in FY26? And you said that margins, you are expecting slightly better margins than FY26, right?
Yeah, so if you look at why did we degrow in terms of revenue for FY26, global weak markets and the conditions geopolitical are known to everybody. US tariff was one of the impact. The cotton import duty was another impact. So supply chain disturbance was all there. In addition to that, our internal decision of working on loss making or less profit making product was also there. So we closed our spinning unit in Chata, which has resulted in a negative revenue of 250 CR for the entire year FY26. So all that is done. Now in the current year, what we are likely to improve is better utilization in our denim and knit business. And because of the cost-led increase in revenue, increase of cotton fiber as such, increase of blister staple fiber. So our revenues are definitely looking better in current quarter. So we will definitely improve in revenue if you look at Q1 of 27.
What can be that ballpark number, sir, if you could, help us with for the benefit of viewers?
So it will be difficult to comment on this at right point of time, but I can say it is going to be better than Q4 for sure.
Understood. Also, historically, the company has been viewed largely as a commodity textile player. Now, are you trying to, reposition itself as a value-added, sustainable textile player? Will that be a right one to call for?
Absolutely. RSWM is a 60-year-old company, largely known for synthetic yarns, and that comes as a category of a commodity player. Now, at this point of time, in addition to our synthetic yarn, we produce cotton yarn and melange yarns. In addition to melange, both downstream products of knitting and denim fabric are one of the key growth areas we have. In the current year, we are expanding our knitting capacity by almost 250 metric ton, and we are doing a capex of 92 CR in our knitting business. So similarly, in denim, we are again augmenting our balancing activities and thereby improving our capacities by almost 10%. So all these things basically help us in positioning ourselves in downstream industry rather than purely a commodity or a yarn business. And if you talk about sustainability, that is one of the core values that RSWM and LNJ Group live for. So at this point, around 70% of the power that we use comes from renewable energy sources. We are ensuring zero liquid discharge from all our dyeing operations. We are also going for 100% bio-based boilers in the current year, which is FY27. So all these activities will continue, and RSWM definitely is more than pure commodity and very, very focused on sustainability.
If you look at your balance sheet, over the past few years, your debt has increased. I believe it stands at close to around 1,500 crore rupees, the total debt amount I'm talking about, the gross debt. How do you plan to deleverage your balance sheet, given that you're generating now cash? Will you be deploying those cash towards repaying debt?
You are absolutely right. In the current year, which is FY27, our repayments are having a schedule of almost 197 CR, so approximately 200 CR, whereas normal capex we are planning and this net expansion we are doing will not be granting the fresh loans beyond 90 to 100 CR. So thereby our overall term loan will come down by almost 100 CR in the current year as per the projections which company has made so far.
Right. And also, I just want to understand what % of revenue currently comes from value-added products versus commodity products? And what is the target, that percentage that you want to take to?
So it varies from business to business. In a few of the businesses like our knit and melange, it is beyond 20%, and few of the businesses which are 100% say our cotton yarn or synthetic yarn, it is around 10%. So as an organization, we are working towards increasing the revenue from value-added products. But still, if you talk about numbers are not in very great percentage. Of course, the effort that we have started now will help us in improving these numbers in coming quarters.
Right, sir. Well, thank you, sir. Thank you for joining us and giving us the way forward for RSWM. Well, that was the management, quite confident of maintaining margins despite the cost pressures coming in for the full financial year. Let's welcome in our fundamental guest as well, G. Chokhalingam, founder and MD of Economics Research. Sir, you heard the management. They are quite confident of maintaining their margins and growth going forward. They will also repay most of their debt in FY27 from the cash flow that the company will generate. How are you looking at this counter at the current valuations?
Yeah, I listened to him. It is one of the oldest companies in the textile business. In relation to the industry performance, they have been reasonably doing quite well for decades. I won't be able to find any major negative with the company, but the problem is only with the industry. The industry is highly volatile and margin fluctuation is enormous. Management, as he also mentioned, the captive power, renewable energy, they set up, which is a very key to textile industry. So net to net, it is facing problem from the industry. So whether you take Q4 or you take a full year, there is a degrowth of around 5% in the revenue. And both the Q4 and for whole of FY26, the net profit, jumped mainly because of spurt in other income and also tax write back. So if you net out that impact, the performance is not anything great. So that is in the price also. That's why it is trading around 11-12 PE. I would give at best to hold and keep tracking, that industry prospect rather than what company is going to do. So if industry does well, I'm sure RSWM also will do well.
Got that view. Well, moving on, time to dive into the FNO market setup and the cues shaping in trade today. Let's bring in Sharath for more details.
See that there has been a little bit of change from 1045. Are seeing a little bit of a sell-off intensifying here. Of course, Asian Paints, Adani Ports are holding the fort, but it's largely a stock pickers market. But remember to have a lesser positions as you go into the weekend. Let's just see the long build-up of what's happening here. Two important stocks, Nuvama and NBCC, both of them doing well in trade. A good volume pickup in Nuvama. I expect some kind of a positive development in this counter. Apart from this, short build-up for Dalmia Bharat. There's a sell-off happening at 6%. Britannia also, the earnings impact is there. Apart from this, looking at the long unwinding names, we have Hitachi Energy and Inox Wind. Interesting plays from the renewable space. And lastly, short covering candidates. It still continues what we had at 1045. Coforge and Persistent Systems, the mid-cap IT space, the buying, you could say basket buying is happening. So these are the stocks which should be on a radar in the FNO space.
Well, thank you so much, Sharath, for all the details. Well, moving on, let's pull up Globus Spirits. Let's see what that counter is doing. Well, the stock is in focus. The stock is down almost 11%. This is on the back of Q4 numbers though. But let's bring in Mahima for all the details.
Right, so Varsha, it's trading almost at its day's low point as we speak, and this is on the back of the numbers that it has posted, where overall QOQ volume saw degrowth on account of seasonality is what, of course, the press release states. But overall, a lot of changes in terms of policy with regards to state government is also affecting the company. In terms of state-wise growth in Q4, Delhi achieved 90% of 90% as compared to where it was in Q4 FY25 volume, up 60% from its Q3 FY26 volume. But core markets like Rajasthan and UP has shown a decent amount of growth. Balanced markets, there was one-time rebasing of volumes, and growth from here on will be better in FY27 is what the management has said. Revenue was lower due to reduced per unit price of ENA. EBITDA per litre improved slightly to rupees 8.3, and capacity utilization achieved at 80% after adjusting for UP capacity as well. Now, in terms of where the numbers go, I think overall revenue saw a downtick of 3.4%. EBITDA did see an uptick of almost 71%, but margins, overall, because of that EBITDA uptick saw an improvement to 10.5%, and net profits stood at around 21 crores versus that of 5.6. But I think the main concern here is the volume, which is why we're seeing that downtick coming in, and plus this player is also into the popular segment more and not in the premiumization wave, whereas the entire sector is moving towards the premiumization wave, and that's why we've seen a consistent underperformance in discounter. So this is the overall view of what's happened with global spirits and why it's seeing that pressure.
Right. Thank you so much, Mahima, for all the details. Mr. Chokalingam, coming to you on this global spirit. Now, as Mahima was saying that this is not into the premium products, but management though is expecting good growth from here. What would you suggest to investors considering 10% fall that we have seen in the stock price?
One can hold it in case there is any recovery of again back to 5-10%. One can exit. Basically, I am not that bullish on liquor companies at this stage, because we have seen a lot of state governments are spending a lot of money on the people welfare scheme. So I have a firm view as a student of economics that in future, the liquor companies will have a lot of excise duty burdens, tax burden. And now coming specific to this company, it is a growth company, but the margins are fluctuating widely in the last 4-5 years. And even sales growth is, though good, the profit growth, whether you take last 3 years or 5 years, it is CAGR is negative. And the stock trades around 33. So I would give hold, because stock has already corrected 21% from 52-week high. And therefore, I would give a hold and exit the stock if it recovers 5 to 10%. That's my research view.
Right. The next stock in the focus is Suryodaya Small Finance Bank. Now that stock the company has managed to achieve its FY26 guidance. Moreover, the FY27 guidance that the management has given is quite strong. 30 to 35% growth is what they're looking at. Let's get in Shivam with more details on the same.
Well, yes, the Suryodaya Small Finance Bank has been trading higher in today's session, and the stock has touched 1 year intraday high. The volumes of the stock has been surged by around 30 times to it when compared to 20-day moving average, and the stock has been trading higher in 9 sessions out of 10. Now, the stock is buzzing on the back of strong Q4 results, and if we take a look at the key highlights, the net interest income and margin has been improved a lot, and on the back of strong credit growth and improved yields. In fact, the bank has achieved highest ever quarterly Vikas loan disbursement, which stands around 1200 odd crores in Q4, and this constitutes around 75% of the inclusive financing book. Now, the bank has also seen a improvement and turnaround in profitability, and asset quality has also improved with stable credit cost, and despite the income from PSLC was lower. Now, on the operating expenses front, the manpower cost has remained flat, and cost as of percentage of asset has dropped on a YOY basis too. Now, if you look at the guidance, the company has planned to open around 100 new branches as going forward for increasing its market penetration. The return on asset is also expected to remain within a range of 1.3 to 1.4%, and as you said, the company has guided for 30 to 35% of loan growth.
Right, Shivam. Right. Titan numbers have come in. If you look at on the face of it, the revenue seems to be a big beat. But we'll have to check why that beat has come in, because it's a significant beat compared to what the analysts were estimating. But on the EBITDA front, it's largely in line. 1,937 crore is the EBITDA number that has come in. Margins have come in weak at 7.2%, and the net profit number that has come in at close to 1,179 as against analyst estimates of close to 1,270. We still need to check why the net profit number has come in significantly ahead of what the street was anticipating. Now, we'll try to get in Mahima for more details on that. But Mr. Chokhalingam, Varsha, what are you looking at?
Sumit, also when the company had came up with their Q4 business update, there, if you see the consumer business was up 46%, even there was a domestic growth of 42%. Even the international, the jewelry segment, there was a strong growth of 46%, and the like-to-like growth was also 48%. And there, I think the beat that we are seeing in the revenue, maybe that is the reason. And there was also high single-digit buyer growth when it comes to jewelry, which was after 3 quarters of flat buyer growth. So overall, watches division also grew, 7%. Even there was a good growth in eye care, but I think the consumer business, which was up 46%, maybe is one of the reason what we are seeing the beat in terms of revenue. But Mr. Chokhalingam, how are you picking this Titan numbers, and what were your expectations against, and how are you seeing the numbers?
I couldn't analyze in detail, so therefore right now I'm not in a position to give you. I'm sorry.
But the large beat, what I'm understanding here, is largely because of sale of gold bars that the company has done. But let's get in Mahima with more details on why the revenue is such a big beat and not the EBITDA.
So, Samit, I mean, just the first cut of numbers itself, right? Overall, I think the total income has seen a growth of around 46%, EBITDA growth of around 28%. Margins have come in at the 10.6%, 9.2% if I'm not wrong. And overall, profit after tax has seen a growth of around 35%. So, slight beat in terms of where the revenue and PAT go. But in terms of the commentary coming in, Q3, overall in terms of where the numbers go, there has been a beat in terms of where the margins, the EBITDA goes, that 1937 crore versus that of 2000 odd crore. But in terms of where the margins go, let's try to pull those numbers up on the screen. There you go, EBITDA at the 1937 crore versus that of an estimate of 2000 crore. Slight miss when it comes to the EBITDA number. Margins at 7.19% versus that of 11%. I think margins is where the miss is, and that is why we're seeing that counter tanking. Not sure as to why this has come. We'll have to check the press release once, of course, the numbers come out. But I think prima facie revenue and is a beat, but EBITDA is where the concern is, and margins is where the slip has happened. So that's the first cut with regards to where Titan goes. But we'll get in more details once the press release comes out.
Right. All right. Also, we were actually speaking about the Suryodaya Small Finance Bank also. I would want Mr. Chokhalingam, to view on, Mr. Chokhalingam, your view when it comes to Suryodaya Small Finance Bank that Shivam was, talking about. If you could, help us with that also.
Yeah, there are two unique, performance parameters as far as this small finance bank is concerned. On positive side, first, it's a phenomenal, growth in advances and deposits. Advances have grown on year-on-year basis 29%, and deposits have grown 32%. So it's commendable. But when you come to, the quality of asset, that is where the concern is. The outstanding net NPA, as of March 31st is very high. It's about 4.2%. Gross NPA is 6.5%. So I have not seen, majority of the banks and banks have, less than 1% net NPA, but this bank has got 4.2%, which is a big concern for me. And secondly, if you look at Q4 results also, they have reduced the provisions to 41 crore.
Right, sir. Right. Sir, if you look at SBI has actually come out with their numbers, and the net interest income that stands at close to 44,380 crore. as against the estimates which were around 46,500 crores rupees. So a mess on that front, but net profit that has come in ahead of what the street was anticipating at around 19,000 odd crore rupees. Net NPA, gross NPA at 1.49. Let's get in Parag Thakkar, head fund manager of Fort Capital. Parag bhai, on the face of it, net interest income looks below than what the street was anticipating. Did you get time to check the numbers?
No, I have not got the time to check the numbers. I was just so basically, what is the NIM number and what is the loan book growth and QOQ NII growth? These are three numbers I look for, and of course asset quality.
NII seems to be at around 44,000 crore rupees as
so
against.
NII is below estimate.
Yeah, sorry.
So NII is below estimate.
Below estimate. And net profit number is net NPA is at 0.39 as against estimate of 0.35. So slightly higher compared to what the street was anticipating on this front, but we'll have to still wait for the NIM number to come in, which we are still awaiting.
NIM, loan book growth number, NIM number and QOQ NII numbers are very important. So I think we should wait for that.
Right. We are still okay. The stock is down nearly 4% on the back of the sharp miss that we are seeing on the NII front that has come in. Now, NIM number is still awaiting on the street, but apart from that, what I can pick up here is that the provisions that have increased, that have come down actually, that could also be one of the reasons why the street is not quite happy. On a Q-on-Q basis, provisions have come down to 2,870 crore from 4,506. Parag bhai, do you think this could be one of the concern that the street is having, that the company, that SBI has not provisioned for any impact that could come in from the Middle East?
No, I don't think so. I don't think so. Mainly it is the key thing is NII, QOQ NII growth. Of course, asset quality this quarter has to be good. As per expectation, I'm saying the expectation itself was good. So asset quality there should be no issue. The only thing is loan book growth and mainly NIM. Because NIM expected was flat QOQ, which is 3%.
Right. Let's get in Piyush to understand what's he picking up on SBI. Piyush, any clue on what is the net interest margin that has come in here?
Of course, we will have to wait for the NIM number, which actually comes out with the IP. But what we can see is that bank has been able to post above estimate net profit. Its Q4 FY26 net profit stands at around 19,684 crore. The net interest income also is slightly above estimate. It's at around the NI is at around 44,380 crore. The bank has seen a jump in its other income as well. However, the provision, the main net profit actually seems to be boosted by a lower provision if we see YOY and Q1Q both. In terms of asset quality, the headline figures, which is the gross and net NPA ratio, it has actually risen a few basis points. But overall, a stable set of numbers. We need to see overall deposit growth and loan growth. In the provisional figure that had come out, it was up over 14% odd year on year. So a stable quarter for SBI in Q4. We are waiting for the management comments in the upcoming press conference. Back to you.
Right, that's all we are getting right now on the SBI numbers. Two big numbers that have come in the last 10 minutes, SBI and Titan. Titan has perked up in trade from 4,240. It is now trading at 4,000, a good 100 rupees up move that we are seeing when it comes to Titan, while SBI is down sharply in trade, down around 4%. If we have Mahima, we can get in more details on Titan at this moment till we gather more details on SBI. SBI is now down 4.5% in trade, post missing the guidance on NIF compared to what the street was anticipating on the net interest income front. Do we have Mahima here? Let's get in Mahima with more details on Titan first.
Yes, so Somit, we have the segment-wise performance as well. Jewelry business has seen a growth of 50% over where it was in Q4 FY25 at the 18,195 crore. India business has seen a growth of 46% odd. Tanishq Mia as well as Zoya combined has seen a growth of 48% odd. CaratLane has recorded a growth of 22%, which is lower than what it has done earlier, but still a very healthy growth. International jewelry business has seen a growth of 174%. The early initially Q4 business update was indicating a growth of 156%, but it's come better as compared to that. In terms of the watches business, watches has delivered a steady quarter. Analog watches have continued to see overall growth for the division. We've seen a double-digit consumer sales growth supported by good volume uptake is what they're seeing. Overall, in terms of growth, in terms of percentage, stands at 8% for the watches segment. For eye care, the overall domestic business has seen a double-digit growth in terms of that momentum, and overall segment has seen a growth of 17% when it comes to the top line. For emerging business, all the skin, earth, etc. have done, all these brands have done fairly well, and overall the business as a whole has seen a growth of 20% this quarter. In terms of the commentary coming in from Ajoy Chawla, who's the CEO of Titan, they've said that FY26 has been a landmark year. They've crossed 50,000 crores as annual revenue as milestone. The quarter performance was led by Festival of Demand. So basically what we've seen is that studded in the commentary is reflecting that studded has also picked up from here on, because Q4 business update was indicating that there is buyer growth coming in for studded as well, and that's what is indicated in the commentary as well. FY27, they're saying that optimism is back on exceptional FY26. So they're saying that even on a higher base of FY26, they're going to do fare well in FY27, but they'll be watching out for the geopolitical scenario, considering Middle East. They have exposure there. Recent acquisition of Damas is also one of the major things that we'll be watching out for going forward where Middle East conflict is concerned. So this is the overall view of how things have fared for Titan Well. The stock is now at its day's high point as we speak, up 2%.
Right. Mr. Chokhalingam, did you get time to look at the SBI number? The stock is down nearly 5% in trade. What could be the major disappointment here? The NI number coming below estimates, or the bank not doing any provisions for Middle East war?
No. Actually, on asset quality, there is no concern. I saw the number. They reduced the provisions, but it should be worth noting that the net NPA, they have not compromised. It is same 0.39% like December quarter. On year-on-year basis, it is down. And even if you look at outstanding net NPA in absolute term, it has come down. So they have not compromised on the asset quality, though they cut down the provisions. And point two, the business numbers are good. Advances have grown about 17%, which is very difficult for a leader like SBI to beat the industry. That also one should give credit. But what went wrong is basically the treasury segment. The bond yield rise must have affected SBI very badly. So year-on-year basis, the segment results from the treasury operations is down very badly. That is what pulled down SBI performance. But I am sure, this is very temporary, because we know as and when the oil price crashes and, the inflation moderates, and therefore yield moderates, SBI will come back. It's a very attractive stock. I would say that it's a good opportunity for buying the stock for medium to long term.
For that view. Well, let's also invite Gaurang Shah, Senior Vice President at Geojit Investments. Gaurang, welcome at NDTV Profit. How are you viewing SBI results? What would you advise to investors?
So, thank you so much for having me on the show. Good afternoon to all your viewers and to all of you. All standard disclaimers in place according to SEBI regulations. We do have a positive coverage on State Bank of India from a long-term point of view. That's again a disclosure. And as Mr. Chokhalingam was mentioning, even I feel this is a knee-jerk reaction to the numbers. I don't think there is systematically something wrong in the numbers. I'm sure one-off numbers cannot be a reason for your long-term investments to make any changes as far as SBI is concerned. So we do have positive coverage and we are recommending them.
Right, Gaurang. Thank you for joining us and giving us your first cut on SBI. Thank you, Mr. Chokhalingam, also joining us and giving us your perspectives on the stocks that we discussed today on the show. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth. And
hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima. It's been an earnings season-led show, the last one to say the least. Two big earnings in just a 10-minute gap.
Not even 10 minutes,
and
I
just
think.
a frenzy in that sense happening in the newsroom per se. But Mahima, of course, tracking Titan. The stock is up 5% up right now. And you've seen, of course, margins being a key aspect that we discussed just at the end of the last show. SBI is the other one, stocks tanking in trade today as well, and completely a different reaction as to what we are seeing on both these stocks right now. So crucial time right now for the Nifty 50 companies, and that is the setup that we're going with in Ask Profit right now as well. And we'll of course get you all your stock related queries answered as well. But we've discussed the markets quite a bit, so let's get into the stock related queries as well very quickly, and welcome in our guest for the show as well, and probably start taking all your stock related queries. Ruchit Jain, Vice President Equity Technical Research at Wealth Management Services at Motilal Oswal. Joining in on the technical, Neerav Asher, Head Equity Research Analyst at Latin Manila Securities, joining in on the fundamentals. Gentlemen, both of you, thanks so much for joining in. Let me go across and just take the first stock related query. This is from Shankar from Bangalore, and his question being on Tata Capital. He's owning 660 shares at 331, and Neerav, he wants to add another 300 odd shares more. What would you recommend on this counter?
Well, it's advisable to add at the current levels if you have a horizon of at least a couple of years.
So that's the view coming in on Tata Capital. The next one that we have is from Satyan, who's asking about CCL products. He's bought at the levels of 1080 with a short-term target of 1250 in his mind. He's saying today it's touched 1200, if that's correct. It's trading around around that 1129 range. Wants to know whether he should hold or book profits now and switch to something like a trend from a short-term perspective. Ruchit, a very good afternoon to you. Your view?
Yeah, hi, very good afternoon. I'll recommend to switch to some other stock. Today we have seen a volume-based pullback move in the stock, and generally when we see such high volumes during price corrections, the stocks can see some relative underperformance in the near term. So if we have long positions, then and in profit, then I would recommend to book profits over here.
Got it. Let's go across and take the next question now from Mohit, and his question is is it a good time to purchase Motherson or Motherson Sumi, of course, the bigger parent, or Bank of Maharashtra for the long term? Neerav, either of those counters that you like right now?
I think he should go in for both these stocks, because both of them are looking quite attractive. We are seeing a good rally in auto ancillary space, and the prospects are really improving. And Bank of Maharashtra has also shown very good potential, very good numbers. So if possible, he should try to add both.
Well, that's the recommendation coming in from Nirav on both of those counters, Motherson as well as on Bank of Maharashtra. Next one's from V. Murli, and it's a smaller counter that he wants a view on. Hawkins Cooker bought at 7412. He's holding 75 shares and asking for a 12 to 15 month view. Nirav, we've actually seen the growth quite slowing down in this space. Would you rather recommend him to look at some other consumer staple or a discretionary play at this point of time?
Well, I think this is a kind of a portfolio stock, and I think he should hold on to the stock because sooner or later you are definitely going to see recovery. The competitive intensity is high in this space, but the advice is still to hold the stock.
Got it. Well, before we start taking all your other stock-related queries, a very important update now onto an exclusive as well. A cloud hangs over the proposed Dixon-Vivo joint venture as well. And let's get in my colleague Rishabh to tell us more as well as what he's gathering right now on this. Rishabh, over to you.
Absolutely. So what we're picking up is that the approval, the proposal for a joint venture between Vivo and Dixon Technologies here in India. Vivo is, of course, a Chinese company. The proposal for them to together establish a joint venture to manufacture smartphones, that is still under active review. There's still a lot of shadow over that proposal that is still pending approval by the government. What we're picking up from top government sources is the fact that the Home Ministry will take a final call on this. The entire fiasco is around the fact that Vivo has been and is under the scanner of the Enforcement Directorate, the ED, for a bunch of charges under the Prevention of Money Laundering Act. They have been accused of various about allegedly illegally transferring roughly 62,000 crore rupees to China, and that is to avoid taxes. So that is what is casting a shadow over the entire joint venture process. A little context on what this JV is. This was initially envisioned way back in December 2024. So a lot of time has passed and an approval still hasn't come. And this is, of course, due to the shadow that has been cast over the ED probe into Vivo. This JV was, of course, meant to manufacture a lot of smartphones, a lot of electronics, consumer electronics here in India. Would have been a big boost for Dixon, given the fact that Vivo is a major sort of manufacturer of mobile phones that are being used in India as well. So that's what we're picking up from top government sources. What we're seeing is that this scrutiny by ED may impact the entire approval process, and the government is yet to clear. There's no final call that has been taken on it. It is still under active review, but what we're reporting on is the fact that there is some sort of a shadow over it because of the ED probe into Vivo.
Well, thanks so much for that, Rishabh, getting us that key update. And as Rishabh rightly mentioned, since 15 December 2024 is when that approval or when that exchange announcement was made by Dixon. And a lot of the guidance for FY27, almost 10 million units is what's expected from this Vivo JV itself. So the management of Dixon had told us after Q3 earnings that it will roughly take even 45 to 60 days once that approval comes in to ramp up this particular joint venture. So could be a difficult time in terms of results as well as what could be expected if a potential guidance cut on Dixon. But the stock's now down 2.5% as we speak and break this important update almost 17 months after their exchange filing on this joint venture between Dixon and Vivo. Cloud still hanging on, as our colleague Rishabh highlighted as well. But Nirav, let me just take a very quick question with you also on Dixon, because a lot of that guidance also has some numbers from Vivo as well. If it doesn't come, what would be your view on the stock?
Well, I think these EMS firms which are listed, basically the markets have assigned them very handsome kind of valuations, and that is on the basis of the prospects. At least for the next 2 to 3 years, we have been seeing very strong prospects. And there's little room for error, but as we always say that there are a lot of twists and turns in the journey, and this back and forth which has been happening with respect to the Vivo deal is definitely going to be an overhang as far as the stock is concerned. So I think we should see some kind of a meaningful correction in the stock going forward.
That SBI NIM numbers are flashing there. 2.8% is where it's coming at. The expectation was of around 3.2 odd percent. So I think it's the internals that have played out badly for the counter, and now we're seeing almost a 6% downtick on SBI. So that was a number that we were waiting for eagerly. Domestic loan growth at 16% as well. But I think the NIMs is the number that we were closely watching, and that's come in below expectations, and that's why the further downtick in the stock is what we are seeing for SBI. But moving on to the next query that we have.
Actually, we have a query on SBI as well,
okay.
and let me just take it quickly with Nirav. Nirav, because Gauri Shankar has, is watching the earnings, holding shares at 623 since 2024, so gotten at a very interesting level and holding 150 shares. Now, Nirav, I know it's a very fresh number, and we'll of course get more commentary coming in post the press conference, the conference call as well. But just in terms of the basic numbers, if you've had a look, what would you recommend on the numbers? And for Gauri, should she just hold on, wait for more clarity?
Yeah, it's advisable to wait for more clarity on this because I think the performance of the banking sector is very, very crucial going ahead. And we've not had very great numbers as far as the leading private sector bankers or the public sector banks are concerned. So the ideal course of action will be to wait and watch and see the management commentary and then probably add a few more shares at lower levels.
Even provision and slippages, both not looking nice, both have risen. So I think, all of those factors adding together and putting pressure on the SBI stock now down 6.4% as we speak. But time for a rapid fire round. Let's try to, take as many questions as possible. The first one that we have is on RBL Bank. Vijay from Chennai wants to know as to, what should be the short-term target on this one. Ruchit, your view?
On the high side, we can expect targets around 365 and support is at 330.
Umesh has ITC at 320. Should he continue to hold for the long term, Nirav?
Yes.
Okay, the next one that we have is coming in on ITC. Umesh, we already took that. The next one that we have is from Jigar, who's asking about Canara Bank. He wants to know whether he can continue to hold this from a long-term perspective or not. Nirav?
Hold.
SMS Pharma, our viewer is holding shares at 350. Ruchit, should he continue to do so?
Let's continue to hold with stop loss below 390.
Okay, the next one that we have is on Hudco. Yamini from Chennai wants to know if she can buy at the current levels from a one-year perspective. Ruchit?
Keep a buy and dip approach. Declines towards 210 should be bought.
Narayana Rao is holding Sagility at 41.6 and 2,000 shares at that. Nirav, he wants to add a few more shares, but what would you recommend?
Do not add.
Okay, Pace Digitech from a long-term perspective, is it a good buy for the next 2 years? Any idea on this, Nirav?
Yes.
Marksans Pharma bought at 198. Ruchit, he's holding 125 shares. What's the view for the next 6 months?
View is positive, so hold.
Good time to enter Vedanta from a long-term perspective, Nirav?
Yes.
Netweb Tech at 3972. Ruchit, should he get out of this counter now?
Continue to hold.
Central Bank, a good time to invest. Radhakrishnan is asking this question. Ruchit, your view on the charts?
Avoid.
Jeet from Kolkata has a question on MV Photovoltaic. He's holding 100 shares at 262. Nirav, do you have a view on the stock?
Yes, he should continue to hold.
LG Electronics or PG Electroplast? Which one would you choose from a long-term perspective? Nirav?
LG Electronics.
Tips Films bought at 460, 130 shares. And our viewers asking Ruchit what he should do with this counter.
Should exit and move to some other stock.
Quest Corp bought at the price of 200. 3 months time period. What's the outlook on the charts? Ruchit?
Should hold with stop loss below 200.
The next question coming in is on Kala Mandir, holding 100 shares at 165, and this is Mahesh. Should he continue to hold here, Nirav?
Exit.
HDFC Bank on the charts, how is it faring, Ruchit?
Can buy for mid to long term.
Okay.
Go ahead.
All right, okay. So that's, of course, the last question on this round of Rapid Fire as well as Ask Profit. Nirav as well as Ruchit, thank you so much for taking out the time and, helping us answer all those stock-related questions. But, fintech leader Kist has made a strong market debut today. The stock listed on BSE at 191 per share, marking 11.7% premium to its issue price of 171. To discuss the company's future growth outlook and strategic plans, my colleague Nimit caught up with the CEO and co-founder Ranveer Singh. Let's take a look at what he had to say.
Wanted to understand what drove you in the sort of environment that we're in today. A lot of companies are pressing pause on their plans to IPO. A lot of them are maybe shelving plans. A lot of them are pushing it back. What gave you the confidence to still go to market today?
I think three things. First and foremost, there is a reality which exists in the market, which of course I'm not an expert on. They go through ups and downs. So that was definitely a consideration. And as much as things have been bad, we also see some kind of buoyancy. But more importantly, the reason we are going there is because there's a confidence and conviction in what we have built. And that the confidence is not only coming more intrinsically, but we have a large support from the institutional investors. You must have seen the anchor book, which has almost all the prominent mutual fund FIIs who have participated. And that was the true support and the confidence which made us to go despite the market not being so great.
Absolutely. What was the process like in this environment, if I may ask you a little more? When we talk about a lot of companies are bringing down their valuations, there are also companies that are sort of, back and forth with investors on what is the issue size. Sure. How when you build a 900 crore plus of total offer, what do you look at there and how has that process been for you?
Oh, absolutely. Very relevant question, particularly in this context. So the way the process has worked is as follows. As far as the valuation goes, it's a discovery which you do while talking to the investors. Of course, depending upon the market, things can be very different on the valuation side. But what is more important is not only a valuation, but the support that you get from some of the marquee investors. And we would like to believe, as I mentioned, some of the very, very diversified set of investors who have come in and contributed. That's one. As far as, sorry, what was your other question linked to that?
Essentially, I was asking about what your process has been like with the regulatory process, as well as with your investors in building this sort of issue size in an environment like this, a follow-up to the last one.
So when it comes to the issue size, it's a function of, there are some SEBI guidelines in terms of how much you can scale up, how much you can scale down. Mostly the decision for scale up and scale down can be driven by many things, but for us, historically, if you look at our performance, whatever we were anticipating, we ended up doing more.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. It is a downtick for the Nifty 50, and we're trading with cuts of 0.7%, and we've broken below the 24,200 mark. The question is, do we hold 24,000? Because a couple of big moves, one on either end of the spectrum,
in just 5 minutes.
just over the last half an hour or so, and that pans out right now.
Yeah.
I wonder if the broader markets have also given up ground, and I think that is the case if the advanced decline is anything to go by. The mid-cap index now trading with cuts of about 0.1%, but the small cap index is where the resilience is. It continues to trade with gains of about 0.2%. Quickly just pull up the advanced decline ratio as well, and we'll jump straight into then the heat map for the Nifty 50, and then we'll get into a couple of stocks, and you'll know what we're talking about just by looking at the screen. Pull up the Nifty 50 heat map, because right on top of the screen you will see Titan. There you go. And right where Mahima is standing is probably
SBI,
covering it,
almost 7%.
State Bank of India, which is down about 7%. You know what? Let's talk about the good things first, and let's talk about Titan. You've been tracking it. What stands out?
So I think this quarter, we were expecting a strong quarter, first of all, right? But on top of that, we've seen a huge beat where revenue is concerned. So first, a big takeaway is a huge beat in terms of revenue.
Pull up the intraday chart for Titan.
Yes, the intraday, that will show the jump actually for Titan. The second big thing is that they've seen buyer growth this quarter, and that has led to a good jump of 50% in the jewelry business. Carrot Lane, the business was slightly below the expectation of what it has done earlier at that 22% mark, but still overall jewelry growth has been very strong at 50%. So I think that is one of the reasons as to why the stock has seen up. Commentary coming in is also very positive. Management has said that FY26 ended on a very high note, but FY27 is going to be even better on the back of that high note as well. So that is something which was also eye-catching. And analog watches have also done fairly well. Watches business overall has seen a good growth of around 18% as a category. I think emerging business has also done fairly well, a 30% growth. The only place where emerging business is lacking is the Taneira business, but we'll have to wait and watch out for as to how that picks up. Lastly, they've said that Middle East crisis is something that they'll be watching out for. But Alex, I think the Damas acquisition that they've recently made, that is something which will get hampered if the Middle East crisis pick up. Crisis pick up, and that is something that they'll be watching out for in FY27. So that is the overall view right now.
It's not a material contribution to the revenue either.
Not,
right,
but the Damas acquisition makes it bigger for them. So that's why.
So that's one story, right? And that's the good out of the way. Unfortunately, you have to talk about the bad as well, and that's State Bank of India. Pull up the intraday chart for State Bank of India, and you can see that it falls off the cliff right there. And we have a few key takeaways, all right? One, of course, is that fresh slippages stand at 5,000 plus crore rupees compared with 4,500 crore rupees. That's on a sequential basis. 5,500 crore rupees. The fresh slippages number is higher than anticipated. It showcases a little bit of stress in the system. But more importantly, and I think this is absolutely critical, the core income, which is your net interest income, is showing a growth of just about 4%, 3.8% or so. It was pegged at close to 9%. The domestic NIM at 2.93% versus 3.11%, and it was expected to come in higher at about 3% or thereabouts. So yes, there was expected to be a little bit of a contraction in the NIM, but not to the extent of what was described. And if we have the net interest income number, we should pull that up, because really that is also an issue, because you had an expectation of 46,475 crore rupees. It is coming at 44,380 crore rupees. So a number of issues stacking up for State Bank of India, and the question is, does it bode badly for the rest of the PSU banking pack? Remember, you will see Bank of Baroda, you will see Bank of India as well. In fact, let's pull up the PSU banking pack, because barring a couple of days or 1 or 2 days, you've had a large underperformance by the financial pack, and particularly the PSU banking pack. So the entire pack is lower, but you have the losses that are concentrated with a couple of them. State Bank of India, one of them, and so is Punjab and Sindh Bank. But pull up the Bank Nifty as well, just to showcase how things are going, the intraday chart for the Bank Nifty. And I think a part of that is because of State Bank of India, that slide, but it was already lower by about 1% it has fallen further since that point. So this is something to bear in mind. Pull up the broader markets as well. Just the key movers in the broader markets, I mean, if I look at the Nifty 500, for example, because that will show you a few of the big movers, there are winners in trade as well. So if you look at a Thermax, for example, which stands out as a stock of the day, and we'll get you a view on that in just a bit, it's up about 11%. The entire diagnostics pack has been in focus all of today. Mahima, and MRPL stands out. Berger Paints and the paint pack also stands out. There was a positive note that came through. Titan is up and about right there. On the losing side, you have CCL products, which you also track, and on the earnings front, it's not done particularly well, right?
Yes. So for CCL products, I think the biggest concern right now, which is hovering, is as to how price realization will take place, because now that coffee prices have kind of stabilized, we'll have to watch out for as to how that leads to volume growth going forward as well.
In fact, we've got the management of State Bank of India at the press conference. Let's listen into what they have to say.
Officials of SBI who are present with us this afternoon. दो लाइनें अगर राइमिंग में बोलूं स्वागत में आपके, तो आपको बुरा नहीं लगना चाहिए शायद. आप आए फिजा महक गई, आप आए फिजा महक गई, आप आए बज़म चहक गई, आप आए रंगत आ गई, आप आए रंगत आ गई, आप आए महफिल जगमगा गई. We sincerely appreciate for your graceful presence. आपकी गरिमामयी और आभामयी उपस्थिति के लिए आपका हृदय से अभिनंदन, आभार, धन्यवाद, शुक्रिया, मेहरबानी. Now I request our chairman sir to please address the media and present a comprehensive overview of SBI's financial performance for the quarter 4 financial year 26. Over to you, chairman sir.
Good afternoon, ladies and gentlemen. Thank you for joining us today following the announcement of our Q4 and full year FY26 results. At the outset, I extend a warm welcome to our colleagues from the media and my fellow members of the SBI family. I also wish to acknowledge with deep appreciation the continued trust placed in us by our customers, shareholders, partners, and the broader financial ecosystem. This trust is not just an enabler of performance, but also the foundation on which we build enduring value. Let me start with a brief description of the present global and domestic economic scenario. We are meeting at a time when the global economic narrative is being rewritten in real time. Global growth is projected at 3.1% in 2026 and 3.2% in 2027 by the IMF, reflecting a phase of moderation amid persistent geopolitical uncertainties and evolving trade dynamics. In contrast, India continues to stand out as the fastest growing major economy, with growth projected at around 6.9% for FY27 by the RBI. This resilience is being driven by strong domestic demand, improving investment activity, and policy stability. However, we remain mindful of emerging risks. Recent geopolitical developments and weather-related disruption, such as El Nino, may introduce some downside risks to growth. On inflation, CPI is expected at around 3.8% in April, with a full year projection of 4.6% for FY27. That said, global energy prices and climate-related factors may create some upward bias. From a banking system perspective, credit growth remained strong at 16.1% in FY26, while deposits grew at 13.6%. Encouragingly, this momentum continues into FY27, with credit growth at 15% as of mid-April, compared to 10.3% last year, and deposit growth standing at 12.2%, up from 10.2%. Looking ahead, we expect credit growth in the range of 13 to 14% and deposit growth at 11 to 12% for the whole system. Asset quality across the banking system remains robust and capital levels are comfortable, providing sufficient headroom to support future growth. Alongside these traditional indicators, two structural shifts are redefining the operating environment for banks. Recent developments in advanced AI models have highlighted the increasing sophistication, and speed at which vulnerabilities can be identified and exploited. This has placed the Indian banking system on a heightened state of alert. The industry is working closely with the Government of India and the RBI towards a coordinated cyber resilience framework. Secondly, the RBI's guidelines and transition to expected credit loss-based provisioning from April 2027 mark a significant step towards strengthening balance sheet resilience. At SBI, we are well prepared for this transition. Against this backdrop, our strategic focus is to drive high-quality growth with simplicity and resilience at the core. We are consciously moving from a paradigm of scale-led expansion to one that emphasizes productivity, capital efficiency, and risk-adjusted returns. Every strategic initiative we have undertaken over the past year is anchored in this shift. We are deeply aligned with the vision of Viksit Bharat as we continue to see ourselves as a systemic enabler of India's growth story. Our long-term strategy is therefore designed to be both commercially sound and nationally relevant. A cornerstone of this transformation is Project Saral, which I mentioned earlier also, our operations process re-engineering initiative, which is a structural reset. Having launched the first wave of identified themes, it challenges legacy constructs and reimagines the bank through the lens of simplicity and customer centricity. Key initiatives from the first wave include universal branch access, dismantling the traditional home branch mindset, single KYC across products, and automation of back office processes such as inward clearing using Gen AI. Parallelly, we are investing deeply in becoming an AI-first organization. Through our Analytics 2.0 initiative, we are embedding AI across the value chain, moving towards a truly data-driven operating model. In response to increasing financialization of savings, we are deepening customer engagement through YONO, ecosystem banking, and targeted offerings for diverse customer segments. We are also actively building relationships across startups, AIFs, VCs, and global trade ecosystems to diversify and future-proof our portfolio. As the largest bank in the country, our responsibility extends beyond performance to stability. Our centralized cyber cell operates 24/7 as a unified command center, reinforcing our commitment to secure and resilient banking, combining technology and human expertise to respond swiftly to cyber risk. Each of these initiatives is designed to deliver measurable gains in efficiency, stronger risk controls, and sustainable profitability. In the above backdrop, let me now give highlights of bank's performance in FY26. I'm glad to announce that we have posted highest ever net profit of 80,032 crores, an increase of 12.88% year-on-year in FY26. Operating profit for FY26 increased by 11.25% year-on-year to 1.23 trillion. ROA for FY26 is at 1.12%, an improvement of 2 basis points on year-on-year basis. Return on equity for FY26 remained robust at 18.57%, despite raising of 25,000 crores equity capital in July 25. Domestic NIM was at 3.03%, supporting our guidance to maintain NIM above 3%. I'm happy to share that our total business has crossed 109 trillion rupees, reflecting customers' continued trust in us. In fact, our domestic business has grown by more than 11 trillion on year-on-year basis. Our balance sheet size has crossed 76 trillion rupees. Bank's total deposits have grown by 6 trillion rupees at 11.03% year-on-year to 59.76 trillion rupees. Retail term deposits have grown by a robust 14.77%. Savings account deposits have witnessed a growth of 10.6% year-on-year, and CASA deposits have grown by 9.53% year-on-year, with the CASA ratio at 39.46%. We've been able to improve our CASA ratio by 33 basis points on quarter-on-quarter basis. The deposits growth remained healthy, with growth in double digits despite competitive market environment. Deposit our foreign offices have grown at 12.7% on year-on-year basis, but in USD terms it is 2%. Credit growth has been robust and all segments have registered double-digit growth. In FY26 and on year-on-year basis, Domestic advances grew by 16.33%, driven by all segments, SME by 21%, agriculture by 20%, retail personal advances by 15.22%, and corporate advances by almost 15%. Retail, agriculture, MSME, popularly known as RAM portfolio, has crossed 27 trillion rupees with year-on-year growth of 17.11%. Our foreign offices have continued to perform well with growth in advances at 20% year-on-year. In USD terms, it is 8%. The domestic credit deposit ratio was 73.08% at the end of FY26, an improvement of 337 basis points year-on-year. The bank has enough headroom to address future credit growth requirements. Our asset quality continues to be healthy. Our gross NPA ratio has improved by 33 basis points year-on-year and stands at 1.49% as at March 26 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, proactive management, structural integrity, robust underwriting capability, and sustained recoveries. Our net NPA ratio has also improved by 8 basis points and stands at 0.39%. The consistently improving asset quality is also reflected in our credit cost, which is at 0.37%. The NPA book is well provided with PCR at 74.36%. The bank remains well capitalized and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio has improved by 115 basis points year-on-year and stands at 15.4%. CET1 ratio has also improved by 148 basis points to 12.29%, and both the ratios are well above regulatory requirements. Digital adoption is central to our vision, enabling a multi-pronged transformation focused on enhancing customer experience while optimizing costs. By shifting 98.7% of transactions to alternate channels, we are scaling both efficiency and growth. The successful rollout of the new YONO platform has become a massive acquisition engine with over 4 crore users in just 3 months' time. Now, YONO has more than 10 crore registered users. 66% of new saving accounts originating on YONO platform in FY26 demonstrate our successful transition to a digital-first institution. We are effectively meeting the evolving needs of new generation and a diverse nationwide customer base through our formidable physical and digital channels. Our subsidiaries continue to perform strongly and remain leaders in their respective segments. They are important drivers of value creation, and we will continue to nurture them. If I were to summarize our approach, we are building a bank that is simpler in processes, smarter in decisions, stronger in balance sheet, and sharper in customer focus. We are proactively strengthening our CASA base and empowering our workforce to lead in a transforming financial landscape. We are actively reshaping our balance sheet by enhancing digital capabilities, broadening funding resources, and leveraging YONO for customer acquisition. SBI, by virtue of its scale, has always been a reflection of the Indian economy, and we aspire to not just remain a participant, but to become a key enabler of that journey. To conclude, I would like to thank all of you once again for your continued engagement and support. We remain committed to delivering sustainable, responsible, and long-term value. As India advances towards its aspirations of becoming Viksit Bharat, we take pride in playing our part in that transformation. Thank you for being with us today. My team and I will now be happy to take your questions.
Thank you, Chairman, sir. We now move on to the media question and answers. To ensure a smooth and orderly session, individuals will be called by names, and we kindly request everyone to please limit themselves to 2 questions only, and please avoid asking similar type of questions. Now, the first question will be asked by Ms. Siddhi from Bloomberg.
So, hi. Can you hear me?
You'll get the mic.
Can you hear me, sir?
Yes.
Hi. Congrats on the results. I have two questions. My first question is, your corporate loan growth has been pretty healthy. I want to understand the kind of corporate book pipeline that you have and the kind of credit growth trends you see for FY27 at the backdrop of the West Asia war. That's my first question. If you answer that, I'll ask the next one.
Okay. So let me start with the credit growth. I think that's a very moot question. Credit growth, I always mention that is a function of macros. As I said in my speech also, the robust credit growth what we witnessed last year, normally in the Q1 there is a dip in the credit growth over the Q4. But we are not seeing that dip. The robust demand continues to be there. While still, I think to qualify whatever I'm saying, the macros play an important role. How long this West Asian conflict will go on and how the inflation and demand moderation will play out. Subject to all of them, I still believe that we are sticking to our earlier credit growth estimate of 13 to 15% for the current year also. So while we have had a wonderful quarter in terms of Q4 credit growth, almost 16-17%, we believe that 13 to 15% what we have given guidance earlier, we continue to give that guidance. And we see good amount of pipeline, as you mentioned, is about 5.5 trillion rupees. Equivalent corporate credit pipeline is there. Apart from the corporate credit pipeline, I think there is a good growth across the segments, as you can see on the slide now. From the presentation, we have grown across the segments. RAM, corporate advances in double digit. We are continuously seeing that credit growth in the current quarter also, which gives us confidence that 13 to 15% credit growth is eminently possible.
So my second question is on your net interest margins. They've seen a sharp dip, and I guess that's the reason why stock has taken a hit to today. Wanted to understand if you could just explain the dip in the number, and can we safely now say that the worst for margins is now over, the bottom is now here?
I think in the last quarter, in Q3 also, we did mention that a couple of rate cuts which have happened in December, middle of December, have not been fully taken in the EBLR book. So that is 25 basis point cut in December, and also we had a 5 basis point MCLR cut. That's one main reason where EBLR book got repriced. The second thing is, there's been a substantial growth in the EBLR book itself. If you have seen both home loans and MSME, which are essentially linked to the EBLR, that also has contributed to the NI reduction. While we have been very successfully containing the cost of resources, in fact, the cost of resources has come down over the last quarter, and the NIM guidance what we have given, exit NIM of 3%, I think we were able to fulfill that, and we have given this guidance that the NIM will be, exit NIM will be 3%, and that has been achieved.
All right. So that last comment on the net interest margin, which is perhaps one of the reasons why the stock is getting impacted. Two aspects, I think, or three, actually, if you think about it. And we'll get you more details. Our correspondent Piyush Shukla is at that press conference, and he has questions for the management. The three that I see, one is the core growth, which is the net interest income, is coming at 4%. And the expectation of the street was more than twice that rate of growth at 9%. So that's a problem area. The second, the net interest margin has actually contracted, where seemingly there was a guidance given that it would be flat, but the domestic NIM has come in at 2.93%. The comprehensive NIM, and I think that is what the chairman of State Bank of India was referring to, might be actually around that 3% mark. But the fact that the domestic NIM has slipped by close to 20 basis points is not really looked at very pleasantly, particularly in a scenario where something like an ICICI Bank has managed to retain their net interest margin well above that 4% mark and has been able to defend it over the course of multiple quarters, not just in the fourth quarter. And finally, the fresh slippages standing at over 5,000 crore rupees during the quarter is something of a concern area. 5,520 to be precise, compared with 4,500 crore rupees in the previous quarter. But we'll get to some of these aspects. We're joined by Kunal Shah, who's Senior Technical and Derivative Analyst, Mirae Asset Sharekhan, as well as Ashish Chaturmota, who is Managing Director and Fund Manager at Apex PMS JM Financial. Gentlemen, thanks so much for taking the time. Ashish, I want to come to you first because we're talking about State Bank of India. And apart from what I've highlighted, there's also the valuation question mark, which is at very close to that 1,000 mark. It's currently at 1,030. I was looking at it. If you assume a 15% book growth over FY27, it is currently trading at very close to 1.4 times, which is not the most expensive. Would you agree?
Hi. So, I think from a valuation perspective, we are not very concerned about the valuation, because if you look at the credit growth in most of the PSU banks are in a very, very strong double digit, and obviously better than the systemic loan growth. And take the case of SBI, which has also seen almost 15-16% kind of loan growth. But the bigger challenge which SBI is facing now is the asset quality, where we have seen the slippages surpassing above 5,000 mark versus the last, versus the quarter-on-quarter or YY. So I think that's where I think the market is little disappointed. And at the same time, when you have seen most of the private peers, let it be ICICI or Axis Bank, both have managed to sustain the NIMs. There is a deterioration in NIMs as well. So I think the asset quality concern and obviously the pricing is also getting impacted. So both is getting reflected into the today's downfall. But as far as valuation is concerned, I think X of subsidiaries valuation, SBI is trading at around 1.2 times forward, well price to book valuation. So that gives us a comfort that at around 1,980, I think that would be area where you will see a lot of buying interest again coming back to SBI. So yes, some pain, but again, stock where we will see a lot of buying interest at the lower end of the range.
Okay, all right. So that's the view coming in on SBI, now down 5.6%. Some recovery, at least from its day's low point as we speak. But Kunal, very good afternoon to you. Your quick take on the benchmarks right now, the Nifty 50 as well as the Bank Nifty right now, because there is pressure on the Bank Nifty on the back of all these PSU banks going down right now. What's the take right now before we get into the weekend? People would probably not want to take in their positions and go over the weekend.
Good afternoon. Good afternoon to everyone. See, I think for SBI, what we are seeing is that on the 1st of Jan, when the correction started, as well as on the 2nd of Feb, 990, 980 has been that demand zone. And the larger term trend still continues to be positive. You can expect a dip towards this support zone, and probably from there onward, any reversal would give you a good confirmation for the uptrend to continue on the upside. So I think for the weekend, no need to carry long positions at the current levels. Probably you might get that dip of 30-40 points odd on the downside, and then probably one can go on the long side for SBI. Coming to the Bank Nifty index, I think overall what we have seen in the Bank Nifty index, it has been stuck in a broad range. 54,500 has been the support zone, and on the higher end, the resistance what we are facing for the Bank Nifty is somewhere around 56,500, 600 zone. So I think this is a broad range in which Bank Nifty is stuck. We need to see participation from the big boys, ICICI, HDFC. Once that kicks in, then probably you will see a good breakout in Bank Nifty on the upside. So Bank Nifty is still stuck in a range. There is no trade currently at the current levels, but probably Nifty is something which is still looking positive, trading above the 20 DMA. Even the dip what we got should be utilized as a buying opportunity. Once we close about 24,350, we'll get a breakout confirmation, which will head the index higher toward 24,700.
Buy the dip is the call that's coming in on the Nifty 50. But Kunal, what about your picks for the day?
I think overall what we have seen that broader markets has been the outperformer. Now you might see some profit booking coming in there going forward. So no need to be aggressively long on the broader markets at the current levels. It's going to be now a little bit stock specific. And if the large cap starts to come in, then probably that will have a good move on the upside here. But having said that, there are still a couple of stocks where the buying momentum could continue, and you can see some more upside even from the current levels as well. One stock which is there on my radar here is NBCC. 97, 98 was the important hurdle zone
for the stock, and we broke out in today's trading session with volumes. So this move is likely to be extended on the upside, and I'm expecting a target of close to around 105, 106 on the upside. So again, from the current levels, more 4 to 5% upside could be there in the next couple of trading sessions. So for me, NBCC is a buy at the current levels, keeping a stop loss of 95 on the downside, looking for targets of 105, 106 on the upside. The second stock over here, which is again on the buy side as well, and I see here also the buying momentum is likely to resume on the upside, is Tata Motors Passenger Vehicle, that is TMPV. So TMPV again has witnessed a fresh breakout a couple of days back, and now it is consolidating at the lower end. I'm expecting this to break out on the upside. So this would be a buy for me at the current levels with a stop loss of 344 and looking out for targets of at least 372 to 380 on the upside.
Ashish, your quick view on Titan, because while EBITDA and EBITDA margins were not up to the expectations, the street has completely ignored that, right? We've seen the street is probably liking the growth, the volume growth, the buyer growth that's coming for Titan. What's the quick take here?
So definitely, not just the volume growth, but also the kind of store additions which they are doing and the different kind of formats being added, and the way organized markets are gaining a lot of traction. So I think, and now gold has also started stabilizing at lower end of the range. So both gold, silver as a precious commodities, we are seeing some kind of traction getting built up. So I think any recovery in gold, you will see a good reflection coming into Titan as well. And before that, because of these store additions and the kind of volume pickup which we have seen, plus the performance of some of the different formats is clearly indicating that the trend is very, very positive for Titan. And today, we have seen a very massive volume based buying interest coming into stock at an all-time high trajectory. So clearly indicates that new interest or fresh interest is getting built up into the stock. So I think a trajectory towards 5,200, 5,500 positionally could not be ruled out in Titan.
Another jewelry counter, Alex, has reported its numbers, Kalyan Jewellers, where revenue has seen an uptick of around 66%, EBITDA growth at 84%. Here, in fact, margins have seen an uptick at that 7.2% mark versus that of 6.5% earlier. And net profit has jumped from 188 crores to 410 crores. And we're seeing some spike coming in the counter as well. If you can try to pull up the charts for Kalyan Jewellers, it's now trading around 2.6, 2.7% higher as we speak. There you go. It's cooled off a tad bit from that, but still trading 2% higher. So that's with regards to where Kalyan goes. But Thermax is the other one that's been zooming in trade today after reporting a strong Q4 performance led by robust order inflows from industrial segments. And Puneet joins us with more details to tell us as to what's worked for the counter this quarter.
Well, thank you for that. It's been, of course, led by the numbers which have been very strong in this particular quarter. Revenue is up 22%, EBITDA is up almost 25%, with margins seeing almost 100 basis point increase as well in this quarter at almost 10.9%. Net profit subsequently has increased by 18% as well. But order book as well as a one-time huge order win in this particular quarter has given the street a lot to look forward to. So one of the higher orders driven by industrial segment as well, and they also secured a boiler package supply order for 1,600 crores. Now this is a large win, almost 50% of the 4,490 crore order win. 1,600 crores just came from one large order, and the street is now optimistic that they could have such more orders in FY27. Now the other aspect that profitability also improved because of a stronger performance of the industrial segment as well as reduced losses of the industrial infra segment for the company. And finally, the data center continues to be a big opportunity as the company has highlighted in the past as well. Now, as I mentioned, order book 4,490 crores. Out of that, 1,600 crore was the one large win, and hence beat all estimates in that sense. Outstanding order book continues to be very strong. So 42% coming from the power space, and 13,600 crores is the order outstanding at the end of FY26. Now, I want to just quickly highlight the key conference call highlights as well. So let's quickly move on from this and tell you about the first one, which is the company in its conference call today morning at 11 a.m. said that they are seeing a good pipeline from inquiry of sectors like steel, cement, power, gas, oil and gas and power. FY27 revenue growth is expected to be 27% higher in terms of the order balance. And finally, growth has been strong despite the potential of what we've seen in the Middle East. So overall, very good set of numbers, but commentary is driving the second leg of the move today.
All right. So big move in Thermax. Thanks so much for that, Puneet. And remember, this is a stock that has been in focus in the recent past because the management has guided towards an improvement in the trajectory of the margins, because some of those legacy projects were weighing down on the margins. Those things are improving as the industrial business in particular is seeing better execution. Before we go to our guests on some views on some of these stocks, including Thermax, let me get you all of the buzzing news from the dealing rooms. In fact, it is that time of the show where we go across to Somit Sarkar to find out what the dealing rooms are telling him. There's quite a bit, Somit, in the way of big earnings that have come through and big reactions as well. Is there anything on that you're hearing?
Well, nothing on the numbers that have already come out, but one of the stocks that the dealers have highlighted on company which will be reporting its numbers, firstly, that is Indian Hotel. Now, there are buy flows on the PMS desk, and dealers are indicating that the fourth quarter numbers could be much better compared to what the street has been anticipating for this counter. For Godrej Consumer, there are buy flows on institutional desk. Dealers are expecting strong management commentary to come in the analyst call, which will be held on Monday, and there are buy flows that are coming in right now on the counters, is what dealers have indicated. For Electra Green Tech, the stock is up, I believe, around 10% Now, there are buy flows on the large HNI desk. At one point of time, the stock was up nearly 10%. It's right now up around 5.5%. And dealers are expecting a positive news flow regarding some tie-up that could be announced. And hence, we had seen that big spike coming in on the counter. And lastly, when it comes to Paramount Communication, that stock is up around 15% in trade. There's a buzz on the street that there could be a potential fundraise via preferential issue, and that is the reason the stock has now hit an upper circuit of 20%.
Absolutely. I was just going to point that out, Samit, even while you were speaking about it, hit upper circuit. Thanks so much for that. We'll circle back to some of these names, but before we do, I don't want to get Ashish Chaturmata's view on Thermax. It's cooled off from the high point of the day, Ashish, and there's promise that the prospects are going to be good, especially if you look at that order book exit at the end of the fourth quarter. So well above 10,000 crore rupees, it looks pretty robust, but execution is going to be key, and the fact that margins are set to improve further. What would you say?
So definitely, I think the key highlight would be the order book. And if you look at the year-end order book of close to 13,604 crore, is close to 27% YY growth. And the management indicated, order book growth of almost more than 20%. So I think management has clearly surpassed, the target has clearly been met. And I think markets are very, very positive for this kind of strong order book growth. And particularly the data center order book, is also a very positive thing. Apart from that, I think the margin profile of the company is also going to improve a lot, because a lot of these, previous orders or the legacy orders where they were at a thin margin, but now the newer orders, we are going to witness higher margins, and that's where the margin profile of the company is going to improve. And this is going to get reflected into the performance of the stock, which has seen a very sharp, I would say, reaction post results. So I think now structurally, we believe that stock is poised for a move towards 5,100 at least in the short to medium term time frame. So yes, Thermax is one of the preferred bet within the entire capital goods space.
5,100 up to 5,100 move can be expected on Thermax as per Ashish. But Kunal, I think two stocks that stood out for me in Somit's HOS were Indian Hotels as well as Godrej Consumer, both seeing buy flows on PMS and institutional desk. Your view on the charts for both of these?
Yeah, I think for Indian Hotels, definitely looks like a strong counter. Already we have seen a time correction in the stock in the last 1 year, and now we can expect the stock to see some outperformance. Already the structure has started to become positive with heart of our bottom formations on the technical charts. Key hurdle for the stock of 670 has been taken out in today's trading session. So I'm expecting this move to continue on the upside and go towards the mark of 700, 715 on the upside.
Got it. On that note, gentlemen, I'd like to thank both of you for taking the time. Apologies, we weren't able to spend as much time speaking to you as we'd normally like, but that's because of the earnings. Thanks so much for taking the time. But if we slip into a very quick break, we'll talk about more stocks on the other side, so do stay tuned.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
you're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. Two people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
Welcome back. You're watching India Market Close. We're winding down to the close of the trading week and we're seeing cuts of about 0.6% for the Nifty 50. A significant portion of that is likely to be State Bank of India. In fact, pull up the contributors chart for the Nifty 50. It's trading with cuts of about 6.4% or thereabouts after the earnings. And State Bank of India on its own accounting for 65 points of the declines. Titan doing particularly well, but because of the weight that it has, only contributing about 18 points or thereabouts. Already there's a first cut from one of the brokerages, and this is DAM Capital that is written in, talking about why this is a disappointment. You had the NIM, the net interest margin, that is declined by 18 basis points on a sequential basis to 2.8%, and that has been a negative surprise. The treasury losses, now this was expected to take place, but according to DAM Capital, it's worse than expected. It's slightly higher than expected, and that has led to lower other income. The slippages of about 5,500 crore rupees are marginally higher than expectations of close to 5,000 crore rupees. The loan growth of 5.4% sequentially, however, was better than expected, and this was also priced in more or less. Corporate has actually grown quite well. It's a robust 7% sequential growth, and retail has grown as much as 4% on a sequential basis. The gold loans have grown as much as 23% on a sequential basis and over 100% year on year. The NIM guidance was to be stable or more or less flat, and the poor exit NIMs or net interest margins will impact the outlook for the bank, as industry is witnessing pressure to increase deposit rates as well. The management, however, has mentioned, and we put that on the screen for you, that the net interest margin for FY27 is expected to be 3% or upwards of that, which could be a bit of a breather. So bear in mind that State Bank of India is likely to be in focus in the coming days as well. Milan Vaishnav with us, founder and technical analyst, Gemstone Equity Research. Milan, good afternoon to you, and thanks so much for taking the time. Let me start with a broader question for you. The crack in State Bank of India has only exacerbated an underperformance of the Nifty Bank in the recent past, barring one day where it moved particularly strongly. I think that was day before yesterday. It's largely been an underperformer. Does that trend continue in your opinion?
Yes, in terms of SBI in particular and Nifty Bank in general, I believe this trend will continue because over the past couple of weeks, in fact, I have been regularly maintaining that the financial services and the banking space, especially PSU, is losing ground on the relative front. And we are likely to see relative underperformance from this space. So this is not coming to us, at least as a surprise. And coming to SBI in particular, it found a reason in not so good numbers, but even if you zoom out a bit and look at the long-term charts, SBI had already formed a lower top at around 1100, and it had already shown signs of initiating a secondary downtrend. And so I believe that it will continue to stay weak for some more time. All upsides may find selling pressure, and it may not be a big surprise to us if it goes down towards 970, 980 odd levels.
All right, so that's the view coming in on SBI, but on this side of the show, we are also joined by Neeraj Devan. Neeraj, a very good afternoon to you. We've spoken enough about SBI. We've been constantly talking about this counter. It still continues to be under pressure, but something like CCL products, global spirits, etc., from the broader end of spectrum are also not doing well. From a slew of these earnings that we've seen, any of these that stand out for you in the past couple of weeks that we've seen so many earnings?
I think good afternoon first. So earnings have been pretty much okay this time. If you see some of the defense companies, if you see some of the private sector banks, the earnings have not been bad. Even some FMCG companies have come out with decent set of numbers. Nestle is one example from there. And, I feel that there's no basically complaint as far as the earnings season is concerned. So there have been some accidents. Britannia didn't come out with the kind of earnings people would expected it to. There was some pressure in the margin there. And today's State Bank also. So, maybe, some better operating profit would have helped it. So these, just barring couple of, these 2-3 cases, earnings have been pretty much okay. And I feel that now in the last few days, we'll get a lot of broader market earnings. Because, the rally also that you've seen recently has been from the mid-cap, small-cap. And those earnings normally bunch up towards the end of the earnings season. I think now, for the next 10, 12 days, that will be important to watch.
Yeah, absolutely. Particularly because of the outperformances you've called out and quite a degree of outperformance at the benchmark level at the very least. Let's talk about diagnostics companies. And by the way, this is volume-led growth along with cost efficiencies that have helped diagnostic stocks deliver a strong Q4. That entire space is buzzing in trade today from the likes of Vijay Diagnostics or Thyrocare, all of them doing particularly well, though Thyrocare has lost a little bit of ground. Let's go across to Varsha because she's analyzed the earnings and the reasons behind the rally. Varsha, how does it look?
Well, fantastic quarter, I would say, for all the diagnostics company who have announced results till now. And hence, you're seeing Metropolis also buzzing on the back of, strong numbers expected there too. Let's see what are the key reasons why diagnostic companies are buzzing in trade today. First of all, starting with the Q4 FY26 numbers of the diagnostic company announced so far, you have Dr. Lal Pathlab, which saw volume-led growth with improvement in the core margins. Even Thyrocare, delivered strong margin expansion, which was driven by cost efficiencies, and hence you are also seeing Thyrocare in buzz. Also, if I talk, Vijay Diagnostics, reported healthy growth, which was led by higher footfalls. Now, talking about the pricing pressure which was actually seen in the industry has been seen improving. The B2B pricing erosion is being stabilizing after prolonged competitive intensity. Discounting intensity has been reducing across, institutional segment. Also, better realizations are being seen in routine and specialized testing. Talking about the price hike, companies are indicating kind of gradual price hikes after weak pricing phase that they have seen. Selective hikes plus, better test mix will drive the RPOP improvement for the companies, and the urban markets are expected to lead pricing recovery over here. Talking about the benefits of consolidation, unorganized, we all know that, diagnostic industries work mostly into unorganized segment, while the labs are losing share to organized one. Top players are gaining from the brand trust, wider network and scale, and also the improved bargaining power will support margins for the company. Lastly, talking about the shift towards high margin business, the high contribution from specialized testing is one of the reasons. Preventive healthcare packages are gaining traction, and focus is on advanced diagnostic improving profitability. Lastly, how Street is viewing, well, the brokerages are bullish on margin recovery and pricing normalization for all the diagnostic companies. Even operating leverage plus mix improvement will drive earning upgrades according to the analyst, and the structural growth story is intact with rising healthcare awareness. So overall, you know, a strong quarter is being set for the diagnostic industry overall, and hence you're seeing all the stocks going in plus.
Yeah, absolutely. Thanks so much, Varsha, for that. The diagnostic stocks are in good health. Milan Vaishnav, do the charts also indicate that that's likely to be the case going forward as well? And would you buy into them right now?
See, entire diagnostic space is quite overextended now on the charts. More so in case of Vijay Diagnostics, which has run up quite ahead of its curve, where some consolidation or mean reversion cannot be ruled out once this euphoric run or reactions to the numbers are behind us. Dr. Lal Pathlep has got some room on the upside, so has Thyrocare, despite it coming off from its high point. But I think we can certainly stay invested in this space. That is point one. And the next point is that so far as taking fresh exposures, I think we should do it in a very calm and modest and moderate way. We should not be going all out to chase this kind of rally, because aggressive buying at these levels may not come with a good risk to reward ratio.
All right. So that's the view on diagnostics. Now, by the way, if you think about it, for most Indians, and I think this is not just Indians, if you think about it, most people, one of the biggest purchases that they will ever make is a house. But that house, and actually a home, is much more than just that square footage or a location pin. And in fact, behind every purchase is a story of ambition, timing, trade-offs, and life decisions. And to that end, NDTV Profit has got a special show lined up. It's going to start very shortly. It's called The Habitat. It's going to be hosted by someone that you probably recognize, real estate journalist Vishal Bhargav. And it'll go live on NDTV Profit Originals YouTube today at 7 p.m. So make sure you catch that first episode. But just to give you a sneak peek, we've got Vishal in studio with us. Vishal, first of all, welcome. And so glad to have you in studio with us and looking forward to the first episode. A lot that is happening in the space, right? Whether it's the price story in Gurgaon, whether it's the rent story in Mumbai. What's catching your attention right now?
See, right now, I think Indian real estate is at that, exciting moment. There's a lot of adventure happening. Gurgaon is at the peak of adventurism. Mumbai is, in a way, I think it's in that 50-50 territory. You don't know where exactly it'll go. But the overall direction is, I think, stable. I'll put it that way. Bangalore has been stable for the longest time. But I think it's an exciting space. For me at this point, though I'm based in Mumbai, the one market I'm monitoring the closest actually is not Mumbai, it's Gurgaon. Because that gives you a sort of thrill that Mumbai and Bangalore guys are far too simple and sober. The drama is really in Gurgaon.
So, but okay, so then let me ask you this, right? From the perspective of what you might also cover on your show, which is that a lot of people look at that per square foot price. They look at the investment, they look at appreciation. They don't generally look at anything beyond that. What are they missing if they look at purchasing and holding of real estate?
See, looking at only per square feet will be a terrible way to buy a home. Per square feet in a way should be probably one of your, I think, bottommost priorities. Most home buyers make the mistake of putting that at the top. Partly it's because budgets for homes make sure that most buyers are compromising. So your per square feet becomes the default setting. But if I was to guide somebody how to do it, I'll tell him to keep that maybe at his fourth or fifth priority. Buying a home is a very simple process. We have somehow complicated it by adding so many different elements. Do it the old-fashioned way. Choose your location right. More than that, choose your developer right. Look at the layout. Then maybe come to things like the per square feet.
Is that true in every market? And of course, real estate is looked at in micro markets. You've said this before, and I think a lot of people have said that as well. But I think it was I can't remember which CEO of a real estate company was talking about the fact that your real estate prices and infrastructure are inversely correlated, right? So if your infrastructure is bad, your real estate prices in that place are significantly higher because you're willing to pay a top dollar to stay closer to the city centers. So in that sense, you have to think about location, but the same rules will not apply if you're going to a smaller town or city.
See, smaller town, while they provide you a lot of peace, and I think people have a romantic notion of, that we'll go to a small town and settle down. Most people I know who have gone there it hasn't quite worked out according to plan. Cities have a vibrancy and energy, tier 1 cities. So people, once you've tasted that, you invariably want to get back to it. Unless you're so fed up of it. And I've not seen too many people who have made the migration from tier 1 to tier 2 and not returned to tier 1. So, the fundamental of a tier 1 and why it keeps going is actually very simple. Tier 1 cities are made up by energy, by people. Infrastructure is the X factor, or I won't say X factor, it's a Y factor. X factor is something else. The Y factor is that, why are prices so high? Like you said, the Tata Realty.
Yeah, it is Tata,
Yeah, he said that, right? Bad infrastructure leads to higher prices. Just by that benchmark, all Indian city home buyers are doomed then. Because the infrastructure is collapsing pretty much everywhere. That's true.
Vishal, you've said that, buying a home is kind of an emotional decision disguised in a financial one. Just want to get a sense, because there's a never-ending debate of buying a house, whether it's an asset or liability, right? What do you think of that?
See, buying a home is mostly an asset. It can turn into a liability if you're buying with the wrong developer and buying under construction.
Yes.
Because unfortunately, in real estate, it's a binary call when you buy a home under construction. If you buy it and it gets stuck, the value is zero. You can't sell it. Unlike a stock, it can go down 10-15%, it'll be lower circuit, 2-3 days, you can get out. In under construction, stall projects, the value becomes zero. So it's a emotional decision, which somehow people rationalize it. So that's why emotion trumps the financial part of it, which is why some properties have obscene prices. Why do they have it? Because after a point, the emotion takes over.
Correct. So just one last point, and maybe just a quick answer, which is the first episode goes live today. A sneak peek on what to expect?
I think what to expect is you'll get real people, real conversations, real experiences, real learnings. I think one of the dilemmas for most home buyers is that they get to see a lot of houses, but not homes, and the decision making behind them. And invariably, I think through this show, the aim is that people learn from the journeys of people who have already bought a home, where they went right, where they went wrong, and how they can adopt it in their home buying decision.
Oh, fantastic. I look forward to watching the first episode. Vishal, thanks so much for taking the time. Let me go across to Neeraj Zivan just to get a view on the real estate space, not necessarily from the perspective of buying a property, though I'm hoping that you'll find the new show as useful as everybody else tuning in, but from the perspective of the developer. Would you suggest buying into any of them right now?
Yeah, actually, you've seen recently over the last 7-8 days, 10 days, there have been some value buying which has happened in real estate. And a lot of the stocks have moved up also. So I think if one is still stock specific, I would recommend that, stocks in the NCR region, they have not really gone up so much. So I feel there is definitely still value in these stocks. So if one is looking at investing for a couple of years, I think it's still one can look at investing.
So that's the view coming in on the real estate pack. Milan, what Neeraj was just mentioning, we've seen a lot of value buying coming in the real estate, but when we take a look at the Q4 number, it's been a mixed bag. There are some counters which have done exceptionally well on the back of, good collections, pre-sales number, etc. There are some counters that are lagging as well. On the charts, any of the counters that stand out for you?
Yeah, there are in fact two of them. One is Godrej Properties, and the second one is Oberoi Realty. These two look good on the charts.
Okay, so that's the idea of the real estate pack as well. But Milan, the other pack is the FMCG pack, where we've seen, again a mixed bag. There was, Britannia, which was disappointing, but Dabur did very well. Any of these counters where you think there could be, some breakout possible, or where charts are looking attractive?
None of them, because Hindustan Lever or Dabur or Nestle or Britannia, they have seen some good rebound from the lower levels, but they still continue to rule under some major overhead resistances. So I think we can look at locking short-term gains if anyone is sitting on, or else long-term investors may stay invested, but making any aggressive fresh entries on this space is something I would not recommend.
Okay, all right. Let's talk about the key stocks that are buzzing, and we've spoken about quite a few, and certainly the big ones, but let's go across to Jasmeet to perhaps round up the list for you. Jasmeet, what stands out today?
Well, thank you for that. I have 4 stocks which are buzzing on the back of the earnings. The first one is Bhartiya Airtel. Well, now the African arm of the Bhartiya Airtel posted their Q4 numbers and they were quite strong in terms of the overall performance. If you look at the overall revenue growth, it's up 3.7 odd percent, while the EBITDA is up 6.3 odd percent. In terms of the overall ARPU, even that has stayed slightly stable for the company at $2.7 odd dollars. While the second counter is Sonata Software, while this stock is buzzing in trade on the back of that strong Q4, and we also see a shift coming in this particular counter. The overall cloud and data segment has increased its percentage of revenue from earlier 54 to up until 65 odd percent in FY26 altogether, and the management says it's going strong going ahead. Further, the company has also signed 2 large deals in the Q4, and they see the deal pipeline to be healthy for the coming quarters as well. While the third one is Sandhur Magnesium, while the company has noted a record quarter FY26 with the highest ever EBITDA margins. Now, what they see is the overall magnesium ore demand has increased well for the company, and Q3, where the rates are fluctuating, they see the Q4 to be much more stable and the coming years to be with the same stable rate. And further, the increase of infra expense by the government is helping the company as well. While the last one is the Kenta Metal of India, while we see a strong Q4 coming with this particular counter, where the company has posted a double-digit revenue growth and double-digit EBITDA growth as well. The hard metal segment of the company has led the overall growth, is up nearly 20 odd percent, while the machine and solution part of the company saw slight softness in the Q4, while it's flat on QOQ basis.
All right, so that's quite a bit. Thanks so much, Jasmeet, for that. And on that note, I'd like to thank both Milan as well as Neeraj for joining us this afternoon, and wish you a happy Friday and a happy weekend as well. And I hope it stays calm and peaceful and we return to work on Monday with bright smiles. All right, let's talk about the markets and see what's happening. We're ending at least off the low point of the day, but not too far off the low point of the day. Cuts of about 150 points or thereabouts for the Nifty 50, 24,176. The broader markets showing relative resilience. Pull those up. The mid-cap index cuts of just about 0.2%. Small-cap index gaining about 0.2%. In the advanced decline, now favoring the declines. It actually switched midway through the session. I also do want to pull up, before we get into the closing for today, the weekly chart, if we can, for the Nifty 50 and for the mid-cap 150, if we can do that. All right, so we're still gains of about 0.9% for the Nifty 50. Pull up the mid-cap index and the small-cap index, and you will see 3.6%. So it's an outperformance for the mid-cap index. It's at or very close to an all-time high, and 4% plus in the week gone by for the small cap 250. Important to note that this is on the back of a 13% gain in the month of April for the mid-cap index and a 17% gain for the small-cap index. So it's quite the stellar return.
Yeah, I think that shows the strength, right? Now we're seeing buying coming in the broader end of spectrum, and that shows that markets now are going at the buy end of spectrum, and soon we'll see that buying action coming in the benchmarks as well. But quickly, a sectoral heat map also before we go to what to watch as to how sectors have fared today. Nifty IT leading that pack, up 1.2%, followed by the consumption and consumer durable, which is up by about 0.7%. But clearly, PSU banks, in the lower end of that chart, down by about 3% now, dragged down by SBI, the heavyweight on the Nifty 50 as well. Banks also down by about 1.3%, below the 55,600 levels, if I'm not wrong. The financial services also seeing a downtick of around 1.7%. Metals is also seeing good profit booking today. It did see some action, in the first 3 days, but today seeing profit booking. The oil and gas also down by about 0.9 odd percent, and you have realty, which has also seen profit booking today by about 0.6 odd percent. So that's with regards to where the sectoral heat map goes.
Yeah, and we're winding down the last few seconds. So let's pull up the Nifty intraday chart just to see where we're closing out, or the Nifty heat map actually, just to drive that home. Okay, so this is so just about 0.6% more or less where we started winding up. We're off the low point of the day certainly, but significantly off the high point of the day, which also is in negative territory. The heat map for the Nifty 50, gains of close to 5% for Titan, Apollo Hospitals in the top gainers list as well, but not heavyweights, and so therefore they weren't able to really move the needle. Asian Paints up about 2.7% on the losing end, where Mahima is standing just about 6.7% and close to the low point of the day for State Bank of India. That really is the story of the day, Friday. But there's lots to talk about, and we'll take that forward in the editor's cut. I'd invite you to stay tuned. From Mahima and myself and the team that put this show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
You're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. Two people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
How do you get a branding like Penne? How do you get Deepika Padukone to show up to your place in the first week?
I don't know Deepika. I got a call and I answered the phone. I thought it was a work call. Nikhil said that Deepika wants to come to Penne, and I said, Deepika is your sister? He said, no, Deepika Padukone.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open. Now
Welcome, you're watching Editor's Cut, and we have the one and only Pankaj Murarka in our studios as guest editor today. Pankaj, welcome to all the madness we have post-market close every Friday.
Thank you so much, Tamanna. It's a pleasure to be here.
Yeah, it's been an exciting week, hasn't it, folks? So you've started with the election results.
Yeah.
Where pollsters, at least some of them, got to say that, look, even I get it right sometimes. After so many elections where they fumbled, feeling of disbelief, euphoria, then pessimism, then euphoria again on an Axios report which said there's a one-pager now already. So at the end of it, you're as confused as ever.
Yeah, actually couldn't have put it better, right? Because at the end of every Friday, we feel that this is the same confusion that existed last Friday and possibly will exist the next Friday as well, because you never know. I mean, the definition of EBITDA has changed now so much. It's after Donald Trump announcements. All as confused as before, for sure.
Yeah, I agree. And so I think more than anything else, though, my worry is looking at some of the numbers is that Q4 presents a little bit of a glance at what has occurred, but I think that feels like too far into the rear view.
Yeah.
And already the market seems to be getting worried. If you look at FMCG results, they weren't too bad.
But
they were actually okay. But then the market is already pricing in pressure in Q1 and saying, I'm not going to give you too much of a breather on that because the outlook is not looking very good.
And I think taking from where Alex left is there is a distinct divergence if you have to look at in terms of value and growth in terms of market cap. So if you have to look at mid caps, small caps and large caps for FY27, there is a distinct gap coming in between value and growth. And I think that's what we should be looking at as well, because so far the fourth quarter has given you a good beat in terms of numbers overall, and we should talk about it as well. But what happens in the first half on the back of the impact is crucial.
Yeah. First half, Pankaj.
Let me intervene here. Maybe let me make 2 points. First, on the markets, it's very true. Markets are a reflection of the economy. It's the economy, if we zoom out and just put, let's say, the last 5 years in perspective, last 6 years, because this recovery started post-COVID, it's a K-shaped economy. There are pockets of economy which are doing pretty well, but there are pockets of economy which are not doing well. And my view is that, as far as this economy, and this is not an India phenomenon, this is a global phenomenon. This is something very similar. It's how the economies are playing out in Europe, US, everywhere else in the world. So it's a global phenomenon. And I think this is how the economy probably, in this economic cycle, one conclusion, I was looking for a mean reversion, but I've come to a view that this is how economies will be over the next 2 to 3 years, whatever time we have in this business cycle. Markets are a reflection of that. Markets are extremely polarized. So on one end of markets, you have stocks which are trading at 70, 80, 100 times multiples. And on the other end of the market, values become even cheaper, or what we call in our analyst language, deep value. So values become a value trap, because every time you see a value and you try to get into those names, 1 or 2 quarters down, the stock is down another 20%. So I think this is how, and because money chases performance, so this is also leading to more money flowing towards those more expensive stocks, because eventually those stocks are delivering returns for you or outcomes for you. So markets are polarized. The index is somewhere in the middle.
No, so the polarization this time also being seen between the SMIDs and the index, right?
Absolutely. So that's one trend. The second trend, which is clearly playing out, is this is the first time I'm seeing, just to put in context, CY25, India's underperformance versus emerging markets is the sharpest we've had after 1995. Okay, India is not underperforming. India is a laggard market when it comes to global markets. If you see US markets in the last 3 weeks, they've made all of these markets are now trading at new 52-week highs, and we're still away from that. And it's the worst. Actually, it's the worst performing market.
Yeah. So here, sorry, please finish your point.
I want to go back and relate this. One of the biggest driver of the growth, and this has I think it has underpinnings in what's happening in the world. The biggest driver of the growth today is, all of us know, the elephant in the room is AI. Yeah? India had similar underperformance in 1995, and that's primarily because whenever you have a new foundational technology which will change the world, the first 3 to 4 years or 5 years, a significant amount of investment goes into building infrastructure for making that technology accessible. Internet happened in 93.
Okay.
Yeah. Some of the best performing stocks at that point of time, apart from the technology companies which were there, were the hardware companies. Cisco.
By the way, viewers, for context, Pankaj Murarka started his career as an IT analyst in '94. So just right there. Yeah, please make a point.
Cisco, IBM, HP, they were some of the darlings of the market.
Yeah.
And they were all because big beneficiaries of proliferation of internet and PC revolution, apart from whatever, Microsoft and everything else. And something similar is playing out now. India did not have a play in hardware when the internet evolution of internet happened. We don't have a play on AI infrastructure, be it the semiconductors, be it the hyperscalers, or the foundational model companies.
And therefore, Pankaj, the question is, the point that you made about K-shape economy for different economies, if you take the world as a single economy, could the K-shape last wherein 3 or 4 or 5 countries, and in fact you spoke about the performance, we have graphics of that, of the performance of various economies or markets, South Korea, Taiwan, maybe US versus India. Could the K-shape last for a bit, wherein India, some of the other markets may not perform, but the others may continue to perform?
Answer is very simple to my mind. It's very difficult. It's not very difficult to time it. But once the technology is made accessible, this is like, you building, once new technology is available, it's like building roads and highways. Once you build roads and highways, only then cars and vehicles can ply on that. Once the technology is made accessible, the world has to access that technology. The diffusion of the technology has to happen by corporates and consumers. India definitely has a play there. India has a dominant role there. 70% of market share in IT services, these companies will play a very fundamental and very central role in diffusion of technology.
So the K will flip. The K will hopefully at some point.
There will be a mean reversion. But I am willing to,
Why you
I just want to ask her.
No, let me I'm willing to what? Willing to bet?
I'm willing to bet there'll be a mean reversion.
When?
I think my best judgment in the next 6 to 12 months.
Wow, okay. Interesting.
My best judgment next 6 to 12 months.
So I have a couple of points.
Because also, just a last point, in the whole bill, it's always a very normal thing. It has happened cycle after cycle. When such a foundational technology happens, the world goes overboard and it ends up overbuilding or over-investing into infrastructure.
Yeah.
Exactly same thing happened during the internet era in 94 to 97. Yeah, and a lot of these hardware companies then crash.
I was going to ask.
The same thing is happening now, where companies are making investments, hyperscalers are making investments. Those investments cannot be rationalized basis cash flows and ROIs. Today, those investments are made because no one wants to lose. So those investments do not have a rational ROI or cannot be justified basis ROI. So you already know that you are at things have gone overboard. And one of my classic, I follow, meaning one of the classic saying from amongst the 10 commandments of Bob Farrell, one who's a very senior Merrill guy, one of the ex-colleagues, that markets have this tendency that the more they go away from the mean, they tend to rebound very sharply. So those last 3 or 6 months can be very ferocious, but I think somewhere we are in the fag end as far as stock markets are concerned on the AI theme in terms of whatever you're referring to, Korea, Taiwan, and all of that.
Just on the point that you made, right? Those 3 companies that you mentioned, and specifically Cisco and IBM, right? For those people that don't know what happened after that and the years that followed, just very quickly, there was a significant amount of value destruction that took place as well. For people that piled on at that time and held for the longest time, particularly for Cisco, the story that people have told over the years is...
It's very normal in a business cycle for companies to make excess investments and companies to go bust. And some of those companies, the very fact that some of these companies survived means they still had some underlying business. A lot of companies went bust during that cycle. So I'm not even discussing that. Obviously, there are a lot of companies within US, beyond this, the top 5 or 7 names which we know, which have significant leverage on the balance sheet. And many of these companies will go bust. They'll not be around 18, 24 months out. Meaning, I think there's no, I think we should not even be discussing that. It's a foregone conclusion. And it's a very normal thing to happen in a business.
That's a very straight, candid take when it comes to AI. But then, okay, let's take into consideration as a retail investor, everyone is still thinking of what to do, correct? IT as a sector, if you have to look at Q4, the sector around 12% is the kind of profitability growth that the companies cumulatively have put together. And if you have to look at any of the other plays, which are your AI-driven plays, take into consideration your power sector, take into consideration cap goods, taking the data center play into consideration, Power has still somewhere outperformed, cap goods not to that extent in terms of profitability. Would you be then saying that these are sectors which investors should then probably avoid right now, because you are seeing some kind of a wave that will come in over the next 12 to 18 months? Because that's what people are betting big on right now.
So I think power and utilities will continue to do well, because we also need to understand the context that for a period of 15 years between 2008 and 2021, we did not have a single penny being invested into new power plants in India, because in the 10 years prior to that, we built so much of capacities. 95% or 90% of the companies in India's power sector went bankrupt between 2010 and 2020, where we had this whole issue about big NPAs in banks and all of that. So we're coming out of a phase where now actually demand is running somewhat ahead of supply. It's a sector where you cannot bring supply in a short span of time. It's a sector which takes 3 to 5 years to bring supply on place. So it's a sector where demand supply is in balance, and as India's underlying growth sustains across manufacturing, PLI and so many other things, obviously rural electrification, all of that, so supply needs to keep pace with that. It's a sector where we had a lost decade for the sector. So we need to understand that the context from where we are coming from. So I think powers and utilities have done well, I understand, but I think they'll do well. They'll continue to do well, because apart from AI-driven infrastructure, which is not a significant contributor to demand growth in India today, unlike US, but there are other drivers of growth, and we have a sector with demand-supply balance. As far as IT is concerned, it really depends on time horizon. If you ask me, for any investor who has a time horizon of 3 to 5 years, I think, okay, let me put it this way. I think in the last 20 years, probably this is one of the most exciting opportunity or time at this point of time to be buying in these companies.
So you're not on the school of thought that Indian IT has missed the bus, they're not doing anything exciting, they're now trying to clamber on and has been left out of the whole race. You're not on that school of thought.
On their core business, they are doing what they're supposed to be doing, and they're very much there. They've not missed the bus.
So every new Anthropic update is not bothering you?
Certainly not, because eventually diffusion of technology for adoption of technology, enterprises cannot do it on their own.
But Pankaj, Anthropic is saying that they are going to do what IT service companies are doing, and their own LLMs.
I wish. Okay, I think they understand technology. They don't understand enterprise ecosystem, how enterprise operates. Enterprise are absolutely paranoid about their data. AI models are probabilistic model. The same question you ask the AI model 3 times in a day, it will give you a different answer. Yeah. Enterprise data systems of processes are definite and deterministic models. You need finite outcomes. Just think about, think about a large bank, let's say a Citibank, operating in 140 countries, each country different regulations. In each country, hundreds of products. Let's say home loan, retail loan, this loan, that loan, and all of that, right? It's a very complex system. Do you think a Citibank will open its system to Anthropic? I'll give you a classical example which Workday CEO gave. Okay, Anthropic launched an tool where you can run your own HRMS software, where enterprise can, and it's available for free. It's there on Anthropic's website. Anthropic has 3,000 employees, and they're using Workday. First, they need to use their tool for their own employees.
What is the reason?
So the Workday CEO is at pains to explain that all the 3 companies, Google, OpenAI, and Anthropic, they run their entire employee management system, HRMS, on Workday. And each of them have launched a tool where you can build your own HRMS and you don't need Workday. But first, these companies need to use for their own self before you can expect others to adopt. But they are on Workday systems. So I think, there is actually the problem with markets is twofold. Markets are an excellent discounting machines, and they're very fast at processing data. Where markets make an error of judgment is processing information. And the fear of unknown, because there is so much of information coming, the fear of unknown is a much bigger fear than the fear of known. When it's known, markets are very efficient at pricing that. So what markets create inefficiencies and which creates opportunities for long-term investors is when the markets are processing information.
Do you think we're coming at just taking that forward from the AI story to now the geopolitical story? Do you think that we are at the fag end of that opportunity where you can actually build serious wealth if you keep the faith, where your patience just has to outlast whatever happens in the Strait of Hormuz? Are we close enough over there? Because markets have started reacting in lesser and lesser intensity to all the news coming from the West Asia
Not
crisis.
really, Tamanna. Let me give you another top-down template. So there is a lot of this, everyone is so focused on what the fourth quarter earnings are, how everyone is busy forecasting first quarter numbers.
Yeah.
I've never seen so many people trying to get the impact of oil prices in first quarter.
Yeah.
Including my cook, he's trying to. I'll give you. So it's. I think at times it makes sense, logical sense, to step back and zoom out. I'll give you a simple template for investing into India. India is a large economy. It's an economy with very stable macroeconomic fundamentals. Yeah, it's a very resilient economy. One of the simplest template for investing into Indian equities is buy them when India gets a macroeconomic shock. India does not get a macroeconomic shock very often. Yeah, whenever India, because it's an economy which is very large and resilient, it has the ability to absorb that shock. Markets have a tendency to overreact on both good news and bad news. So when the shock really hits the economy, markets tend to overreact. But eventually, even if India's growth gets impacted in the short term because of an external shock, eventually it reverts back to mean growth over a period of 4 to 6 quarters. Yeah, because it's an economy which is underlying economy is very resilient, and which is what creates a gap between what markets tend to price when the shock happens and the medium-term value of that market. Yeah. Last time we got a macroeconomic shock was in 2013, in midst of taper tantrum. Yeah, when Indian currency depreciated by 30% in a matter of 4 months, and all the three markets went for a toss. So we had a significant impact on currency. We had bond yields which had gone up, and equity market had fallen sharply. 12 months post that, post August 2013, the shock was experienced between May 13 and August 13 when the Fed first time expressed that they might want to withdraw from QE program. There was a taper tantrum and there was a runoff on all emerging market currency. India was running a very high inflation at that point of time, and as a consequence, between August 13 and August 14, markets fell sharply between March and August 13, but the next 1 year markets went up by 45%.
45%.
Yeah. India has got a macroeconomic, the sharp rise in oil price was a perfect macroeconomic shock for India.
But that's my question. Are we at the end of that opportunity?
We are at the end of that shock. So this is the beginning of the opportunity, not the end of the opportunity.
Okay. So then where is the opportunity is the question, right? Because as
buying India, just to complete that point, buying, there's a very simple template. Whenever this economy faces a macroeconomic shock, you see what has happened in the last 8 weeks. Yeah, currency has adjusted by about 5%, but last 1 year has been about 9%, extreme. 3 standard deviation above normal. Yeah, bond yields have gone up by 40 basis points, but bond markets are very smart. 10-year bond yields bottomed out in May last year. Between May and December, RBI did 75 basis points of repo rate cut. Bond yields went up by 75 basis points. Bond markets had their own precise.
Sorry, I have to come in here because this is exactly what I was spotting, and I'm actually want to.
I knew what was running in your mind.
I want to actually zoom out because you're talking about India, Pankaj, but then I was looking at bond yields in the US, I was looking at bond yields in the UK and in Japan, right? So if I look at the 30-year, for example, in the US, it's hovering around 5%. In the UK, it's hit the highest level since 1998, the 30-year. The 30-year in Japan is less than 15 basis points away from all-time highs. The 10 years have also moved up substantially. The question that I'm asking is, why the dichotomy, right? You're talking about discounting the future.
Simple. There are 2 different trends playing out there. There is one very long-term trend playing out, where Western world obviously has significant amount of leverage, and those companies are running very large fiscal deficits in case of US, in case of Japan. Very loose monetary policy, still significantly behind the curve because they are focused on getting, after 40 years, Japan is out of deflation. So they really want to go very slow in terms of raising rates, and it's a directed policy. I think it's a policy action where they want to keep the currency weak and so on and so forth. And there is a cyclical trend. So in India, the bond yield is rise in the bond yield is more a cyclical trend than a longer term trend about the larger trend. So I think those are two different trends that are playing out, deciphering the market. So the point I was coming back to is the bond market yields have taken a toss, equity markets have gone for a toss, and currency markets currency is adjusted. So you can feel the impact of macroeconomic shock that is experienced across all financial markets. Markets are very fast at processing. Yeah, but the simple template is when you just have to go and buy Indian equities when India faces a macroeconomic shock. The next 12 or 18 months leads to significantly higher returns. We are at a point where India has experienced a macroeconomic shock.
Let's try and figure this out.
The last point, you don't get these opportunities very often because India faces a macroeconomic shock once in a 10-15 years. It's a large economy.
If this table believes so, okay, let's do a quick check. Hiral, one sector that has stood out for you in this result season, maybe that's a sector. I will confirm with Pankaj. Very
utilities, 61% PAT growth.
Utilities. So you think utilities have delivered in this quarter?
Yes.
I think despite
quick, you don't get so much time to think. AMCs, asset management.
Only because of what is lined up,
Okay, Tamanna?
Diagnostics, what's happening? Pura India test कर रहा है.
Maybe. क्या हुआ? Hanta virus. What has come?
Something rhymes with Hanta virus. That is what the virus. But no, this is just only with rats and very slow transmission. And we did that story today so that people is diffused. But something's happening with diagnostics and I think pharmaceuticals. I would add.
Pharmaceuticals. Okay. And I thought that just the price hikes and Ambuja's commentary that they are going to focus on profitability, the cement. So maybe there are 4 sectors from 4 editors out here. Pankaj, what did you think?
I think industrials, because there are pockets of economy which are, while the aggregate investments of capex in the economy is still moderate, there are pockets of economy where the capex intensity is reasonably very high and it's very robust. So if you have companies focused on that, and especially relates back to what Hiral was saying, power, utility, data centers are big drivers of this thing, and the demand outlook, the order book momentum is extremely strong.
You know, that is strong, but one quick question, and I think we started India Market Open with that, is whether there is now value in large caps versus the SMIDs, because the SMIDs are running up. Valuations in SMIDs is very expensive and your large caps are way cheaper. What do you do?
So I'll tell you what Pankaj had told 6 months ago. Okay, large caps may be the nifty, but the profit growth is in the mid cap and the small cap space.
But now what happens? Does that reverse? Is this a tipping point now from here?
Look at Q4 results. SMIDs have outperformed large caps, I think, on most parameters, whether it's IT, whether it's financials, across the board.
Your small cap profit growth is 30%, mid cap is 29%, and large cap is 14%. And 73% of your mid cap companies have outperformed estimates. I think he'll just have to add. I don't even want to ask him.
No, I think that's true. I think that point remains valid, that we are coming out of a cyclical slowdown in the economy.
Because we have 45 seconds on the show.
Sure. I think that trend probably will continue for the next 2 or 3 quarters.
So you are not worried if now we're going into the weekend, again, some statements, some comments, state of hormones, more than a love tap. I learned a new word today, love tap. Do you know what is a love tap?
No, so
that is how Trump has described the exchange of firing between the US and Iran in the Strait of Hormuz.
The most recent one.
They won yesterday. He's saying it's not the end of a ceasefire, it's just a love tap. Apparently, that's a move in a war where, you sort of...
Non-escalatory.
It's non-escalatory.
It's just like a
Pyar se mara.
nudge. Yeah, pyar se mara.
Everyone's looking at Neeraj like,
Because I'm looking at everybody here. Pankaj, 10 seconds. So answer that. Before we wrap up.
I'm not worried about it. I think the worst of Hormuz is behind us. So I'm not worried about that.
Okay. It's a love tap with markets as well.
All right, on that note, we really have to wrap up. But thank you so much for all of you joining in, and tell us what you think of this show and what you want to hear next. We'll be back next Friday, same place, same time. You're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. Two people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
How do you get a branding like Penne? How do you get Deepika Padukone to show up to your place in the first week?
I don't know Deepika. I got a call and I answered the phone. I thought it was a work call. Nikhil said that Deepika wants to come to Penne, and I said, Deepika is your sister? He said, no, Deepika Padukone.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year.
Markets end lower today, but for the week, Indian markets end on a green note for the second consecutive week. Rupee ends lower compared to the previous close, but stays way off its recent record low, closes the week at 94 rupees 50 paise against the US dollar. Oil prices are sliding for the week as diplomacy still holds the upper hand, and Brent hovering between $98 to $101 per barrel. Despite fresh US-Iran clashes near the Strait of Hormuz, Trump insists the ceasefire remains intact. SBI shares fall almost 7% today, sharpest intraday fall since budget day after a weak set of Q4 numbers by the largest bank of India. NII posts of 3.8% growth, but the number remains below the estimates. Delivery and quick commerce platform Swiggy posts 800 crore rupees of net loss in their fourth quarter, double of market expectations. Revenues up 44%, pumped up by food delivery business. Exclusive update sources tell NDTV Profit that cloud hangs over Dixon Vivo JV approval amid the ED probe under PMLA. MHA to take final call on Dixon Vivo JV proposal soon. In a big setback to Trump, US court rules against Trump's latest 10% global tariffs imposed on all trade partners, calling it unlawful. Court blocks enforcement, lending India a negotiating edge. Amid looming health scare related to another virus spread, the World Health Organization says that 5 cases of hantavirus have now been confirmed in relation to an outbreak on a cruise ship. Many more may follow due to the virus's 6-week incubation period. Twist in Tamil Nadu politics, buzz over anti-Vijay front peaks. DMK sources say the party will make a move after May 10th if Vijay fails to get the numbers. Meanwhile, Vijay seeks appointment with Governor this evening. Home Minister Amit Shah chairs marathon meeting in Kolkata, BJP's legislature party, to formally elect its leader, with Suvendu Adhikari emerging as the front-runner. Sources say Bengal may get 2 deputy chief ministers. BCCI sets new SOP for IPL players, bans unauthorized entry in players' rooms, warns of honey trap security risk. Hello and welcome. This Friday afternoon, you have tuned into Profit 360. I'm Nisha Podar. Let's take you through all the top developments of the day so far. While the benchmarks really wrap the trading in the red, with Nifty really ending below 24,100 today, on a weekly basis, Nifty ended on a green note. Remember, rising over 0.7% for the week. And this, remember, is the second consecutive week of green ending for the Nifty during the war period. These are the 2 weeks. Now, the broader market, remember, did relatively better on both weekly basis as well as today. Shares of SBI, they clearly dragged down the Nifty as their quarterly results really disappointed the Lal Street. Let's get my colleague Jasmeet joining in with all the market action of the week and the day. Jasmeet.
Well, a bearish day for markets today. Nifty 50 ends in red, down about 0.6%. Now, in terms of the overall mark, we do see Nifty 50 holding up above the 24,100 mark, but below the 24,200 mark. In terms of top losers, we have something like an SBI, which lost the most in the second half of the day, down about 6%. Then you also have Coal down about 2%. Now, well, if you look at the weekly image, it turns out to be positive. While Nifty 50 ends in green over the week, gains about 0.7%. And this is second consecutive week for Nifty 50 to gain the most over the last 2 weeks. Now, in terms of the top gainers, we have Shriram Finance and M&M gaining the most in overall market. In terms of the broader market, it has outperformed the benchmark, while Nifty to small cap 250 and mid cap 150 both end in green. Now, in terms of mid cap 150 is up about 3% and top gainers in Nifty mid cap 150 are stocks like Godrej Industry and Thermax gaining the most over the week. Now, in terms of small cap 250, which is up about 4% and the top gainers in small cap 250 are stocks like Valor Estates and First Source gaining about most in the week in terms of overall small cap 250. Now, if you look at the broader market, we do see that Nifty Auto was a top performing sector for the week, which has gained about 5% and in terms of top gainer in Nifty Auto, we have stocks like Samvardhana Motherson and M&M gaining the most. Now, in terms of Nifty Defense, Nifty Realty, Nifty Pharma, even they gained a lot during the week. They gained over 3%. In terms of top losers, we have Nifty PSU Bank, which lost the most, which is down about 1.3%. If you look at the key streaks, Nifty IT gains for the second consecutive week, while Nifty FMCG and Nifty Pharma gains for the 5th consecutive week. While lastly, Nifty Bank snaps its 2 weeks of losing streak and gains during the week.
All right, Jasmeet, thank you so much for getting us all those details on the market action for the week. Now, oil temperature, that continues to cool down as hopes of a peace talk are on the cards between US and Iran. Now, the crude price currently ranges between $95 to $100 a barrel, while Brent trades around $100 per barrel. Now, the US WTI benchmark also holds tight to about $95 mark. If you look at the money market in India, well, the rupee, which has been impacted by the crude movement and the global uncertainty, the rupee really weakened during the week, but today it has weakened but much above the lowest level that it had touched during the week, ending the week on 94 rupees 48 paise against the dollar. All right, let's take it straight to the earnings. It was a big day of earnings and still continues to be through the evening. Well, the India's largest bank, State Bank of India's shares witnessed their sharpest intraday fall since the budget day after the country's largest lender really reported a weak set of Q4 numbers. Now, while SBI managed to beat the profit estimates, weaker core operating matrices, they appeared to really disappoint the street. Standalone net profit for the March quarter came in at 19,684 crore rupees, which is up nearly 5.6% annually and ahead of analyst estimates of 18,897 crores. To decode these numbers further, let me take it across to my colleague Piyush, who is joining us with all the details, internals and the analysis. Tell us, Piyush.
That's right. SBI has come out with a stable set of Q4 numbers, although there are a bit of one-offs as well in this quarter. Firstly, the bank's net profit has grown to around 19,600 odd crore. It has grown YOY, but Q-on-Q there's a dip essentially because of lower gains in the other income. The bank actually faced around 4,500 crore of trading income loss from forex, bond market and equity instrument investment that the bank had made. So this made a dip in a little bit of a dip in the net profit. The other helpful thing was that the provisions actually came down both YOY and Q-on-Q, which helped pull up the net profit up. In terms of asset quality, the bank's slippage ratio and gross and net non-performing asset ratio is broadly similar. There were slight higher slippages in Q4 emanating from agriculture loan portfolio, which the chairman of the bank, Mr. C.S. Setty, explained in the recent press conference. Going ahead, the bank is actually targeting 13 to 15% of loan growth in FY27 and around 11 to 12% of deposit growth in the next fiscal. The bank says that it has around 5.5 lakh crore of corporate loans that are in the pipeline emanating from segments such as infrastructure, traditional energy, petroleum and other allied sectors. Overall, the management's guidance is that the NIM actually will be at around 3% level, which is very keenly eyed. The NIM did take a Q-on-Q dip essentially because the bank's share of EBLR loans rose and MCLR linked loans actually came down. The rate had come down a little bit. So for FY27, the bank remains cautiously optimistic. Back to you.
All right. Thank you so much, Piyush, for joining us with all those details. Let's also hear out the top management of the bank on what really transpired and why this kind of a stock reaction. In fact, management has said that the repo rate cut in mid-December led to a repricing of the MCLR-linked loans hitting the NIM. Listen in.
There are a couple of rate cuts which have happened in December, middle of December, have not been fully taken in the EBLR book. So that is 25 basis point cut in December, and also we had 5 basis point MCLR cut. That's one main reason where EBLR book got repriced. The second thing is there's been a substantial growth in the EBLR book itself. If you have seen both home loans and MSME, which are essentially linked to the EBLR, that also has contributed to the NI reduction. While we have been very successfully containing the cost of resources, in fact, the cost of resources has come down over the last quarter. And the NIM guidance, what we have given, exit NIM of 3%, I think we were able to fulfill that. And we have given this guidance that the NIM will be, exit NIM will be 3%, and that has been achieved.
Right, to another big development when it comes to corporate earnings announced today. Food delivery and quick commerce platform Swiggy posts 800 crore rupees of net loss in the fourth quarter, double of, remember, what the market was really estimating. Revenues were up about 44-45% and operational loss narrowed compared to last year Q4. Now, the sharper than expected net loss was largely due to the higher finance costs and also elevated depreciation expenses as the company continues to aggressively invest in expansion and infrastructure. To decode the numbers, we have Mahima joining in to give us all the details. Mahima, it was quite a shocker and the market reaction will be watched out for.
All right, so overall, Q4 for Swiggy not looking very positive because the net loss number has come in at that 800 crore versus an estimate of 400 crore. So 440 odd crores. So the street probably might not like this number. Revenue largely in line with what the street was expecting, slightly higher, 6,383 crore versus that of an estimate of 662 crore. EBITDA loss has narrowed down, however, at that 697 crore versus that of 962 crore. But bottom line still a concerning factor for something like a Swiggy. In terms of the segmental growth, food delivery growth stood at 27%. So not a bad quarter when it comes to the food delivery business as a whole. Quick commerce, however, the growth has kind of deaccelerated and not a very positive one because that's come in at 53%. Out-of-home consumption has seen a growth of 60%, supply chain a growth of 56%. Overall, in terms of gross order value, food delivery has seen a growth of around 23%, and quick commerce gross order value growth stands at 69%. Monthly transacting user overall on the app has gone up by 27%. So this is the overall view with regards to where Q4 stands for Swiggy, but I think the net loss and the quick commerce growth deaccelerating are the two concerning factors here.
All right, post-market hour results, and Monday morning, Swiggy will be the stock to watch. But today, a lot happened when it comes to Lupin stock as well, despite reporting a strong set of fourth quarter performance. And that's the slide that it saw in the trading hour today, despite a surging revenue as well as good set of numbers when it comes to the margin picture as well. However, with geopolitical tensions, it will be impacting the margins, is what the management shared with NDTV Profit. Listen in to Ramesh Swaminathan, who's the Executive Director and Global CFO of Lupin.
So clearly, we are concerned about the situation as it is emerging. It certainly has an impact when it comes to to profitability. It is obviously the various factors that I spoke about, which is essentially input cost as well as in fact the logistics cost is certainly going to weigh in. There's sometimes the availability of containers to kind of ship in. Essentially that's going to be a problem. So overall, we are still reasonably confident of a pretty good margin, though of course not necessarily the same levels as you saw in Q4, but pretty healthy, all the same.
All right, so that was Lupin giving a softer margin guidance for this particular quarter, that is Q1 of FY27. Biocon reported a better than expected fourth quarter performance, aided by healthy growth in the biosimilars business. Now, the quarter, however, came with a high base due to generic sales in the year ago period, while an exceptional item really weighed on the company's reported net profit. Speaking to NDTV Profit, Biocon CEO and Managing Director Shrihas Tambe highlighted the company's growing focus on the GLP-1 segment, a space globally seen as a major opportunity amid the rising demand for diabetes and obesity therapies. Listen in.
We've got several products that we are launching in the coming fiscal, in the current fiscal now. So we are looking to see that these ramp up in a steady way, because this business is something that delivers enduring margins. In terms of the GLP-1 portfolio, again, a very synergistic portfolio to our insulins pipeline. We have a leadership position there, as you know, and we believe that this will complement it, developing our diversity profile in a portfolio which is very differentiated from us.
All right, away from the pharma results from the consumption space, Titan reported a 35% year-on-year rise in the consolidated net profit for the January to March quarter at 1,179 crore rupees as compared to 871 crore rupees in the corresponding period in the last year. Now, the company also saw a sharp surge in the revenues from operations, with top line nearly doubling to 26,920 crore rupees versus about 14,900 odd crore rupees on a year-on-year basis. Now driven, this was by strong demand for gold jewelry, remember, as well as coins. However, elevated costs weighed on their profitability during the quarter despite the robust revenue growth. And Titan, which owns, remember, the jewelry brand Tanishq and Carrot Lane, has also announced a final dividend of 15 rupees per share. Now let's take it straight across to an NDTV Profit exclusive. A cloud continues to hang over the proposed Dixon Technologies and Vivo joint venture with the government yet to grant its approval for this particular transaction. Sources tell NDTV Profit that the proposal remains under review even as Vivo continues to face scrutiny from the Enforcement Directorate under the PMLA probe. Let's take it across to my colleague Rishabh, who has all the details coming in on this developing story. Rishabh, what are your sources telling you on this?
Absolutely. What we're picking up from top government sources is the fact that there is some sort of an overhang over this proposed joint venture between Vivo and Dixon. This has been in the works since December 2024. Both of them entered a binding agreement for a joint venture roughly a year and a half back, and it has still not received a nod from the government. What we're picking up from the government is the fact that though there is no final call that has been taken, the proposal is with the Home Ministry right now, and they are expected to take a call on this very soon. What we're also picking up is, of course, the fact that there is the ED probe that is being undertaken on Vivo right now on allegation of money laundering charges, and these are, of course, big acquisitions. You have allegations made of roughly 62,000 crore worth of funds being illegally transferred to China to avoid taxation. So that's what is being probed at Vivo, and that's why this sort of an approval coming in from the government is taking so long. What we're picking up is that the Dixon is still quite hopeful of this proposal going through, and what we're picking up is that there's still some time that we'll see, and the Home Ministry is likely to take the final call on this particular issue.
All right, Rishabh, very important development there, but hold on. You have another important story that is on India's export-focused MSMEs. They could see a fresh credit boost under the proposed ECLGS 5.0 scheme. But there's a catch. Exporters are hoping for more competitive borrowing costs while the government expects more defaults. An industry body, FIO, says that wider participation may depend on interest rates staying in the 7.5% to 8% range, but the current proposal pegs rates at around 9% for the banks and as high as 13% for the NBFCs. In fact, Rishabh joins in with all the details. Rishabh, this is a great analysis. Give us the internals.
Absolutely. So what we're picking up is that the ECLGS 5.0, very recently approved by the cabinet, what we're seeing is that exporters are pegging the sort of credit uptake that might come as a result of this scheme at moderate to strong. So it's not an overwhelmingly positive sort of an outlook that these exporters have. What the overhang here is, of course, the sort of interest rate that the government and the banks are able to provide at this point in time. What exporters I spoke to, they said that it has to be over 1% lower than the current borrowing rate that they have. So that's the only scenario in which it becomes competitive. What we had from Ashwini Vaishnav was that it's at about 9% right now for banks. But what exporters prefer is in the range of 7.5% to 8%, because that is what is a percentage lower than what they are currently paying. So that's what exporters are telling us. What we're also seeing is that the government is accounting for slightly higher NPAs this time. What happened across ECLGS 1 to 4 is the fact that about 40,000 crores were put in. Roughly 3 to 4% of NPAs were seen as a result of the schemes, as a result of the loans that were lended out. But what we're seeing now is that roughly 6 to 7% is being accounted for at the 18,000 crores that the government has put against a credit flow of roughly 2.5 lakh crore rupees. So that's what we're picking up when it comes to the ECLGS 5.0.
All right, Rishabh, thank you so much for getting us all those important details. Moving on to another important story, Google Google is exploring investment opportunities across AI infrastructure, including the production of servers and drones, Union Minister Ashwini Vaishnav said today. Now, this announcement follows Google's groundbreaking of its $15 billion AI hub in Visakhapatnam, Andhra Pradesh in April this year. All right, in a major setback to Donald Trump, a U.S. court has ruled against his proposed 10% global tariffs, saying that the across-the-board duties were not justified under a 1970s trade law. In fact, the ruling also came in response to a plea that was filed by the small businesses, which argued that the tariffs would raise costs and also hurt their competitiveness. Now, the decision marks another legal hurdle for Trump's tariff strategy ahead of the U.S. presidential election campaign, although the administration is expected to appeal and has legal options there. All right, so that was an important global development, but there is a health scare that is looming globally. A deadly Hanta virus outbreak aboard a luxury cruise ship in the Atlantic has now triggered international concerns, with 2 Indian crew members amongst those still on board. Now, World Health Organization has confirmed 5 cases on the Dutch expedition vessel, with at least 3 deaths really confirmed so far because of this deadly virus. Now, the ship carrying nearly 150 passengers and crew from 28 countries is currently headed towards Spain's Canary Island, where further medical checks as well as containment measures are expected. The WHO says that the virus does not currently pose a broader pandemic threat. Listen in.
So far, 8 cases have been reported, including 3 deaths. 5 of the 8 cases have been confirmed as hantavirus, and the other 3 are suspected. Given the incubation period of the Andes virus, which can be up to 6 weeks, it's possible that more cases may be reported. While this is a serious incident, WHO assesses the public health risk as low.
All right, WHO warns of any panic because of Hanta virus. Please remember that and take care of yourself. With that, it's a wrap on Profit 360, but do keep it with NDTV Profit. Thank you so much.
You're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. 2 people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
How do you get a branding like Pen?
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome to all of you, and now is the time for KYC. This is the hottest show where I get you one of the best companies where you can analyze and is there any alpha or not. We try to decode that. But before decoding that, there are some hints. Give it a guess. The first hint, it's a Navi Mumbai based diagnostic company. Of course, the headquarters is in Navi Mumbai, especially the Turbe area. The second hint I would like to give you is recently the company came out with its numbers also, and I know a lot of diagnostic stocks are buzzing in trade. So nevertheless, strong Q4 numbers also coming in. Let me give you one more hint, try to guess it. From March lows, the stock is up 35%, and interestingly, there is an interesting angle to it. The FIs, DIs, they have increased their stake in the last 2 years as well. A lot of restructuring has also happened in the company. And I'd like to give you one more hint, try to guess it. They recently appointed Madhuri Dixit as the brand ambassador. Try to guess, and I'm going to give you the company's name. There are a handful of diagnostic companies, it must be getting easier for you to guess it. But if not, don't worry, I'm here. The company in focus is Thyrocare Technologies. They're pretty much interesting. There is a little bit of, you could say, there's a brand change also there. And the company itself looks a bit different from last time when we had a chat with the management. But there are a lot of questions to be asked. The first and foremost, earnings कैसा था? वो आगे क्या बढ़िया रहेगा? That's the big question to be asked, and that is why I'm going to ask the management the outlook for FY27 and the pharmacy integration. What are the processes and the timelines everybody is looking at? And overall, we'll be asking the growth targets for the franchisee business, how they are moving forward, and importantly the growth numbers for it. International expansion, एक ही लैब है इनके पास टांजानिया में, but ये क्या नया मार्केट खुलेगा? That's the big question to be asked. आगे बढ़ते हैं. Let's see what else is there. It's of course genomic, specialty diagnostics, and the key launch pipeline ahead. They are moving into newer businesses also, because at times we talk that the pathology and the lab business is definitely there. But there's a question at times investors ask, is it commoditized? So we'll try to see the specialty angle to it. Of course, the preventive and the lifestyle package, what's the momentum looking like? What are the products coming in? What are the new areas of this happening? And to decode everything, we'll have Rahul Guha. He's the MD and CEO of Thyrocare Technologies, where he'll answer our queries and also give us some hints on why the diagnostic stocks are back in business after almost 2 to 3 years of pain. But company समझते हैं क्या है? We know that it's a diagnostic company, but इसके अंदर क्या है? Is it just a diagnostic company? No, there is something more to it. Let's go and understand that. This is of course a Navi Mumbai based diagnostic company and has 40 labs in India and 1 lab in Tanzania. It's pretty much interesting to talk about. But किस तरह धंधा करती है कंपनी? एक होता है फ्रेंचाइजी देने का, दूसरा होता है आपका पार्टनरशिप्स के साथ. Of course, these are asset-light models which I'm talking about, and the D2C models, even though the revenue subscription or the revenue contribution, is on the lower side.